人聲 check one two。
OK 係咪？好，唔該晒，拜拜。
Are we ready for this? Are you ready for this? Hey, we're doing a little mic check. Welcome to everybody who came in early this morning. We're having a little breakfast session with Brian Armstrong coming up. I'm not officially on the stage. I'm not like I'm here. We're just doing a sound check, but I did want to say to all you keeners who came in, great. Hope you got your coffee. The yumta, ho, okay. Home ho, ho. Okay, so thanks for you guys for coming early. We'll be back theoretically in 15 minutes with Brian Armstrong. Woo! Hey.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
We're not writers, but we help you shape your financial story. We're not an airline, but our network connects global businesses across nearly 160 markets. We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities. We're not just any bank, we are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies will do whatever they want with our data? Why don't we change everything? The system doesn't need an update. It needs a rewrite.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Hey, good morning. We are back at Hong Kong FinTech Week. I'm Andrew Work, and I'd like to say good morning, Joe-san, to all my pungos out there. I hope you guys are doing well. I'd like to welcome you to a special, a little intimate pre-conference breakfast session with Brian Armstrong, the co-founder and CEO of Coinbase. Coinbase is an amazing firm. I would say, am I a fan? Absolutely. I'm a customer, so yeah, I guess I am. I just checked my account, looking good. Thank you, Bitcoin. It's a great day for that, but you know, they've really done so much to bring people into the world of digital assets, to make it easy for them. For many people, Coinbase has been their entry point, but Brian Armstrong has also been at the forefront of championing the industry, whether it's in the business world or in the regulatory world, where things have gotten very interesting. Now, we'll have the official opening of the conference a little bit later on today, but as I said, this is an intimate pre-breakfast session for people who are, you know, a little bit more on the inside. And we've got someone who knows a lot more about this than I do, who's going to be doing the interview with Brian Armstrong. He is Min Do, the co-chief operating officer at Animoca Brands from here in Hong Kong. So he's going to do the heavy lifting with Brian Armstrong while I have a coffee and croissant and enjoy the show, as will you. So let's hear an intimate breakfast welcome. Make a bit of noise to get Min Do up here, to get him charged up to interview Brian Armstrong. Come on, Min Do. Let's have you, boy. Here he comes. Here he comes. Yeah. All right, go get him.
Hey guys, thanks everyone for coming out so early. Brian, thank you for joining us. Really appreciate you making time. We wanted to have a chat about Web3 and the state of the industry in the US and also globally. And we're thrilled to have Brian here with us. So thank you again. Brian, we don't have that much time, so let's kick right into it. Let's start with the hard questions. Coinbase is an ongoing dispute with the SEC, the US securities regulator. Tell us why this happened, where it's at, and how it's going, and what you see going forward with that dispute.
Yeah, well, first of all, it's great to be here. Joe-san, everyone, hopefully it's a great start to the morning. And want to say a big thank you to Animoca as well for being so welcoming to Coinbase in the greater Bay Area. So thank you for that. So yeah, let's jump right into it. We are in a case right now with the SEC in a court case. And unfortunately, the US has been in a little bit of a strange position the last few years. I would call it an environment of regulation by enforcement. Normally, when we work with regulators all over the world, and that's something that we're very committed to, you know, we go ask them what the rules are, and we get clarity. There's a rulemaking process we go through in some cases. Whatever the situation ends up being, we're committed to following the rules. Unfortunately, in the US, we met with the SEC probably over 30 times last year and tried to get clarity from them, and we really never got any feedback from them on what we could be doing better. We described to them our business in detail during our S1 when we became a listed company, but we didn't hear any objections from at that point. They allowed us to become a public company, and then suddenly the tune changed and they decided to pursue this regulation by enforcement approach. So look, the good news is that the courts in the US have been very good at creating clarity here, even if the regulator is not, and we've seen a number of court cases resolved recently. Our case is still working through the courts, and we're committed to seeing that. We think we have a good chance of winning our case. But regardless of the outcome, it will be a success because we'll start to see some clarity from the courts about what the rules are. And then going beyond that, we need to get new legislation passed in the US that starts to clarify the roles of the different regulators, how crypto can be regulated. So we're pursuing a path of getting legislation passed as well. So anyway, it sounds a little bit dire if you look at the headlines in the US, but I think the US is going to get to the right outcome one way or another. And the good news is 83% of the G20 countries around the world are engaged in passing clear rules. And I have to give a big shout out to the Hong Kong Monetary Authority and the SFC for being one of those countries that is putting clear rules out there. And that's something that we look for when Coinbase expands around the world.
Thanks for that. Let's stick on the US for a moment, and we'll move over to the Asia region in a sec. But when you think about the US and the gap between the industry and the regulators, what do you think are the biggest issues? Let's go a little bit specific. What do you think are the biggest issues where there's a discrepancy in understanding?
Yeah, well, as a first principle, I think crypto legislation and regulation, it should seek to both preserve the innovation potential of the technology, but also protect consumers. And that's kind of the delicate balance that every regulator around the world is hopefully trying to strike. So I think if we look at the centralized pieces of crypto, you know, the custodians, the exchanges, a lot of what Coinbase does, for instance, and others, those can be regulated a lot like the traditional financial service businesses of the world. It's really kind of just best practices around, you know, make sure you're completing audits, make sure that there's no wash trading on the platform, make sure that there's reasonable KYC and AML programs in place. But when it comes to the decentralized pieces of crypto, like the protocols and self-custodial wallets, my perspective is those should not be regulated like financial service businesses. They should be regulated like software, because if you're not taking possession of customer funds, you're not a financial institution, at least by most definitions of the law around the world. So I think that's a very high-level approach that people can take to look at it. And there's some good examples of this out there where countries can take best practices from, you know, MiCA in Europe, the work that the Hong Kong Monetary Authority is doing in Hong Kong, for instance, all good examples that the countries around the world can pull from to create sensible regulation.
Great. And if we look forward in the U.S., obviously the U.S. remains, you know, the largest global market. It remains a really important market for crypto, even despite the regulators' challenges to the industry. If you look forward to 2024, we're obviously going to a presidential election year. Do you think that election will have a significant outcome on the direction of the industry in the U.S.?
I do, actually, yeah. I think that there are now 52 million Americans. About 1 in 5 Americans have used crypto. And it's becoming a big issue for voters, where they want to elect representatives that are going to ensure this technology is protected, that innovation is allowed to thrive. They're fed up with regulators that in the U.S., or I should say politicians in the U.S., that are ignorant of this technology and think that it's only being used for, you know, negative purposes. The data just doesn't back that up at all. And when we look at third-party firms like Chainalysis that run reports on this, you know, less than 1% of the activity in crypto is for illicit purposes. The US dollar cash is something like 4% illicit activity, right? And so crypto is actually quite a bit safer than things like the US dollar in terms of that. And of course, everything happening on these ledgers it's a totally transparent blockchain that anybody can go look at. And so there's many criminals around the world who have ignorantly thought that they could use crypto to get away with something and later found the authorities knocking on their door. So yeah, I think that's an important fact. You know, just going back to your prior question, one other thing I should have mentioned too is that I think the Hong Kong Monetary Authority and SFC have done a great job kind of getting the banks working together in the crypto space and really showing that the market is open for business. One thing that we're really hoping to see as well is that there will be a path for global firms to operate you know, their global pool of liquidity on these exchanges in the Hong Kong market. And you know, I think there's a desire at the moment to have localization of all exchanges and data and customer keys and funds, which I understand the desire for that, but I actually think it would be even more powerful to find a way to allow global firms which meet a high enough standard to plug the Hong Kong market into the global pools of liquidity so that it's not fragmented in each market.
And would you think that step specifically would make a market such as Hong Kong a higher priority for a company like Coinbase? And how do you think about the importance of each individual jurisdiction around the world? Like obviously, we saw that Coinbase is expanding in Singapore actively. Obviously, we know you guys are big in the UK. How do you think about the Middle East? How do you think about the importance of each of these jurisdictions as you grow the business around the world?
Yeah, well, that last point I just made is certainly one of the things that we're looking at to decide what the cost and benefit is to expand into each market. But you're correct. We have been focusing a lot on international expansion. Just in the last quarter, we've expanded into Canada and then Brazil and Singapore earlier this year. So we're making regular investments, and wherever we expand into, it's a major investment for us. We typically hire a local leader. We integrate local payment rails. There's local jobs that are created, and of course we get licensed by local regulators too. So these are all things that we look at in terms of countries that we would look to expand in around the world. And I think the steps that HKMA and SFC have done is certainly a great step in the right direction.
This is FinTech Week Hong Kong. It's not a crypto conference. So how do you think about the traditional financial institutions? And do you think that Web3 and crypto could continue to grow without them coming in a big way? How do you see their role?
Well, I think it's going to be very symbiotic. Crypto is not in competition with traditional finance. It needs to work with traditional finance. And my goal and hope is that we get 1 billion people around the world or more benefiting from this technology to update the financial system, this crypto technology. So we need every bank, every traditional financial services firm out there to someday integrate into this network. And also the majority of the money in the world, the fiat money in the world, is tied up in institutions. I think it's like 85% plus of the money in the world is tied up in institutions. So we need to integrate with the traditional financial system to allow the crypto economy to really flourish and for humanity to benefit from this technology.
And so if you were addressing the leaders of those institutions, right, the big banks of the world, the asset management firms of the world, and you wanted them to lean in on crypto, what would you advise them?
Well, I mean, first of all, I'll just say, actually, many of the large banks of the world and traditional financial system companies are already doing this, right? So many of them in the U.S., right, the largest banks, J.P. Morgan and traditional firms like Franklin Templeton and big, the largest asset manager, BlackRock, they're all active in crypto already. And I think the things that are most important for them to do even more in this space is, it's number one, having trusted counterparties that they can work with. So the more firms that we can show that are following the rules, working within rule of law, working with regulators is a big deal for them. And then, of course, the other one is just it's regulatory clarity. It's what we talked about at the beginning. So as we see more legislation passed in these G20 countries, as the US hopefully catches up, I think that'll be a big unlock. The third one is probably the adoption of crypto utility, I would say, beyond crypto as just a trading asset or a speculative asset. We're seeing, for instance, in the US, there's a lot of ETFs that have been applied for, and hopefully some of those will be approved soon. There's been about 10 of them, actually. I think Coinbase has been named as the custodian on all but one of those. And so if we start to get more ETF applications coming online, that's a big thing that traditional financial service firms can help with to get more pools of capital into crypto. But I guess the last thing I'll just say is, if we can get crypto to go beyond being this asset class and really drive the utility aspects of it, that's going to just make it obvious to everybody, politicians, big traditional financial service firms, regulators, that this is something that's here to stay. And that's started to already happen to some degree. We've seen people using crypto for stable coins, and payments have gotten really big in the last few years. DeFi and NFT both have tens of billions of dollars locked up in it. And there's a number of exciting things on the horizon, especially as these layer 2 solutions come online, which I can talk about in a minute if you want, around decentralized social, decentralized identity. There's a whole gaming aspect to this. So, crypto goes beyond just financial services, and that's really the potential of this technology. And so as we get further and further along, I think we'll see the buy-in from a larger segment of traditional financial service firms.
And do you see that, how do you think about the balance between, what traditional financial services companies usually do in real-world asset work and tokenization of real-world assets versus the flourishing of kind of the true Web3 DeFi kind of space? How do you look at that balance, and do you see Coinbase expanding into the real-world asset area anytime?
Well, we don't have anything currently in the tokenization of real-world assets, but that's definitely an area that I'm excited about. And when I talked with a lot of our partners in the traditional financial services space, that's something that they bring up a lot too. I do think if you look at a lot of the traditional asset classes out there around bonds and loans, you could imagine much more efficient markets where these sort of assets are traded, where the metadata of the terms of these bonds and loans or real estate, for instance, mortgages, the terms of those can be encoded in the blockchain in a transparent way to everybody. The risk of them can be priced in these markets. The pools of capital can be more global. Settlement can be real time. The fees and the efficiency of the whole thing could be dramatically improved. And so that's definitely an area that we're excited about as well, although we're not particularly helping that doing something there ourselves, but we're seeing many of our partners using Coinbase products starting to think about that kind of stuff.
Great, awesome. You mentioned layer 2s just now, and we're excited about that at Animoca Brands. We think that the L2s on Ethereum are really going to have an impact on the industry and the efficiency. Again, this is a FinTech Week crowd. It's not a crypto crowd. So you guys have been doing Coinbase's own L2. It's called Base. It's built on OP Stack. It's a really exciting innovation that you guys are driving. Can you tell this crowd about what that is and how you see the future of Base and its impact on the industry?
Yeah, sure. So I used that term earlier, layer 2, and for anybody who's not aware, in the crypto space, everything you've heard of today in crypto is running on what's called layer 1, which is like the original Bitcoin, Ethereum, Rails, things like that. And that's been great to get hundreds of millions of people into this ecosystem, but those Rails are a little bit slow and a little bit expensive. So for instance, the average transaction on Bitcoin or Ethereum, it might take anywhere from $1 to $20 US in fees, and it might take anywhere from a minute to an hour to confirm. And so it's actually kind of remarkable the amount of adoption that crypto has got, given how slow and expensive an average transaction is. Now, what's exciting is that for a number of years, the industry has been working on what's called layer 2, and as you might expect, it brings down the fees and it brings down the confirmation time. So everything is faster and cheaper. To give you a sense of how big of a deal this is, it's a little bit like when the internet moved from dial-up to broadband, right? The number of applications didn't grow linearly, it grew exponentially when the speed of the internet increased. And you can look at other examples historically, like around text messages. It used to be that about 25 billion text messages a day were sent, I think at the peak. It cost maybe 20 or 30 cents US to send a text message. But now with WhatsApp, there's 125 billion sent every day. And so, you can see an order of magnitude increase in the number of messages sent just by reducing the friction a little bit. So payments today still have too high friction. It's too slow. It's too expensive. It's too isolated to each country. So you can imagine if you had fast, cheap global payments, that settled in real time for like less than 1 cent or something like that, we'd probably see an explosion of not only just payments in the world happening in crypto, but we'd also see an explosion in different use cases being built on top of that. So anyway, Coinbase is very excited about this trend towards layer 2, and we actually built our own layer 2 solution on top of an open protocol called Optimism. Our layer 2 solution is called Base. It's only been live for a few months, but it's gotten a lot of traction. We had about 1 million wallets in the last month that have transacted on Base. When we launched it, we had a promotional period that we launched it, and we had about 10 million NFTs minted across 1 million different wallets. There's about 500 million or so of assets being utilized on Base today. So it's quickly emerged as the fastest growing layer 2. And just generally, we're very excited about layer 2 solutions and making them the default of every type of interaction in crypto so that everything becomes faster and cheaper. I think the average user doesn't even really need to know if they're using layer 1 or layer 2 in the same way that the average person using the internet doesn't really need to know about how fast their connection is or what IP addresses are, internet service providers are. For them, it just works. And that's what we need to do with crypto. It's kind of like we're in the early 2000s period of the internet, and some of this infrastructure is just now coming online.
We're really excited about the developments you guys have been done based at Animoca Brands, and I think the trend towards L2s is, as you said, going to be a paradigm changer for, I think, the industry as a whole. But Coinbase has always been about bringing kind of financial equality and financial freedom to the world. It's always been part of your mission, and you're going to build that on the crypto rails that we're developing. How do you see developing markets and frontier markets, like in crypto, obviously Turkey and Vietnam and places like that are pretty big markets. How do you see Coinbase's expansion into those areas in the world where we're really going to be able to drive that financial freedom for the world's population?
Yeah, well, I'm glad you brought that up because it's really important, to think about that. I mean, crypto obviously can update the financial system in many ways. It can do it in established markets like the financial centers of the world, like Hong Kong and London and New York, by making settlement faster and these markets more efficient and payments cheaper and all kinds of things. But the people in the world who need crypto the most, who have the least good infrastructure today, are often in emerging markets, as you pointed out. And there's some really great data that's actually come out on this. Chainalysis actually put out a report showing that kind of like per capita, not per, not the actual strictly the dollar amounts that are flowing through, because that's still coming from the most developed countries with the largest economies, as you can imagine. But in terms of like per capita usage, some of the places where crypto is really taking off are places like India, Nigeria, Vietnam, right? And so actually, I think 7 of the top 11 countries right now for global crypto adoption by that measure are in Asia. And so crypto is this really powerful tool to increase economic freedom. It means everybody in the world could have sound money, property rights, access to global trade. They could basically participate in the global economy in a fair way where their wealth can't be eroded or taken from them. So I think that's a really important tool for freedom and economic growth. So you asked what Coinbase is doing in this area. Well, so we have sort of a two-pronged approach. I mean, we call it go broad and go deep. So go broad, it means how do we get to the emerging markets of the world, especially those with some of the largest populations. And to do that, it's sometimes hard for us as a US company to operate in some of these emerging markets. The rules are less clear. We don't, sometimes it's more difficult, like the regulatory environment is unclear, things like that. So what we've done in the emerging markets is we've used a self-custodial wallet called Coinbase Wallet. And because we never take possession of customer funds, again, it's more like a software product that is allowing it to spread quickly around into those markets. So we use Coinbase Wallet for that, our self-custodial wallet, if you will. The go deep strategy is to take the largest economies of the world, the financial centers of the world, right? Like the UK, the US, Hong Kong, etc., Canada, Australia. And in each of those markets, we actually launch our centralized products, our centralized exchange, custodian, and that takes more effort. It takes, because those are financial service businesses, right? So we have to go get local licenses, local payment rails, work with local leaders that we hire, local teams that we hire in those markets, whereas our self-custodial software product can spread around the world much faster, just like WhatsApp or an application kind of like that. So that's how we're tackling it. And I have to say, from a purely revenue point of view, the go deep strategy in the big markets like of the world, the UK, the US, Hong Kong, those are better revenue opportunities. But from a mission point of view and from a kind of impact on the world point of view, the emerging markets with our go broad strategy and self-custodial wallets is sometimes even more exciting. So it's a balance of those two things.
Brian, we are at time, but thank you again for joining us. We're really excited to continue to see the growth of Web3 in Hong Kong. We want to see Coinbase here in Hong Kong at some point soon. So hopefully we'll see you in person at FinTech Week next year. Thank you again, and thank you for joining us this morning, everyone.
Thank you so much.
Thank you to Mindo, Brian Armstrong, fantastic. Sound money, access to free trade. That is the kind of stuff that warms my heart. Thank you to Mindo, Co-Chief Operating Officer from Animoca Brands. We are going to take a short break and be back with the official opening of the second day. You've got roughly 15 minutes. If you would like to buy me a coffee, feel free, and we will be ready for action back here on the main stage. 15 minutes, go. Back in these seats then. Thank you.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been cities' business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Hong Kong. And hello, world. Are you with me this morning? Come on, people. Let's hear it. Yeah. We are back for day 2 on the main stage, coming into the end of Hong Kong FinTech Week. I remember the old FinTech Weeks, and it just keeps getting bigger and better, and this is by far the best yet. The world has come to Hong Kong, and we are charting a course to the future. Now, we didn't think that today could possibly be as action-packed as yesterday, but I have seen into today's future, and it is going to be exactly that. We're going to make it happen right up here on stage. We've got the top-level bankers, the tech people, we've got the visionaries, the leaders that are coming right here to the center stage. And we're going to start today off in grand style by bringing here a man who is vital to the development of the policies that are going to make Hong Kong to continue to be a vital place to live, do business, and to thrive. He is the Acting Secretary for Commerce and Economic Development of the Hong Kong Special Administrative Region, Dr. Bernard Chan. Please, Dr. Chan.
Well, Jimmy, Clement, distinguished guests, ladies and gentlemen, good morning. My great pleasure to join you all today at the Hong Kong FinTech Week 2023. First of all, my warm welcome to all the participants, in particular those coming from afar. It's really exciting to see so many of you here in Hong Kong face to face. Well, our city is indeed back with a bang. In particular, we have seen some very nice growth in terms of the number of companies setting up their base here in our city. In the first 9 months of 2023, my Invest Hong Kong assists 300 mainland or overseas enterprises in establishing or expanding their operations here in Hong Kong. Of these 300 completed projects, FinTech and financial service sector top the list, together with the INT sector, involving 71 projects each. While this number suggests or shows that the significant contribution and importance of FinTech to our economy. The current term government attaches great importance to attracting enterprises and investment. Our chief executive just delivered his second policy address last week with the guiding principles of upholding one country, two systems, strengthening our economy, and improving people's livelihood. We will continue our endeavor to attract enterprises, in particular those that are important to our development. And FinTech, of course, is among industries of strategic importance to us. Well, let me share with you some of my Bureau's initiatives in the policy address that might be relevant to you all. In view of the growing significance of e-commerce in businesses worldwide, my Bureau will set up an interdepartmental e-commerce development task force to implement policies to help local SMEs, including FinTech companies, of course, in developing e-commerce in mainland. We will be hosting a number of Hong Kong shopping festivals on e-commerce platforms to promote Hong Kong brands. We will also launch e-commerce easy under the dedicated funds on branding, upgrading, and domestic sales, or what we call the BUD Bud Fund. Out of the 7 million funding ceiling of Bud Fund, enterprises may use $1 million to implement e-commerce projects. And in order to facilitate e-commerce delivery and custom clearance, we will also expedite the rollout of single e-lock scheme and trade single window. While these e-commerce initiatives that we're going to launch or we're going to do represent vast opportunities for FinTech sector. FinTech, of course, is the driving force of e-commerce. It gives online shoppers more options than ever to do online payments without or regardless of the location and the device used. These solutions provide e-commerce merchants smarter options to scale their business in a competitive landscape. While in the grand scheme of things, the National 14th Five-Year Plan clearly states our role as China's international INT hub. And over the past couple of years, we have been delivering different initiatives to fulfill that role. I truly believe that this is the beginning of a golden INT era for our city. and that will only fuel our rapid rise as a global fintech hub. Ladies and gentlemen, I have full confidence in the growing strength of our innovation and financial ecosystem. And with the rapid development of GBA as the engine of growth and our unique competitive advantages of enjoying strong support of the motherland and being connected to the world under one country, two system, Hong Kong certainly has a very bright future. And in order to facilitate you guys to capture or seize the opportunities ahead, my colleagues from Invest Hong Kong stand ready to assist. We will provide one-stop customized support service. Together, let's propel fintech developments to new heights. Last but not the least, I would like to thank my team from Invest Hong Kong, as well as all the organizers for putting together such a wonderful program. I wish the Hong Kong FinTech Week 2023 a great success, and everybody here good health and the best of business. Thank you so much.
Thank you very much, Dr. Chan, and keep on supporting Hong Kong where it counts. All right, thank you. Of course, the world of fintech embraces the world of insurtech, and I am proud to say that there are a number of companies in Hong Kong that have made it easier to get better, cheaper insurance faster, and insurance touches all of our lives. So this is really, really important. And we're bringing to the stage now someone who is responsible for making sure that they are keeping insurance operators honest, but also creating an environment where they can thrive and grow and innovate. So please now we welcome Clement Chung, the Chief Executive Officer of the Insurance Authority of Hong Kong. Clement, please. Go get him.
Hi, everybody. The clock is ticking. I didn't actually make an entry as thunderous as Eddie Yu. Believe me, I would love to, but I don't think we can afford it yet. Now, so our colleagues told me that I have to charm you with my looks. Now, judging from the string of the laughter, I don't think that will work very well. But anyway, I believe what I should do is to make you believe that I will speak better than I look. I think I can do that. So let's begin. First, last year, how many of you remember what the theme was last year? I bet not many, but last year's is pushing boundaries, reaping benefits. What did I talk about last year? I talked about open API, I talked about green and sustainable finance, I talk about something that some don't want to hear, which is cyber resilience. We talk about the CRAF, the assessment framework. So naturally, I need to give you an update so that there's some continuity. But at the same time, this year's theme is about FinTech redefined. So how do we redefine it? We were struggling a little bit about what we should be doing. And then, just to make things simple, our philosophy today is not to tell you what we want to tell, but we want to tell you what you want to hear. So, which is in fact not usually what I did in government. But anyway, so what we need to do is to bring some of the stuff that we see and do down, back to the community, back on the ground, so to speak. And then, in order to connect to you, try to figure out what is the business opportunities, because after all, people here are trying to make a contribution while making a living. So that's how we're going to structure the presentation. At least that's how we try. Now, on the first slide, we did this as a covering because all regulators have only one core mission, which is to narrow protection gap and to enhance financial inclusion. That's virtually runs through everybody, every supervisor's mandate. So how do we do that? In terms of protection gap, there is a wide variety of stuff. People in insurance will know every single risk has a gap. That's how we exist. But recently in Basel, when we have a group of global regulators, we have a debate. So in the end, I think I remember I said that in order to make sure that we filter the right kind of risk, why don't we have some criteria? And I suggest that we should do 2 criteria, which is universal and imminent. Now, universal means that it affects everybody. For example, if you take retirement protection gap, depending on demographics, depending on cultural consideration, and consider the government participation in the pension system, protection gap in terms of retirement planning might not affect everybody the same. But we realize that climate and cyber does affect everybody, and it's imminent. It has to be addressed. Of course, I myself feel that it's good because it's you and I. So it's a little bit of a gag, but it's a good gag. Now, so in the slides, we're going to tell you how this widening protection gap is going to affect and aggravated by GDP growth, and therefore creating a poor resilience and poor coverage, which I think the insurance industry can reap benefit from. So in terms of how the contribution by Hong Kong can be gauged, I believe that what we are here for is to produce innovative products and pragmatic risk management solutions. In order to support that, we will give you 2 particular areas. One is actually technological advancement, but being Hong Kong at this present stage, we're very focused on Web3, so we believe that Web3, in effect, it means decentralized computing, in fact, has a role to play. As you can see, we're going to address cross-sector, cross-boundary connections in terms of data and in terms of expertise, and those, I think, will be supported by Web3. And finally, we'll talk a little bit about how IOS, the insurance-linked securities, could actually thrive in Hong Kong as an instrument to address climate risk. Now, moving on to the next slide, I think you guys will love this slide, because this slide basically tells you threat and opportunities. On the right side, basically opportunities. I can't see the numbers, but I can remember it. It's actually 15 to 50. In the current year, the cyber insurance premium is around 15.6 billion. In about 7 years, in 2030, it's going to grow to over $52 billion. That's 7 years, and if you look at it, it's a compound growth rate of about 20%. So no matter what you look at it, this is a very impressive growth, and this market cannot be missed. On the left side, you have seen these figures before last year. Basically, it tells you the kind of damage and the focus of that damage. Basically, it's affecting Hong Kong. There's a growing concern about number of incidents. And look at the bottom right corner, a large share of that is being borne by the financial sector. But to add on one figure before I close this, in fact, I took a look at the internet. For the same year, globally, Swiss Re estimated that cybercrime damage $1 trillion. You are talking about $945 billion, $1 billion, in fact, in the global world. And the protection gap of that, if you remember the umbrella slide, 90%. So 90% of those losses are not covered. So you can imagine the kind of business opportunity that it can provide you. And to add on to that, Asia Pacific is actually the area where the biggest share of that growth is going to be found. On the next slide, I'm going to give you a little bit of the way we reacted. So the insurance industry is not actually ignorant to that fact. So we have actually been responding. 2 kinds of response. We are seeing coverage response. We are seeing the kind of service we provide in terms of coverage. We're seeing a shift from first-party damage coverage to third-party liability. I won't repeat some of these on there, but in terms of third-party liability, we're moving on to virtual assets, e-wallets. We are even covering, for some cases, public liability risk as well as litigation cost. Now, but that's basically still a post-event coverage. On the right side, you can see that some insurers are moving smartly into different things. They are now increasingly investing in their internal capacity to try to do threat monitoring, incident responses, stuff like that on the right side. Essentially, what they do is to shift from curative to preventive. They're shifting from retrospective to prospective, and the most importantly, they're switching a payer which is a client, into a partner. So this is something which I believe is important, and it is something which, again, spells tremendous business prospects. Now, this slide is the update. Last year, we talked about CREF, scale off quite a few people. We did tell them that we did tell you that we're going to do a survey and we're going to size up the situation and figure out what we do. The left slide will tell you that, in fact, that survey indicated that we're not that bad. 25% are high risk. Most of the people are in the middle tier. So, but those need to be assisted. We are moving on in 2024 into a review of the current guidelines. And in that context, we're going to do the 3 steps: assess risk, then we do the maturity assessment, measure the gap, and try to deliver help. On the right side, in terms of help, we're collaborating with the government, the Financial Services and Treasury Bureau to try to introduce new competency framework. We're also going to run a cyber-related workshop on Intel, on skills as to how we cope with potential crisis situation, and most importantly, cyber security measures. Now, for you, that 70% on the left and those workshops on the right needs support. And this is areas where some of you may wish to take a closer look at. So that update actually also connects with business. Now, I move on to this topic. I wrapped up cybersecurity. I'll now move on to climate. Now, in terms of climate, I think I need to move back to the former slide. In fact, the slides are slightly different. But anyway, climate risk is a global menace. I have to move on to the next slide. You can see this particular slide. This slide basically tells you the spread of major cat events in year 2022. All you can see is that it's all over the place. Everybody get a share. So remember what I said about you and I? This is you and I. Now, if you want me to refresh your memories, basically you have the Gabrielle cyclone in New Zealand. You have earthquake in Turkey, Syria. You have earthquake also in Morocco. You have bushfire, huge one in Canada and Hawaii. And you have rainstorm and flooding in northeast China. And for those who are more interested to close at home, I believe that most of you got pretty wet in one particular weekend in September when we had black rainstorm for 16 hours. So it affects everybody. Now, so when I say it affects everybody, how does it actually affect Asia in particular? If you look at it, at this slide, we tell you that Asia is on top in terms of GDP growth on the left. But Asia, if you look at the right side on the bottom right, Asia actually fared worse in terms of protection gap. Look at the orange part of the bar that you see on the right. So the purple line graphs show that we're doing well in growth. The right side, the orange bar, telling you we're pretty appalling in terms of protecting ourselves. In fact, the protection gap in Asia, depending on the mix of cat events on the individual year, could be as big as 90%. So this is where the insurance industry can do more. Next slide, I'm going to tell you about ASEAN. So it's even more granular. You look at this graph, what I'm trying to tell you is that the bar, the blue bar, basically is GDP per capita. The orange line is actually the insurance penetration, and the green line is GDP trend growth. So the message here is insurance penetration drops together with GDP per capita, which is logical because it reflects the level of development. But the trouble is GDP growth is on the reverse. So remember what I said, the faster you grow, the less developed you are, the bigger the gap is going to cause even more serious problems. Now, from then on, we move on to iOS. I talked to you about how we're going to cite the case of Hong Kong to try to help. Now, iOS is a kind of insurance-linked security, is a kind of capital instrument. Basically, it's using the capital market to provide additional reinsurance capability, basically sharing risk. Now, unfortunately, from the earlier slide, you can see the protection gap is greater in Asia. And protection gap actually is greatest in the Asian countries where the level of development is lowest. But yet, if you look at the global major iOS issuances, where do they come from? Developed country. Now, in fact, if you relate back to the previous slide, that's the reason why the protection gap in developed countries are less, because they actually utilize instruments like this a lot better than we do. So how could Hong Kong help? So we didn't actually do. On the next slide, I'm going to tell us that what we do is that the insurance industry can do a lot of things. I won't repeat some of the slides here because of the of time, but in terms of Hong Kong's capability, we believe that we have everything that makes us an iOS hub. On the right side, you see things which can't be replicated. On the left side, you have factors that you can actually manufacture. On the left side, you're talking about risk pool. Now, we don't have a large risk pool, but if you look at the GBA, it's Hong Kong times 8 times. If you look at mainland China, it's Hong Kong times 800 times. So we have a huge risk pool waiting for us to serve. And secondly, we have the, well, by far, I believe, the most active, vibrant, and deep capital market. These are factors that can't be replicated. On the left side, we're seeing things that we're already doing, like government support, financial infrastructure, but we're lacking on 3, namely talents, data, and modeling. Now, I highlight the last 2 because the last 2 has a connection with tech. Modeling needs computer power and finesse, and the data needs to be mined and analyzed. Now, this is something which we need to work on. It's a bit of a climate tech, green tech, but ultimately, remember, they have to go to capital market. And therefore, after all, there's going to be green finance tech, green tech plus FinTech. So this is something which, again, I wish you to bear in mind. And this is something which we're going to have a lot of development. We're going to source new sponsors. We're going to educate investors about the risks inherent in this region. We're going to enrich product structure. We're going to diversify in geographical region. We've got 4 issuance, basically focused on mainland, Japan, and Chile. We want more of that. Now, with that, I will update you on I have only 2 minutes, so I'll update you on what we have done. Last year, we promised we're going to do the Open API. We've done it. We've issued the Open API framework. We've set up with the Science Park a portal for you guys to upload use cases to share. For those who haven't shared and want to do so, please add to the party. Those who haven't actually been visiting this particular portal, do so, because this portal will enable you to source and potentially build up partnerships. Now, in terms of federated learning, we are in good progress. We are hoping to be able to publish a result within 2024. In case you don't know what federation learning is, I learned it through the internet in 5 minutes. Basically, it's decentralized iterative machine learning. So this is something we believe is going to bypass a lot of privacy concerns, bypass a lot of what we call gaps. And this kind of iterative learning is very powerful, and look forward to what we publish next year. And finally, we are pursuing aggressively on cross-boundary collaboration. Remember, cross-boundary doesn't mean physical boundary. We are talking about sectoral boundary. So we are collaboration very much with the banking sector. You can see that Open API actually also piggyback on what has been done by banks. We are now really, really active in pursuing the joint usage of the CDI, the commercial data interchange, which provides a lot more data in a much richer format for our insurers to exploit. And finally, we are now talking to one Hong Kong university with a view to setting up a GBA climate data portal. Now, this is something which transcends sector. We're talking about potential risk pool covering 11 cities. Now, I can't promise that it's going to be easy, but this is something which I believe will benefit everybody, because if you look at climate risk, as I said, it's a you and I. At the same time, larger pool of risk means better pricing and better predictability. So watch this space. We're going to continue with that. Final slide. I'm overrun slightly, but bear with me. Last year, we concluded with a Star Wars Lambra T4 passenger shuttle. We did that because I thought it's for peace, and secondly, we have 3 touch points. So that particular spacecraft just happened to have 3 touch points. But this year, I believe we are on the aggressive. We should do a bit more. So this is the X-Wing Starfighter, the ride of Luke Skywalker. So we've got 4 touch points. The touch points that you need to focus on, because the other 3 we said about last year. The last one, bottom left, cross-sector collaboration. This is what I talked about just before this slide. Watch this space. This is something which we believe is very powerful. And I will conclude with what this means. Last year, I said that for regulators, they're supposed not to be rebels. So we shouldn't be riding on a Star Wars rebel spacecraft. But then we believe that regulators should be rebellious at heart. We should not be settled for what we are doing. We should be adventurous. But at the same time, when we're adventurous, we need to be cautiously courageous. So we need to put up courage for change, but we can't change for change. We have to know why we change. And finally, with all these things that we do, we have to remember one thing, that ultimately what we need to do is to deliver care for the society. So we do good, we make you do business, and we continue on this journey of reform. And I hope to see you in the same shape, in much better energy next year. And I hope you do agree that I speak better than I look. Thank you very much.
Great job, Clement. Thank you very much. I bet you didn't expect the Chief Executive Officer of the insurance store to be dropping Star Wars references into his speech. Thank you so much, Clement. Great job. We are going to bring somebody now from an organization, the Bank of International Settlements. It is an organization composed of 63 central banks that are members of the organization that make it up, and it plays a vital role in the flow of money around the world. Now, because of that, they not only have to keep up, but they have to keep ahead of technological developments. And that, in large part, falls to the Bank of International Settlements Innovation Hub. And so now we welcome to the stage the head of the BIS Innovation Hub, Ms. Cecilia Kingsley. Cecilia, please. Ladies and gentlemen, take it away.
Thank you very much, Andrew. Good morning to you all. It's great to be back here at the Hong Kong FinTech Festival. This is my 2nd time. Always really exciting to be here in town and check out the latest in innovation. You are definitely on the forefront of this area. And especially when it comes to tokenization. So in my short remarks today, I'm going to focus a bit on that. But let me start in a completely different area. If you go back in history, the very first financial assets that mankind had were physical assets. Gold, silver coins, precious stones. And then human beings, we started to dematerialize these physical assets. So gold became cash, and first it was guaranteed by gold or silver or any other precious metal, and then this connection to metal was disconnected, and debt, they became bonds, and ownership was organized as deeds and shares. I'll come back to the reason for why I'm talking about this, but let me first tell you that in my office at the Bank for International Settlements, in Basel, in Switzerland, on my wall, I have a participating debenture. It's a security. It's issued from from Sweden, a conglomerate from 1928, so 95 years ago. And the interesting thing with this paper is that the holder, the owner of that paper, once controlled its ownership by holding on to this asset, holding on to this paper. And interestingly, 5 coupons were cut out and used. And I keep this in my office as a reminder of 2 things. One is that it's a reminder that ownership used to be physical. And the other thing with the only 5 cut out coupons is also a reminder that things can go very wrong. Because what happened in the case of the Kruger conglomerate was that it crashed in 1931, became the so-called Kruger crash, and it made that debenture practically worthless, and well, that's why after many years it ended up at my office. Many of us probably had our first meeting with financial assets in its physical form, perhaps tooth fairy money, pocket money from a parent, perhaps some notes from a grandparents on birthdays. I think it's also fair to say that we are the last generation that had that first introduction with financial assets in a physical form. Now, we have already probably entered into it, nothing that we own, or for that matter owe, sits on paper. It sits on accounts, it's databases, probably somewhere in a cloud. And most of us carry very little or no cash at all. Instead, we keep our money quickly available through our cards, our phones, and even in our watches nowadays. And don't get me wrong, I think this is a very exciting and promising future. But what I like to just remind everybody about is that as we're going from the tangible to the intangible when it comes to financial assets and liabilities, that the level of abstraction becomes just bigger and bigger in the relationship between us humans and our financial assets and liabilities. So for us who works in this industry, it becomes even more important that we are ensuring that what we do maintains the public trust in the financial system. This is key to everything we do. Now, with all these fantastic new technologies comes also new appetite for even better services. And you already know this, but it's clear that users increasingly expect financial services to be accessible 24/7, like any other digital service. Households and small businesses, like big companies and public sector, expect to be able to make cross-border services as easy as they can do domestic transactions. It could be for tourism or e-commerce or otherwise. And they have the same right as big multinationals and governments to expect faster and cheaper services. And we usually think about competition as innovation, as something that is very useful. But here things are getting exciting because we're talking about vital public goods, the protection of making sure that money works and the protecting of what we call the singleness of money, make sure that the version of money that each society uses and how we then transact with one another is done in a way that people can trust. The trust, again, is key. So for those of us who believe that the fiat money system is the best way to organize how money should be offered in our society, we need to stay ahead of the developments, and we need to be ready to update our structures and build the infrastructures that sort of provide the backbones for the private sector then to innovate and offer services to households and companies. So that brings me into tokenization. At the BIS, we believe that under the right condition, the next big paradigm shift could be in tokenization, combining with programmability through smart contracts and instant payments. And it's very interesting that the most recent Hong Kong dollar program phase 1 report showed the promises that programmability can unlock new types of transactions of businesses and consumers through adoptions of conditional settlements for retail transactions. For example, in cases where consumers are used to paying up front. And efficiency can also be gained, is the finding of this HKMA pilot, through instant settlements in Hong Kong dollars, not only for tokenized transactions, but also in the current business environment. So this is not only science fiction about tokenization, but it can actually improve things here with today's technology. I personally think that tokenization is a lot more promises than just a digital representation of money or assets or liabilities. It can bring several parts of the system together, integrating records of ownership of an asset normally found in traditional databases, for example, land or share registry, with the rules and the logic that can govern transfers of that assets. And by doing this, we can find that tokenization introduces two important capabilities. One, it enables contingent performance of actions, and two, it enables composability where multiple actions can be bundled together into one executable package. So let me give you some examples on this. In the BIS Innovation Hub Hong Kong Center, the project Genesis is making it kind of exploring that coupons and even carbon credits can be automatically delivered per a defined schedule. Another interesting finding in one other project, Dynamo, experimented with using stable coins or digital tokens for SME finance in supply chains. You know that this is an area which is, has been pained with frictions for a very long time and could be improved. And we demonstrated in Dynamo that the programmability and the transferability of such tokens, as well as smart contracts, could indeed incentivize institutional investors to provide funding for SMEs. I think that is a very nice idea, having the big institutional investors coming in and make SME funding a better place to be. So the question is, how can these assets then be settled instantly? Well, in this regard, there are different contenders, how to make instant settlement. I would point to CBDCs, tokenized deposits, and stable coins. And when it comes to CBDCs, as you know, central banks are exploring this in different ways, and the BIS is playing a role of a convener internationally, organizing a lot of the research and experimentation and the conclusions. And looking at the cross-border payment space, I'm very proud of the wholesale CBDC project Enbridge that is being led from, again, from my colleagues and my staff here at the Hong Kong Innovation Center. I think that is paving the way forward for multi-CBDC platforms in tackling some of the key pain points of cross-border payments. Here, in this project, we are exploring making it possible for instant settlement within seconds and direct bilateral cross-border connectivity among banks. And as detailed in the brochure that we published just a few days ago, it looks like this. We showcase how we could build, we're building a common platform for wholesale cross-border payments that is underpinned by custom-built DFT. And by enabling direct connectivity in central bank money on a blockchain, Enbridge, I think, holds the promise of faster, cheaper, and more accessible cross-border payments. I'd like to end this short, short speech to you by a little quote that I like. It's an English writer. He was a travel writer. His name was H.V. Morton, and he said, quote, "Don't let the train of enthusiasm run through the station so fast that people can't get on board. Don't let the train of enthusiasm run through the station so fast that people can't get on board," end quote. I think this is a quote that we at the BIS Innovation Hub is very aware of. We do the research, we do the innovation projects, we aim to set out the art of the possible for central banks, but also for legislators and for the society as a whole to participate in the global conversation on how we can make the global financial systems even better. Ultimately, it's up to jurisdictions, countries, or composition of countries to decide on what to take on, or going back to the poem, which tracks to lay and what stations to build. It's an exciting future out there. We at the BIS think that the path for making the financial systems even better, with a well-working version of money sitting at the core of our financial systems, is within reach, and we build this together with the private sector because it's all an ecosystem between what the central banks provide and what the commercial institutions are delivering to clients. Congratulate you all to chosen the right kind of business to work in. We have a number of exciting years ahead of us. And last but not least, feel free to follow us on the BIS.org and on LinkedIn. And we have a booth over there, so why don't you check in with my great team, and they will be happy to answer any questions that you might have. Thank you for listening.
Cecilia Skingsley, it is an exciting future, and I definitely, if she says come visit the booth, she means that we met backstage, super friendly, great opportunity to say hello and meet the people at BIS. As I move into the introduction for the next session, I will give you a little advance on. It is in Putonghua, Mandarin Chinese. So if you do not yet have one of the simultaneous interpretation sets, now is the time to make a move, grab a set, and come back in to get geared up for this next presentation. So once again, the following session will be in Putonghua. So if you do not understand Putonghua, you probably want to grab one of the simultaneous interpretation sets now. With that being said, conceptually, there are entrepreneurs that are developing technologies in green tech, and there are entrepreneurs who are developing technologies in the digital asset space and in the Web3 space. And rarely the two meet. But, there are those that are starting to bring the two together. There are opportunities for intersection, for interaction and collaboration, and there are even some visionary policymakers that are trying to encourage that and to make it happen. And so we are going to be exploring the intersection of green technologies and the Web3 world and digital assets. The sum can be greater, the whole can be greater than the sum of the parts. To have that discussion with us, we're going to be welcoming to the stage Mr. Joseph Chan, who is the Undersecretary for Financial Services and Treasury for the Hong Kong Special Administrative Region. I've known him for many years and seen him move up through the ranks, both of the political and as a assigned politician in Hong Kong. And as well, we are going to welcome Dr. Xiao Feng. He is the chairman of the Wanxiang Blockchain and Hashkey Group. They are going to be led in a discussion by Ms. Tracy Tang, who is the CMO at Follow In. And once again, here they come in resplendent Putonghua. Tracy Tang, bring your crew on board. Ladies and gentlemen, let's hear it for them. Thank you.
早上好，各位。非常感谢大家呢来参加我们2023 FinTech Week 科技金融周的活动。我是非常开心要做今天主持人，我是 Tracy， 来自 Follow In。那我们今天也非常开心邀请到我们2位非常重要的嘉宾，首先来自于我们香港财经事务和库务司副局长陈浩莲先生，以及我们的 Hashkey Group 的董事长肖峰博士。肖总，欢迎你们的到来。那我们就话不多说，我们直接开始我们第一个问题。其实第一个问题呢，我特别想从陈副局长开始，我们先聊一下香港在打造Green Tech 和 Web3 这方面，你认为我们的定位和优势有哪些？以及说您觉得香港在我们发展这样的赛道方面有哪些可以更好的借鉴的，从国际方面借鉴的经验？谢谢。
好，谢谢。就是如果说香港发展哪个绿色金融，还有金融科技或者是 Web3 的优势，我觉得第一个我想提的就是我们本身的规模的优势，因为香港本身已经是我们亚洲领先的国际金融中心嘛。如果看资本市场的话，我们会亚洲发行人安排发行国际债券，其实是第1名的。看风险管理的话，我们香港的保险密度也是亚洲第1名的。看资产管理的话，我们的跨境财富中心的规模也是亚洲第1名的。所以呢，很多国际的金融机构的亚太区总部，或者是它亚太区最大的业务也是放在香港。那么对于很多不同的企业要推动绿色金融还有那个 Web3 的发展的时候，它要跟传统的金融系统对接的时候呢，可以在香港落户。利用香港可以联系到庞大的投资者群、客户群，或者是哪个业务合作伙伴，所以我们这里呢有一个规模的优势。那么事实上呢，香港现在已经发展成为亚洲领先的绿色金融中心。如果看去年的话，在香港发行的律师和可持续债务的总额已经有805亿的美元，去年。比之前1年呢增加了超过4成。那么其中如果看香港安排发行的律师和可持续债券的金额的话，我们占了亚洲区大概35%的份额，也是排名第1。 那么在金融科技方面的发展的话，我们现在香港有大约1000家的金融科技企业，这个数目呢，在过去几年已经是翻了1倍。那么他们呢有不同的类别，有虚拟保险、虚拟资产、区块链、跨境的汇换、移动支付等等，所以看到呢只是发展的很快。那么当然呢，让业界去结合一个绿色金融和金融科技的发展的话，去把握一些共同发展的机遇，我们特区政府也推出一些不同的政策措施去推动。其中一个就是在我们2019年开始吧，特区政府已经在发我们政府的绿色债券。在这个政府绿色债券计划之下呢，我们到现在已经发行了接近221亿美元等值的政府绿色债券，为市场建立一个基准和丰富我们的绿色金融的生态圈。当中呢，我们今年的2月份呢，就发行了港币8亿港元的代币化的政府绿色债券，这个是全球首批政府代币化的绿色债券。那么呢，我们就是结合绿色金融跟那个金融科技。还有上个星期呢，我们的行政长官在宣布那个2023年施政报告当中呢，也宣布呢，我们继过去派驻上那个金融科技概念认证赛事的制作计划过去2年怎么成功的经验，我们下一年明年呢上半年我们将会推出特别为绿色金融科技而设的概念认证赛事制作计划，去推动开发科技的方案，为还没被商业化的绿色金融科技提供前期的资助，去拓宽我们绿色金融科技的生态圈，也打造香港成为绿色金融科技的枢纽的。
非常感谢陈副局长，觉得刚刚陈副局长也分享了香港不但是在从做绿色金融这个方面以及 Web3 方面我们在做的一些事情，同时呢也从政策的宏观层面也给大家简单分享了一下我们政策的一些措施。我觉得这些都是非常能影响到更多的人来港创业，或者是参与到我们这个未来新的篇章的叙事中来的。那么下一个我想问肖峰总，肖峰总在 Web3 行业大家都非常熟悉了。我知道您呢一直是非常从很早2013年应该我没理解错就参与到了这个行业中。那今年的2023年4月份的香港 FinTech Week 呢，我知道代表 HashKey Group 的您也发起了这个大湾区 DeepIn 联盟这个一个项目，这个一个联盟。那么在这个过程中呢，其实我就特别想聊，因为我知道港府在推进这个 DeepIn 方面也做了很多的努力。那我想肖峰总可以从这个您确实在深耕到这个项目上面，你们做一些投资呀，或者说项目的见解，结合一个项目来跟我们分析一下 DeepIn 这个赛道目前发展的一个情况
好，谢谢，
肖峰总，
谢谢。万象区块链加 HashKey Group， 我们大概在5年前开始就去孵化一些 blockchain 加 IoT 的这样一些创业项目。当然。在4年前，我们公布了一个叫可信数字底座白皮书，说可信数字底座就要给这些物联网设备加上区块链，让这些设备发生的数据直接登记在链上，因此这些数据是可信的、真实的和不可篡改的。那么在今年4月份的时候，我们在香港也是在会展中心，我们创意发起了一个大湾区的DeepIn联盟，这个去中心化的物理基础网络的这样一个联盟。这首先这个联盟首先结合了两地的非常大的优势，一个是香港刚才陈副局长讲到的技术金融相结合的这样一个优势，同时呢也结合了大湾区的智能设备制造，这是一个全球智能设备制造的一个基地。那智能设备的制造加上香港的金融政策加在一块，就成了这么一个联盟。在前天，我们在香港数码港正式落地了一个DeepIn，是去中心化物理基础设施的这样一个加速营，有20家DeepIn的创业项目正式落户在了数码港。我们觉得DeepIn可以解决物联网长期以来没有解决的问题，就是物联网很难形成一个巨大的平台，因为所有的设备都属于不同的组织、不同的公司或者不同的机构。第二，你要把这些设备全部陌生的设备全部联合起来，你是需要有一套 像 DLT 这样的分布式账本，才能够把这些陌生的设备能够可信的连在一块，让他们的数据也变得可信。同时呢，你需要有智能合约和 token economic 在这里边，让的机器和机器之间的合作也能够得到激励。这样的话才能够构成一个 IoT 的商业模式，或者说低频的这样一个商业模式。那这个在香港落地呢，是有它得天独厚的优势的。
那您有没有结合一个具体案例可以简单的分享一下？
好 ，OK。昨天Invest Hong Kong 正式的向市场推广了4个有关于 Web3 的应用项目。那其中很荣幸有一个就是我们孵化的，叫 Arcring。Arcring 就是一个在光伏发电的面板后面呢，装了一个区块链的通讯模组。这样，任何一个光伏面板发电的度数就会实时的登记在区块链上，让这个数据变得可信。那么在登记区块链之后呢，我们可以收集到每一个光伏发电面板的发电的度数，然后我们因此能够产生出来一个滤证。那么这个滤证当然对所有不管是屋顶发电还是说大型的光伏发电站，那么它就会多一份收入。这样一个 Arcring 这样一个项目，我们实际上已经非常成熟了。
就是这个跟实体结合的已经在跑通了，是吧？那好，那我下面一个问题就问到我们陈副局长了。那刚好呢，肖峰总讲到这个 DePIN 和实体经济的一个结合，那我刚好想问您，从这个港府的角度，那 Web3和实体经济更好的有哪些能赋能的？我们的新兴科技赋能我们实体产业，以及说想结合一下，我知道您今年10月份花了一些时间在欧洲拜访了一些 Web3 企业，也可以结合那些见闻跟大家简单分享一下您的所见所闻，谢谢。
好，谢谢。那么当然，其实 Web3呢是代表着互联网发展一个很重要的变革吧。它是用区块链很具有透明度、高效、去中介化，还有去平台化的特点，可以解决很多不少的金融、交易、商业运作以及我们生活上的难题，去降低成本，也可以提高效率。所以我们是应该好好的把握，还有去拥抱 Web3 可以带来的好处和机遇。那么其实香港，如果你看的话，我们很早以前已经开始把区块链应用到我们实体的经济方面。比方说在5年前吧，我们香港已经保险业界由政府的支持推动一个叫 MIDAS。Motor Insurance DLT Based Authentication System， 就是说利用区块链去支持那个汽车的保险怎么样去认证，去提高效率，还有降低风险。那么也是5年前吧，我们已经推出了那个 eTrade Connect 贸易联动，那个时候就是第一次用区块链去加快哪一个贸易融资方面的速度，提高效率。那么到现在来讲嘛，其实大家也知道，香港不论是虚拟资产STO NFT 等等，也发展得很快，也有不同的应用场景。那么当然，我们特区政府也要 lead by example， 我们也要去走出来，多一些应用给那个市场做参考。所以，比方说，其实去年的金融科技周，我们政府就发了自己的 NFT。那么去年年底嘛，我们就把那个虚拟资产结合到传统的金融上面，我们开始呢就可以把那个虚拟资产的期货的交易所买卖基金Virtual Asset Futures ETF 上市在香港交易所买卖。那么刚才提过呢，我们今年2月发的那个大笔化的政府绿色债券。那么我们现在呢也在跟我们金融管理局跟中国人民银行数字代币研究所呢，也在就用数字人民币做跨境的支付，在香港进行测试，也是我们第一阶段的测试已经完成，现在做第2阶段的测试，继续测试。所以你看到呢，我们真的希望在不同层面也推动哪个区块链或者是 Web3 有关的一些实际的应用。那么提到我在上个月去欧洲的一些感受嘛，很多欧洲的金融科技还有 Web3 的公司，他们说对香港也很感兴趣，来香港发展。那么他们觉得利用香港去打进亚洲跟那个内地市场，其中一个就是我们的制度优势。我们的制度就是基金是自由流动的，港币是自由兑换的。我们用普通法的制度， 还有我们有一个很简单还有低税率的税制。那么也是他们为什么对香港这么有兴趣？那么其中他们讲的一个最重要的是觉得呢，我们香港的监管的路径是很清楚的、很明确的。他们说，就营商的人来讲呢，最重要是一个很清晰的、很稳定的、可预期的一个监管的一个方向。所以呢，他觉得在香港，我们过去的做法也是不会有什么很大的 surprise， 很大的一个很突然的改变，是大家可以很安心稳妥的发展它的业务。那么比方说，只是香港，我们是其中环球其中一个比较早开始有发牌给虚拟银行、虚拟保险，还有虚拟交易平台。那么在监管方面呢，往后我们也会根据市场的最新发展，进一步完善我们监管的框架。为了提高市场的信息度呢，我们的证监会 SFC 昨天就那个代币化发出了有关中介机构从事代币化证券相关活动的通函，还有呢有发表的关于证监会认可投资产品代币化的通函，去减明了它的监管的期望。那么我们政府呢也打算扩大那个虚拟资产交易监管的范围，以涵盖在虚拟资产交易平台以外进行的交易买卖活动。那么在稳定币发行人的监管制度方面呢，我们财经事务及库务局和金管局呢也将会就实施该制度的立法建议呢联合发布咨询文件，去邀请业界和公众提供意见。还有最后呢，我想提的就是金融管理局也正在就有关银行提供虚拟资产托管服务的相关指引咨询银行界，让客户可以资产得到充分的保护。那么你可以看到呢，我们一方面就根据市场的发展去进一步去完善我们监管框架，在中间我们也会有充分的时间去跟业界咨询，令到业界呢很了解我们下一步的做法跟发展的。
非常感谢陈副局长。我觉得香港的发展也离不开整个，从全球来讲，我们来吸引更多的关注和注意力，来支撑香港更好的发展。那最后一个问题，但是不是，那个我们也快 running out of time 了。那肖峰总，我想问一下，您作为深入参与到香港本地建设的 Web3 的建设者，那我知道 HashKey Group 也。那 HashKey 请你拿到了 license， 然后你们也有了自己的交易所也上线了。那我想问一下，您自己作为就是亲自参与到这个行业洪流的人，你怎么看待香港未来在打造 Green Finance 和 Web3 Hub？ 你有哪些期待？个人来讲，从参与者角度。
确实，我过去1年时间，我大部分时间待在香港，非常深切地体会到了就香港的一国两制之下普通法它的非常精妙的地方。普通法呢，我对普通法的理解呢，3层。第一层当然是法无禁止即可为，法无授权不可为，但是这只是第一层次的意思。第二层次的意思，我理解是一个案例法，普通法是个案例法，所以呢，法律如果没有规定到的东西，或者是法律上面可能禁止你做的东西，如果你讲道理讲出来有充分的道理，其实也是可以被接纳的，可以作为案例再被接纳进去。但是如果仅这样理解普通话还是不够的。在我过去1年时间的体会当中，第3个呢是除了这2个之外，还有一个叫做普通法里面有一个自由裁量权，就是说如果你能证明你是出于诚意、出于善意、出于良好的意愿，并且你尽了自己的努力做完了你所有的事情，如果工作出现了失误，是可以被谅解理解的。所以这是一个非常好的，不管是 Web3、Green Tech， 还是 Blockchain， 还是说 DeFi 这些创新的项目，是在这样一个环境里头，你会得到一个非常好的一个包容性的这样一个环境。所以我对这 Green Tech 也好 ，Deepin 也好，我们有非常大的信心，在香港做出一个非常好的事情来。我们最近也在设计一个所谓Deepin的 APP Chain， 就把所有的Deepin大家都在一个应用链上，在一个 APP Chain上把Deepin这一类的应用放在一起。这也是我们和数码港正在讨论的事情。我相信利用香港的这样一些政策， 这么好的这样一个对创新的包容环境，我们可以做很多事情。
是，那我们今天也在这个短短的10几分钟的对话中呢，也非简单的去聊了一些，但是更多的深入的东西呢，其实大家也可以更多关注我们的港府的一些公布的官方信息，以及说我们 HashKey Group 也有很好的这个研究报告了，也跟大家关于 DeepIn 的这行业赛道也有很多的呈现。那也希望说今天的对话让大家更多的了解香港在这里呢，在 Web3 以及说 Green Tech、Green Finance 这方面，我们接下来以前在做一些事情，接下来我们对未来的一些小小的期待吧。希望大家能在这里多多关注我们的发展。再次感谢嘉宾的时间，谢谢大家。
谢谢。
我们今天圆桌到这里。
谢谢 Tracy， 你说的非常好 ，Good job, Joseph, Dr. South, thank you very much， 谢谢。Fantastic, ladies and gentlemen, we are going to be welcoming somebody to the stage now who has a super interesting job. This is a new organization within the Financial Secretary's Office of the HKSAR. And as I was trying to get my head around what exactly it is that they do, I said, are you like a hunter? Not really. Are you like a matchmaker? Not exactly. Very friendly. More like, and I thought it's more like a farmer who has beautiful crops that he puts out, but he needs bees to come and pollinate it. So he puts out the most amazing flowers for the bees to come. They pollinate the flowers and the crops. Everybody wins. This is my conception of the role of the Office of Attracting Strategic Enterprises to Hong Kong, also known as OASIS. It is headed by Mr. Philip Young, who is the Director General, and we'll see if his conception aligns with mine. Either way, I think he's going to have something very interesting to tell you about Hong Kong and how it is serving as a headquarters for FinTech and digital asset companies. So please, without any further ado, let's hear from Mr. Philip Young, the Director General of OASIS.
Distinguished guests, ladies and gentlemen, a very good morning to you all. It is my great pleasure to see you all at this flagship FinTech event in Hong Kong, which has come to its 8th edition. I hope you have been enjoying the informative presentations and the business matching opportunities during this FinTech Week and its satellite events. Let me begin by introducing my office, the Office for Attracting Strategic Enterprises, in short, OASIS. It was set up as part of the Financial Secretary's Office in December last year, with the important mission of bringing home high-profile, high-potential enterprises from around the world. FinTech is one of the 4 strategic industries that we have been focusing on, alongside AI, life and health technology, as well as advanced manufacturing and new energy technology. Since our inception, we have met over 200 strategic enterprises, about 30 of which have now landed or expanded their presence in Hong Kong. Among the companies that we have been in touch, a number of them are FinTech companies from subsectors such as payment and retail technology, cross-boundary remittance, wealth management technology, blockchain, and virtual asset trading platforms. With the continued evolution of FinTech, we are seeing much welcomed interfaces between these different subsectors. For example, AI companies tapping into the area of stablecoins, cross-boundary payment and remittance companies exploring the use of blockchain technology to streamline their operations, and stablecoin issuers potentially crossing over with virtual asset trading platforms. This is precisely what we want Hong Kong's FinTech industry to move towards. Under one country, two systems, Hong Kong has always been enjoying steadfast support from the central government. Under the National 49 five-year plan, Hong Kong is to carry on our critical role in the international financial arena. The Hong Kong government has always attached great attention to the development of FinTech in order to reinforce our hard-earned premier position in the international financial field. Technological advancement over the years have enabled financial institutions to provide more efficient, convenient, and safe services. At the same time, the booming FinTech ecosystem is enticing strategic companies from mainland and elsewhere to consider running their operations in Hong Kong, where they can launch their regional and international expansion. In our day-to-day interaction with mainland and overseas FinTech participants, we have learned about why they choose Hong Kong. Just to name a few of our enviable advantages: the huge economic potentials arising from the Greater Bay Area and proximity to the mainland market, the vibrant financial services industry, the deep capital pool in Hong Kong, a predictable and clear set of rules and regulations, as well as strong support from the Hong Kong government. According to the annual Asset and Wealth Management Activities Survey published by the Securities and Futures Commission in August 2023, the assets under management of the Hong Kong domiciled funds rebounded by 15% from the third quarter of 2022 to 1.3 trillion Hong Kong dollars at the end of June 2023. Net fund inflows of 69 billion Hong Kong dollars were recorded during the fourth quarter of 2022 and the first half of this year. The Hong Kong government has been working hard to ensure our sound regulatory environment remains in place to enable the FinTech industry to prosper. We have also spared no effort in creating a conducive business setting for FinTech companies. Funding and resources have also been allocated by the Hong Kong government to stimulate the growth of the FinTech ecosystem. In the budget of 2023, the Financial Secretary allocated 50 million Hong Kong dollars to expedite the development of the Web3 ecosystem. As the Web3 hub of Hong Kong, Cyberport has gathered over 170 relevant enterprises with activities covering NFTs, metaverse, digital asset trading platforms, and more. A lot of the Web3 companies are leveraging this platform to start their business in Hong Kong and to build industry connections. Alongside Oasis establishment, the Financial Secretary has set aside 30 billion Hong Kong dollars for a co-investment fund so that we may invest in overseas companies that excel in innovation and technology, bring superior technology to Hong Kong, and help our economic growth. Many strategic enterprises are interested in having co-investment from the Hong Kong government. We are exploring this with a number of enterprises, FinTech ones included. This co-investment fund represents our new, much more proactive approach in attracting more enterprises to Hong Kong. Besides, we have a wide range of funding schemes providing financial incentive for incoming enterprises. Hong Kong has never been complacent about what we have achieved. In the policy address announced last week, efforts were put on areas areas indispensable to accelerating the growth of the fintech system in Hong Kong. For example, foreign staff of companies registered in Hong Kong may now apply for multi-entry visas, valid for 2 or more years, to the mainland. Further facilitation measures will be provided for incoming talents. Cyberport will establish an AI supercomputing center in phases from next year onwards to promote industry development. The government has also been working with the mainland to promote cross-boundary data flow. The Hong Kong government is firmly committed to foster the fintech sector. Oasis stands ready to work with strategic enterprises from around the world like you and help you to navigate the Hong Kong market. We provide one-stop and tailor-made measures to those who are interested in coming here. We are your close partner. In closing, I wish you all a rewarding FinTech week and look forward to opportunities for further collaboration with you. Thank you very much.
Thank you very much, Mr. Young. All right, we have a big transformation coming up on this stage because we are talking about a transformation that is happening in the banking world. Bankers are not just thinking about sustainability in terms of where they place investments, not just in terms of who they make loans to, because they are doing that too, but also in terms of how they run their own operations, and technology is a big part of that. So we've got a big panel to come and discuss that today from many of the banking heavyweights from this part of the world. They are going to be led in their discussion by Christine Lowe. Christine Lowe is currently the Chief Sustainability Strategist within the Institute of Environment at Hong Kong University of Science and Technology. She is going to be joined by Dr. Chu Kang. He is the Managing Director for the Sustainability Strategy with the Bank of China, Hong Kong. We also are going to welcome John Merton. John Merton is the Sustainability Advisor to Standard Chartered. He's going to be joined by another John, that is Jonathan Drew. Jonathan Drew is also responsible for sustainability, where he is the head of the Global Banking Sustainability Division within HSBC. And then we are welcoming also, to round out the panel, is Yolanda Chung. She is the Managing Director and Head of Global Sustainability for Institutional Banking within DBS Singapore. That is a heck of a panel. So let's make some noise and hear it for them. Christine Lowe, bring them forth, please.
Let's get right to the topic today. I have 4 bankers with me, and I think one of the subjects about sustainability and banking and fintech is, in the era of sustainability and climate change, we are all challenged by new things that we have to do, dealing with data, talent, and whatever it is. So if I can start by asking each one of you to tell us, how are you really facing the sustainability, fintech, data, all these things that you now have to organize? Yolanda, can I start with you?
Certainly. Well, when it comes to sustainability, it's such a broad agenda, but now we have all zeroed in on net zero. We all want to become net zero banks or asset managers and insurance companies. And what it means is that for all the banks here which have committed to become net zero by a certain time date, we actually have to rely on our clients to become net zero. And there are 2 aspects to it. One, we have to do a lot of the climate stress test. So we know by greening your portfolio, it doesn't necessarily make your portfolio less risky. So risk management is one big aspect in doing the climate stress test. And then the other dimension of net zero is really trying to do the right thing, because we believe this next wave of industrial revolution is going to be a $1 trillion business opportunity for all the financial institutions involved. And in greening our portfolio, in helping our clients transition, we know that actually it may make our portfolio riskier, So the two aspects really have to go hand in hand, and it's one of the biggest challenges, balancing acts that we have to handle.
Thank you. Kang.
Thank you. For Bank of China Hong Kong, we consider the green and fintech is sort of well connected to parts of the world. So first of all, we use fintech to develop lay a foundation and the infrastructure of our ESG development. We're focusing on data collection and management. This is the, I think, most critical part of this kind of infrastructure. Secondly, we try to use fintech to innovate our product and services. For example, tokenized products. Secondly, I think we also trying very hard to extend our service to a larger society. Without fintech, we would not able to serve sort of underprivileged customer or groups or business in Hong Kong. But now help with fintech can help, so fintech makes it happen. The last but not least is we use low carbon technology to lower our own emission, own operation emission. So we announced the carbon neutrality of our own operation by 2030. So we are working on this kind of a goal with the help of fintech. Thank you.
Yeah. Jonathan?
Christine, thank you. So I think, look, at HSBC, the ultimate objective here is really to embed sustainability considerations into all of our product offering to our customers and all of our decision making as well. And the why of that, if I can take a moment on that, is really because we believe that that will result in the best outcomes for our broad range of stakeholders, from shareholder to customer to employee to the people in the communities that we serve. So we think doing that's very, very important. Obviously, how we do it, we need products. We have the right products. FinTech plays a big role. FinTech, in its role, is really creating or incremental accessibility to whether it's a savings or an investment product, and also reducing the cost of delivering those, which is obviously to the benefit of all. And then, of course, in assessing how we make our decisions, to your opening comments, data hugely important. We need data, we need information, we need that from clients. Huge demands we recognize on our clients to meet different standards, comply to different principles and so forth. So effectively securing that, obtaining that data, analyzing that data, and then using that data. And there, of course, we are now increasingly, particularly in those first two steps, starting to use AI in that process.
Thank you. John.
Thanks, Christine. So I think we face two main challenges in Standard Chartered. One is, as Yolanda said, we've taken on a net zero 2050 target, but many of our markets are net zero 2060, net zero 2070, and it's much more difficult to find the data about emissions in those markets, and dealing with clients in those markets. We need to sort of work with others and with our client to find out about the emissions data that they have and understand their emissions profile, which leads me on to the second problem we face, which is pathways. It's all very well to know the emissions sort of profile of your client, but if you want to walk with them and take them with you on this transition to net zero 2050, you have to understand a credible pathway for a client, particularly in a hard to abate sector like steel or cement or so on. So one of the things we're doing at Standard Chartered is bringing lots of industry experts from the hydrogen economy, from the steel sector, from the cement sector, from government, bringing together a host of people alongside bankers so that we can work out the correct sort of pathways for our clients and help them on their journey to net zero.
Well, each one of you have shared with us how you're doing and what you're trying to do, the net zero driver. But perhaps I can ask each one of you to go into a little bit more depth, because you're trying to solve problems. But maybe, John, I can come back to you, because you talked about the need of actually bringing lots of people in different disciplines together, because precisely this is not something we actually know how to do. So can you maybe give us a couple of examples? And then I'll ask the others, maybe you can all give us some examples. But John, let's go to you first.
So confession from me, first of all, I'm new to a bank. I've come out of a 25-year career in government where I worked on sustainability, and my hiring and the hiring of other experts in our team, biodiversity experts, experts on hydrogen, experts on sort of low carbon cement and so on, reflects the fact that we need to work closely across the bank in order to map out pathways for our clients. And we're doing that for extant sectors, but we're also building teams to look over the horizon and see what are the challenges that we're going to face in a few years' time, because there are certain challenges that are reasonably well documented now. You know, what's the impact of climate change upon our clients? But there are certain challenges that are harder to understand, and we need to work more on to understand for the future. So biodiversity is a key issue. You can solve for the effects of climate change in a number of different ways with quite different biodiversity outcomes. So you can build a dike as an adaptation measure to protect a city or a settlement from rising sea levels, or you can rehabilitate a salt marsh or a mangrove swamp and have quite a similar climate impact, but quite a different biodiversity impact. So we're building out teams looking at biodiversity, looking at adaptation, looking at voluntary carbon markets, and looking at blended finance, so that we can cover off some of these issues. And the blended finance piece is really important because in Western Europe, in North America, and largely in mainland China, there's a lot of finance going into climate solutions and lowering emissions. But all the data is quite clear that in many emerging markets outside of China, there's a huge gap between the amount of money that's going into low carbon and the amount of money that's required in order to meet our climate goals. And blended finance might be one of the solutions that we can use to accelerate the flow of private capital into some of these markets.
Right. Yolanda, how are you solving these problems?
Well, capacity building, hiring the right people across disciplines is definitely something that DBS is also doing. Well, we're speaking at the FinTech Festival, and I think the FinTech element to it is also very important and is going to be an enabler, a positive enabler. In the sense that, for example, when it comes to financing fossil fuel industries, it used to be the case that many of the banks present here, we have financed a lot of coal-fired power plant projects in emerging economies. And now we're working to refinance them to try to retire them earlier. Now, the data that we need from that is utilization, how much capacity, not just the boilerplate capacity, but how much generation those plants are actually doing, making electricity to the grid. And there are now a lot of technology solutions that we've adopted just by analyzing the size of the plum coming out of the coal stacks. We are able to tell the pollution, we are able to tell the generation. So that sort of almost real-time data will allow us to determine, okay, the pathway that John mentioned, is it going to be on a pathway that we can consider credible? Because another thing that we're all very worried about is greenwashing accusations. If we are going to do transition finance, how do we make the real economy transition? We want to make sure that we are not allowing industries to do a cop-out, that you're not quite green and we do transition. So data will be a very important element of it, and tech solutions will be the enabler for us to get the data.
Right. At Bank of China, Kang.
Yeah, I absolutely agree with my two peers. Transition is also Bank of China's focus as well in this kind of, because for a bank like with 100 years history, we've got this kind of so-called bronze sector clients. They are, still has a large carbon emission at the moment, and I think the reduction from their part will contribute even more to green activities for the world. So we've been their friends for a very long time, and so we cannot leave them behind. So that's why we try to help them to set up a transition plan and try to monitor this kind of plan. What's the KPI, what's the performance of this plan? So FinTech play a very critical role. We just have a piloting IT system, which is automatic approval system. There are 4 key functions of this system. First of all, it collects data from customers, clients directly, and will analyze this kind of data with big data tools. And secondly, generate a due diligence report based on their performance in terms of their efforts and results. And thirdly, there will be a sort of benchmarking their performance against their peers and market practice, and then we'll have a score. So this is kind of like a system enabled by the FinTech, which has been piloting in BOC Group. So we expect it will help us to do more transition finance to our so-called bronze sector clients. This is the second I want to share is about the mindset, because as a traditional bank, you know, to have more transition of green financial product and services, it's not something we have a new IT system or add a few more products. It's something we need to change or rethink or renew our business model from risk management to clients' engagement to corporate culture, everything. So this is something even bigger challenge for us. I think FinTech will have a very positive way, in fact, for us to do so. Thank you.
No, that's a really interesting point, because Kang, what you're really saying is to do all this, the culture of a traditional bank itself has to change. At HSBC, how are you experiencing all this?
Well, Christine, you asked about solutions, how are we solving this? I think the first thing we have to acknowledge is we've not solved an awful lot yet. And what we don't know is an infinite multiple of what we do know, and the solutions ahead of us are a vast multiple of what we've already achieved. But I think if we think about a financial institution, and sort of one like ours, where our fundamental role is as an intermediary between the sort of the capital providers and those who need capital, a fundamental offering has to be to understand, when we're supporting our clients on the sell side, what the buy side perspective is, and bring that to the sell side. And the buy side, of course, is increasingly focused on sustainability issues, climate plans, and so effecting and communicating, using that information to help our clients get best access to capital markets is a critical part of it. And then another area, of course, is thinking about, we need risk appetite here. We need to create some pockets of new pockets of risk appetite, because they're new technologies which are going to be needed to be adopted at scale. So, for example, you'd have seen HSBC acquire earlier this year Silicon Valley Bank. That's led to the establishment of HSBC Innovation, very much targeted on bringing capital to sort of Series A and beyond entities who are bringing innovation in the tech space, and a lot of that will be sustainability related, whether it's engineering tech, info tech, or environmental tech itself, the vast need for sensors, which will create some of that important data that others have talked about. So that's a sort of another area, I think, it's the information, it's the risk appetite. And then I think the final area I would just mention, because I think this is really important, and there's some great colleagues I see in the audience there, in how an individual bank needs to go beyond just what it's doing itself, and can actually use its influence in the wider space within which it operates, collaborating with other banks. And I think that's why industry associations can also be so effective, and why we put a lot of time into those as well.
Right. John, let me come back to you, because you were the one who started to talk about hiring new people in the banks, people that banks didn't used to hire, like ecologists and so on. But you also mentioned that you have to reach out and work with others. And Jonathan, you talked about that. And Kang, you talked about the transformation of a culture, and what does that really mean, right? So perhaps, John, you can share with us, what are you having to do with other stakeholders, your regulators? What do you want your regulators to understand, to do more or less of?
Thank you. Well, as Jonathan just picked up on, banks need to work together in aspects of tackling climate change, because we've got to solve at a system level, not just for individual banks. Individual banks could just divest, but that won't solve the problem at a system level. And we've really welcomed something that's just been announced by the CMA in the UK, the Competition and Markets Authority, that has basically made clear that when banks or other financial institutions work together under umbrellas like the Glasgow Financial Alliance for Net Zero, GFANZ, to resolve climate issues and set parameters, that's acceptable and it's not anti-competitive. And we're seeing that working out really clearly in areas like the just energy transition, where we're working with DBS and HSBC and others in terms of setting some of the parameters for difficult issues like coal phase out, and then competing heartily to win the contracts for the financing for that. So that's working well. I think there are sort of three areas I'd touch on. One is the impact of climate change upon businesses is increasingly well understood, and that's helping banks. So you see TCFD is obligatory. TCFD disclosures are obligatory in the UK now for all listed companies, and that's really helpful, and it's helping us all to understand the impact of climate change upon the businesses that we bank. I think there's more work probably needed on helping banks and encouraging banks to shift their finance from brown activities to green activities. There's some good work going on, and you've seen helpful changes like 501A under the EU system that gives us capital relief when we lend to green projects, and that's really helpful. There probably needs to be more of that, and we also need more data understanding on things like supply chains, because when you have a company that's got a complex supply chain that you're banking, it's quite easy for them to understand their carbon content, but it becomes difficult to trace the carbon content down the supply chain, so more help on that. And then I think the one area where there's more work that needs to be done is probably in helping or setting incentives to help us understand the effect of the transition to the low carbon economy upon our clients. Because all the evidence is that when the move to low carbon technology becomes economic, it happens very quickly, much more quickly than we anticipated. 12 years ago, Tesla hadn't made a car. Now they're the world's most valuable automotive manufacturer. And we need to understand what the impacts of those transitions means for businesses that are left on the wrong side of that technological change.
Right. Yolanda.
I think when it comes to understanding who are the other critical players in addressing some of the biggest challenges that we face, academia also plays a big role, because for many of us working in finance, the key word these days is science. So we want to be science-based, and the science that is done and having got the research that is peer-reviewed, done in universities, translated into banking products and services, and how we evaluate the different projects that we want to finance will be critical. So I think academia has a role to play. In fact, I would say that in how finance people adopting some of the scientific terms, you can see where the trend is going. We talk about taxonomy. It used to be the case that we use taxonomy to map our species, but now taxonomy, we are talking about the classification of economic activities. We talk about ecosystem. It used to apply in biodiversity. Now is in the finance world, we're talking about ecosystem of different players, regulators, investors, banks coming together. So I think academia, there is a definite role to play. Regulators, we do see that they can step up more in drawing up what is considered the minimum standards that you need to play in. Taxonomy is one good example. What constitutes green? What constitutes amber, which is the transition credentials of any economic activities? What is really red? And I think if we have a common taxonomy that is really interoperable, then the financiers would be able to adhere to that and would be able to say, yes, this project is green and it's credibly green.
Right. Well, Kang, you have the last word because we only have a minute left.
Okay, thank you. I think touch upon the regulation. I think we may have some kind of regulation on FinTech as well. For example, AI. We can use AI freely right now for anything like transaction finance, taxonomy, or standard. But I think we need to set a boundary for how we use AI in every respect of transaction finance. And last thing I want to touch upon is about Hong Kong, because we are in Hong Kong FinTech Week. So I think Hong Kong can play a very critical role in fintech and green finance, because I think fintech is by nature friendly to cross-border financial activities, which Hong Kong as a super connector connect mainland China and the rest of the world. So we see great demand in terms of investment opportunity in Great Bay Area for transition, for green activities, and we see great demand from global capital want to invest in this kind of opportunity. So Hong Kong can play a very critical and a proactive role. Thank you.
Right, maybe I can just round up by saying that obviously banks are having to change their culture to be able to blend in different disciplines of knowledge to meet the climate and sustainability challenge. Many people have to learn new tricks, and there's a lot of work to do, but a lot of opportunities amongst new risks. So please join me in thanking the panel.
All right, Christine Lowe, big job. You are the master of this. Thank you so much. And thank you very much to our sustainability panel. Wonderful. Okay, we are completely shifting gears right now, and we are going to be talking about cross-chain interoperability. What? Tokens, digital assets. Right now they exist on this chain, and they're great, and they're on that chain, and they're also great. But unless digital assets can move from one platform to the other, digital asset markets will not be liquid. The growth will remain stunted, and so this is a problem that needs to be solved. The good news is that people are working on it. We are going to be bringing to you now, live by video, Sergey Nazarov, who is the founder of Chainlink. I know a lot of people that are from the Web3 world, the crypto world, they have come just to see him speak because he is one of the rock stars of this world. This interview has been made possible by King Lug, who is the head of FinTech and Financial Services at Invest Hong Kong. He went all the way to Barcelona. He met him at the Chainlink event, and he's like, you know, Sergey, you have to come and speak at Hong Kong FinTech Week. So he's going to make it happen, and he's going to come right here on stage and command this interview. So, King Lung, bring it on. Yeah, let's hear it.
Hello, everyone. So welcome back. It's not easy. We got 4 nights of parties. I'm so proud of you that you can get up this morning. Now, first of all, I just want to tell you, I'm just so excited. I've been looking forward to this day to have a chat with Sergey in front of the Hong Kong audience. So again, Sergey, thanks a lot for making it. We appreciate it. Now, in fact,
my pleasure to be here.
Yeah, you've been such a great host. You've been such a great host for us in Barcelona. So I just want to make sure that all the great messages that you have shared with the audience in Europe and I guess a lot of international guests can be heard by our Hong Kong audience. This is really transformative. Now, perhaps without further ado, I just want to start off with this very exciting initiative of yours, the CCIP, the Cross-Chain Interoperability Protocol. This is supposed to break down the digital islands, which is a huge problem in the blockchain space. So can you help the audience what that is, and also why are so many banks and major players are getting so excited?
Sure. So there's 3 fundamental problems when it comes to blockchain connectivity. The first problem that CCIP solves is the ability to connect existing bank systems to multiple blockchains with one integration, using existing standards like Swift messages to communicate with blockchains in an efficient way from existing infrastructure. So the problem that banks have historically had is that they have a big investment in infrastructure, and they don't have an ability to get rid of that infrastructure. And so the history of bank infrastructure is kind of wrapping more and more layers on top of existing systems. And this is the same thing that will happen for the blockchain industry. It'll be the wrapping of another layer, basically a reliable interface for banks to interact with thousands of blockchains through one integration. The benefit this has for banks is getting them onto chains. And then the benefit it has to the capital markets and the Web3 world is that there will be more banks and asset managers on chains. The second part of the problem is cross-chain connectivity. So once banks are connected to chains or once banks are on their own chain, if they issue assets, and even if they don't issue assets, they will want to access other people's assets, or they will want people to come to their chain to purchase the assets that they created. And this will necessitate connectivity between those various chains. What CCIP does here, in addition to solving the first problem as a kind of an enterprise-grade abstraction layer, what it does for the second problem is it acts as a TCP/IP-like protocol. So TCP/IP is what connected all the different early internet technologies, networking technologies, data transfer technologies, local area network things into the single internet. So the single internet that we're all on is formed by TCP/IP as a standard to connect various technologies into a single internet. That's what CCIP does for all the different blockchain technologies, such that a bank A can use one chain, bank B a third chain, custodian C a fourth chain, and whatever other chain. And then the final problem is actually the ability to use smart contracts programmatically in other places by triggering transactions where you already are. And for this, CCIP has something called programmable token transfers, where you can actually send the value together with the instructions. And this can basically make everything work on T+0 or atomic settlement speeds, because the value arrives with instructions that execute the transaction on behalf of the value and can even return the result of the transaction back to the chain from which the value originated, which is really leveraging the programmatic advanced automation capabilities of blockchains and smart contracts. So that's at a high level, three of the main problems that CCIP solves for the capital markets. And the goal of it is to connect all the chains into a kind of global internet of contracts with those features. But I'm also very interested to hear how you see interoperability and it fitting into the Hong Kong digital asset strategy, King.
Well, I'm glad you asked this question too. Now, obviously, this is so exciting that it got us to go to Barcelona in the first place, to meet you in person. Now, the reason why we are so excited to learn more about this and how we can apply this to Hong Kong is that, again, the Hong Kong IFC status has been built over decades. But one of the building blocks of that is about the free flow of capital, right? That makes Hong Kong such an attractive place for investors. So in a way, I mean, it's not hard to envision that in the future where the underlying infrastructure is about blockchain, then I think we cannot afford to have digital islands where this is in a way impeding the liquidity. So that's why for us, just intellectually, it's so important to have some kind of infrastructure that help us to bridge all the blockchains to basically maximize the amount of liquidity of whether that be security tokens, the RWAs, whatever that is. So we need maximum liquidity. So this is why we feel that what you're doing is actually contributing a lot to the entire industry. Now, so perhaps I guess I want to ask you so many questions. Maybe I'll just follow up with another really exciting thing that you guys have been working on. Now, I believe it's sometime in June, there's another massive news appearing in a lot of media. And that is the partnership between you and also SWIFT. And people is like, wow, that's huge. So now, so tell me more about it and also share the audience. So what exactly are you trying to achieve with the SWIFT partnership?
Sure. So our work with SWIFT has been going on for many years, and it came to fruition in that second proof of concept that we put out together with them and a number of large CSDs and a number of large banks and asset managers. And what it basically proved was the first feature that I mentioned earlier. Basically, the ability to use SWIFT messages to execute blockchain transactions, because CCIP can ingest SWIFT messages, interpret them, and execute blockchain events on behalf of the bank or the asset manager that signed and sent the SWIFT message, basically resulting in the existing infrastructure, the existing signing capabilities of SWIFT, the existing messaging standards, the existing definitional standards being used in a very efficient way from existing back-end infrastructure, but then CCIP allows those standards to be translated into blockchain events on various chains. And we were able to show that you can actually use existing standards like SWIFT to basically trigger transactions across private chains and from private chains into public chains, and for information from private and public chains to flow back into bank and asset management systems using Swift messages to inform those systems. So the work with Swift, multiple banks, multiple large asset managers, multiple CSDs, basically showed that existing infrastructure, widely used existing standards, like Swift, which is a very widely used standard for defining these transactions, is able to be applied efficiently to blockchains and also to receive information back from blockchains so that existing systems can not only trigger events, but they can remain informed about the status of all the transactions and all the assets and all the kind of risks and all the blockchain related events back into their systems, which is in a certain way an equally important part of the process because it's a requirement for banks and asset managers to interact with blockchains. So the work with Swift has been something we've been working towards for many years. We hope it'll continue and create even more connectivity for people. And I think it's great that there's ways to use existing infrastructure and existing standards that have been made over 50 years by great organizations like Swift to accelerate the use and adoption of blockchain technology. And that's really our goal, is to accelerate the usefulness and adoption of blockchain technology, whether it's in Web3, in the public chain world, or in the private chain world, and to eventually actually connect those two worlds into a single global Internet of Contracts.
Yeah, I think this is so important. I think particularly for our guests in the Hong Kong audience who may not be as familiar with Chainlink. Essentially, Chainlink is the oracle that connects the Web3 players to the Web2 world, so to speak. And essentially, like something like over 80% of the traffic go through you guys. So this is a very important service that Sergey's team has been providing to the Web3 world. Now, I guess another thing I want to touch on, Sergey, is that obviously we talk about some technical lingo that may not be as something that I think the commercial or business folks may feel or appreciate as much. But then you guys have also done some amazing use cases. I remember there was this gentleman on the stage at your conference. He's from ANZ Bank. So the gentleman talked about the tokenized asset, the stable coins that they issued that previously was stuck in their own chain without much liquidity. So that's the same kind of challenge that we have seen in Hong Kong. But I think using your CCIP, that platform, now he's able to cross-chain to see more liquidity. Now, so can you, again, I know that much just from listening to him. Can you share with the audience about what exactly that accomplished?
Sure, absolutely. That is an example of the second key feature and also the third key feature of CCIP that I described earlier. So it is important for banks, anybody creating real-world assets, frankly, anybody involved in the business of creating financial products and assets onto their own chain, to have access to other chains. Because the world has really, in the capital markets part of the blockchain industry, shifted from everyone is going to go on to your chain to everyone is going to have their own chain. That's kind of the shift. There was a period of time a few years ago where everyone was convinced that if they launched a chain, everyone would join their chain, and that's how they would interact with them as a counterparty. I think that after a few banks and large other folks launched chains in the capital markets, there was a realization that they couldn't get anyone to join, that no one wanted to join their chain. Everyone wanted to make their own chain. And so there was then this realization that if everyone makes their own chain, and if we have our own chain, then how do we transact? How do we interact with that counterparty? And so this was the first fundamental problem that was solved here for ANZ. It was the ability to take their stable coin that they created and send it over to another chain for that chain to then receive that stable coin and be able to use it in a transaction for something called a reef credit. It's a nature-based asset similar to a carbon credit. So it's basically a real-world asset. So the first fundamental value was there's a bank with its own chain. It has a stable coin. It has a user that wants to buy a real-world asset on another chain. How can we efficiently and securely allow, and in a compliant way, allow that value to move to the other chain to engage in that transaction and purchase that real-world asset? And they've done a great job, and I think they're very cutting edge, and they're kind of pushing the limits of what's possible, not in this way, but in not only in this way, but in many other ways. So that was the first kind of thing that was done there. The second thing that was done was the final feature that I explained a few minutes ago, which was the ability to attach instructions to the token. So the ability to send the token with instructions about what the token will do is actually a very powerful feature, because what it basically does is it means that when the value, the stablecoin value or whatever the value is, arrives at its destination, it can programmatically affect the outcome. So you can basically turn everything into atomic settlement T+0 very efficiently, because now you can attach instructions to the value, and because the instructions and the value are kind of reaching a programmatic smart contract type of system on the other end, they can actually execute your intent. And then they can return back to you, or they can continue to manage the asset or the financial system or the product on the other chain. And so this was the second thing that happened in the ANZ work with them, is that we explored this and we worked through how to do that. Not only how to just send the asset, but how to make it so that the real world asset can then return back onto the original chain. And what this does is it allows actually everyone to have a very efficient user experience where asset managers, banks, various other groups can stay in their own chain, in their own interface, and from that interface use the other chains without having to have a wallet or an address or to natively integrate with those chains. And this is very, very valuable, because it allows them to interact with huge amounts of chains without the integration burden of having to connect directly to them or integrate with them. And so the ANZ work, I think, was quite cutting edge, and I think that that's something that we're very excited to continue.
Well, I don't know about you folks. When I heard it, it was just so, I was like, wow, somebody actually did it. And again, I'm sure there's some information shared by Sergey. They might feel a bit new. That's not something you've been hearing from the mainstream media, local conferences, and so on. And this is exactly why we invited someone like Sergey, who's a visionary, to share literally the cutting edge. This is so fresh within the past few months. So this is exciting. Now, I guess the other thing I want to, Sergey, you to help the audience to understand better is that you're not just operating in the international market. You're also now working with a Hong Kong team. That is ARTA. Yesterday we did a small session to showcase what ARTA and Chainlink have collaborated on. So that's another aspect that we'd like to get your views and then share the audience about what you're trying to achieve there in that collaboration.
Yeah, so I think ARTA is a great firm that we've been now working with, and now have announced that we're working with them. Eddie, who is basically the main principal running the firm, is a great guy and a really great representative, I think, for Hong Kong and the capital markets industry generally. I think what we're trying to solve for them is very similar to the things that I have described. And I think I see a number of well-capitalized, technically advanced players like ARTA that want to create real-world assets, want to create various advanced financial products, which I'll let them announce and talk about in their own way. But then the fundamental problem that they will have is the problem of getting data into those financial products, getting identity information in those financial products so that they can be moved across chains. And then once the financial products, the RWAs, all the things that can be created there, reach kind of a certain level of enrichment with data and identity and other things, to then have them moved to the other chains and to have them connected. Because the fundamental kind of reality of all these real-world assets, including for ARTA, including for the other folks we discussed, is that they need to have access to counterparties. So really the first stage of the process with someone like ARTA or ANZ or others is to make a good asset and to enrich that asset with high-quality data about the asset status, about identity data to allow it to comply with AML KYC so it can be properly moved to other counterparties, and about various other pieces of data that might be needed, like NAV to market to make sure you know the valuation on a daily basis. And then once the asset is created, you now have the problem of moving it and sending it to the other counterparties, and so you need to connect to them. And then the final problem is once you move it to them, it needs to stay updated. And I think ARTA has a very good grasp of all these problems. And I think they and a few other players that are well capitalized and willing to make a technical investment in making advanced financial products will begin to launch some of the more advanced, cooler things that will show people what's possible in the capital markets, and that I think will also be attractive to the Web3 markets as well.
Yeah, well, that's another transformative project that I would encourage you to follow. Because essentially what that project that Sergey talks about essentially will have that e-Hong Kong dollar elements, in which Arta is one of the, I think, 16 firms selected to participate in the HKMA e-Hong Kong dollar pilots. So that is the payment aspect. And then translating onto investments, it can be tokenization of anything. It can be money market funds or other things. But then you also need that sort of the breakage of the digital islands, the cross-chain operability, interoperability, the proof of reserves, and all the things that are the technological breakthroughs that Chainlink has been working very hard on. Now, I guess we are running short of time, so again, I just want to also come back to you. Again, you've been traveling so much, and you spend something like 4 or 6 weeks traveling around Asia this year, including Hong Kong. So perhaps can you say a few words about what's your experience like when you have been traveling across Hong Kong? Not Hong Kong, but Asia in general.
Yeah, so it was a very positive experience. I'm very impressed by kind of the forward-looking nature of the policies and the encouragement from various central banks and regulators about the creation of various digital assets and the clarity that's being created by those frameworks, and the encouragement not only to banks and large capital market players, but also to smaller and medium-sized players. And I think that like with various stablecoin frameworks and other frameworks that I know you folks in Hong Kong are working on, I was particularly impressed of how aligned everyone in Hong Kong was across the legislature, across the regulatory body, across the central bank, across a number of different places, because I do think that there is a kind of need or a sentiment that Hong Kong needs to remain a key financial center as it is today, and that blockchains are an important part of that future. And I felt that understanding throughout the many different groups and departments that I met with. And beyond that, I also saw a lot of actual practical outcomes and collaborations about frameworks that can make firms able to actually create assets that can legally then be transacted. And I think in addition to privacy, and basically privacy, connectivity, and scalability are the main technical challenges, I think this legal challenge is the final hurdle that needs to be resolved by various organizational, governmental, other bodies. And once it's resolved, I think the massive amount of value that's ready to be transacted is really the greatest absolute dollar amount that will ever be transacted or has ever been transacted so far, because it's just so much of the value that wants to flow into this format. And I think that in Asia, I saw that value is really being enabled to flow into the blockchain format and the digital asset format in a very concerted, thoughtful way, and especially in Hong Kong, which I was very impressed by.
That's great. Well, I see that our time has come. And again, I wish that we can talk longer. The one last message I'd like to share with the audience is that because I guess given the work that I do for Invest Hong Kong, I got a privilege to travel around the world, attend a lot of conferences. I have to say, it's very rare that I've seen that a speaker that would get a standing ovation in our industry. But then when I was in Barcelona in Sergey's conference, I mean, numerous times when Sergey makes some announcements or sharing the breakthrough technologies that his team has delivered to the community, I'm serious. There were like people just standing up, just clapping, and just like so emotional, sometimes like tears in the eyes. It's like, I have rarely seen that. So with that, I think it's a great treat to have someone, the visionary, the co-founder of Chainlink Labs, Sergey Nazarov, to share with us these amazingly transformative developments in our industry. So with that, let's give a big hand to Sergey again.
Thank you very much. Thank you for having me. It was my pleasure to come this year, and I'll definitely be back in Hong Kong sometime soon. Really looking forward to seeing many of you again. Thank you for having me at the conference.
Great.
Have a good rest of your conference.
Okay.
Thank you.
Thank you so much.
All right, and let's hear it for King Leung. Thank you very much for making this happen. Ladies and gentlemen, let's hear it for King. Now, Web3 is a term that you hear a lot of, and it has kind of become the big picture scene because it encompasses blockchain, encompasses crypto, the metaverse, and it is bringing all these technologies together So we are bringing to you now two people that have that have the big picture well in their broad view. We're going to be having on stage in just a moment Ms. Karina Belin. And Karina Belin, if you haven't met her, she is the co-founder and CEO of W Hub, the drivers, the stewards of Hong Kong FinTech Week. She is the woman who has access to all the special passes, all the VIPs, the inside track, because she and her team at W Hub are making this all happen. So when she comes out, I want to hear some noise to thank her for all the incredible work they're doing. She is going to be bringing on stage a Hong Kong legend, Yat Siu, the executive chairman and founder of Animoca Brands. And Yat Siu has been right in there from the beginnings, and he has rode the bust and boom cycles from the very beginnings of the internet in the 1990s. He got on gamification, and now everything that's all about Web3, and he has been able to ride the booms and ride out the busts and succeed again and again because of his enduring vision, his steadfast governance, and his elevated executive function. Ladies and gentlemen, let's make some noise for Yat Siu and Karina Belin. Here they come! Yeah!
Good morning, everyone here in Hong Kong and online. Good morning, Yat.
Good morning. It's great to be here.
Welcome back to FinTech Week here in Hong Kong. What a year.
It's been incredible. I mean, if you think about exactly 1 year ago what happened, I shared the stage with Chris Hui 1 year ago, and we were basically talking about Web3 and Hong Kong basically becoming a digital asset hub. And in 1 year, Hong Kong has become from really a place that most people were skeptical about whether they would do it, to essentially a global leader now in Web3. So congratulations to Hong Kong for that. That's been amazing. I think the other thing is also, I think we should talk about this, is the fact that exactly 1 year ago, CoinDesk actually released an article, which basically eventually led to the downfall of FTX. And exactly today, on that day, he was charged guilty. And to me, this is just the beginning and the closing of a dark chapter in our industry, but actually really this new beginning that we can sort of start to celebrate. Because I think in our industry, when we look at what happened with SBF, he does not represent our industry. We always said it was fraud, and now it is absolutely clear that's the case. And I think we can now start moving forward. Just another data point, exactly 1 year ago, Bitcoin, for instance, was $20,000. And today it's hovering between $34,000 to $35,000. So I think we can just see exactly where that's going. And I think it also demonstrates that Hong Kong has had the right direction and the right vision in terms of seeing the opportunity 1 year ago to where it was, which is arguably one of its darkest times, to where it is today, where you can see hope and opportunity emerge.
No, absolutely. So a lot of things have happened in a year, and you addressed the elephant in the room, indeed. Now, again, another thing is actually investments in Web3 are truly coming back. You're a wonderful example. I think in September, you announced a fundraise, right, with 20 million, led by here a Hong Kong-based investor. And just this week, another great announcement. So you got 50 million invested by Neom. What does that tell in terms of the investments into Web3, but also geographically speaking, what does that mean for the evolution of Web3?
Well, so the Amocaverse round that you're talking about, the 20 million, was led by CMCC, which is a Hong Kong-based fund. And I guess it just tells a couple of stories. The first one is that this region, broadly speaking, especially Hong Kong, is actually active in the investing side of things. We ourselves, both our ventures team and Animoca Brands, has actually been continually investing in the space as well, having done sort of several dozen deals over the course of the year. So if you believe in the space, if you're a builder in the space, actually you can receive investment. I think really just before we go into what happened in Saudi, which is amazing as well, actually some of the best opportunities, the best vintages as they might call, actually come from a time when arguably it is the toughest time. The portfolio companies that we sort of were most known for and the ones that we acquired, Sandbox, OpenSea, Axie Infinity, Dapper Labs, Wax, Decentraland, all these sort of companies that we sort of ended up doing partnerships and investments in, happened in 2018, 2019. These were the companies, this was a time when Bitcoin was $3,000 and less, and that was when it was a real crypto winter. And so it's actually in these times of, arguably sort of crisis, you could say, where the true sort of builders and leaders will emerge, because they're not here specifically for the money. They're here because they see a longer vision. They also have the endurance and essentially the sort of almost stubbornness to basically make it happen and see it through. But not just Hong Kong. So now let's go to the Middle East and look at Saudi. So most people will know, for instance, that both Turkey and especially UAE, Dubai especially, have been very forward. And I think there's a lot of things that still the world can learn about sort of what's happening in that area. It's one arguably, competing with Hong Kong for, I guess, a digital asset leader hub in the world. But the sort of large player in the Middle East is Saudi. And a few interesting facts about that kingdom. First, I think something over 80% of the population is under the age of 36. It is an audience that loves gaming. It's one of the highest ARPU markets for gaming that most people don't realize. It's modernized tremendously over the last 5 years. It has a very, very strong sort of vision in terms of, with Vision 2030 to basically modernize and sort of grow its economy into one that has more digital, sort of digital aspects about it. NEOM, if you haven't checked it out, you should, because it's pretty insane in terms of it's literally like the building of a new nation. And in the building of this new sort of nation under the umbrella of Saudi is also this idea that they want to use all the new technologies, make it green, make it sort of, future forward, future friendly. And of course, Web3 and blockchain plays a critical role in that. And we spent some time sort of, I guess you could say, lobbying and explaining how the vision of Web3 will work. And I think they share in that vision, and that's why basically we ended up having this investment and partnership, which is exciting. But it also shows that the world has also changed. When it comes to technology, we used to always have a very US-centric view, right, because of Silicon Valley. And we should never discount the US. But what's interesting in Web3 is that actually the power dynamics and the balance has shifted away from the US, partially because of the framework that exists over there, but partially also because it opens up opportunities around the world, not just for Hong Kong, now the Middle East. For instance, in Japan, even last year, the Prime Minister has said that sort of Web3 and the metaverse is part of its national agenda. And for those of you who may not have remembered, 1 year ago, this year, Beijing actually issued a Web3 strategy paper as well, right? Talking about Web3 being the future of the internet. So this isn't just a case of a few cities around the world saying we think this is great. This is essentially, the most populous places in the world basically saying Web3 is the future. And it is also interesting that both of these places, Asia and the Middle East, also happen to house the youngest populations on average, meaning they are younger populations, broadly speaking, which is important because Web3 really is the opportunity for the youth.
No, absolutely. We heard it this morning as well in a talk with Brian Armstrong from Coinbase that really Asia is a leading industry when it comes to adoption of Web3. So again, it's Hong Kong FinTech Week. So why is Hong Kong important to Web3? Or the other way around, why is Web3 important to Hong Kong?
I think it's incredible because in the past, Hong Kong hasn't really had a specific advantage on the technology side, but it had one advantage, which was on the financial side. Hong Kong has always been a leading financial hub. It has also always been a merchant hub. It's always been a hub that basically deals with sort of, I guess, transactions and always deals with sort of, basically relationships around, right? And so when you think about Web3, it's powered by blockchain. What is blockchain? Well, actually, blockchain is this permissionless structure that has this very strong free market belief, which is really, if you think about Hong Kong, is typically either number one or number two in terms of most freest market in the world. So they very much share in sort of the economic philosophy. But the other thing is also, it actually feels almost like it's made for Hong Kong because, it's all about transactions, right? And in Web3, it's not just about the financial transactions per se, it's about the trade of these transactions. So the Hong Kong that we might know of is, merchants and goods and shipping, right? It's financial services with trade finance, but really what are you facilitating? You're facilitating transactional value amongst these goods. The goods necessarily don't have to flow through Hong Kong. They just have to basically be transacted through Hong Kong, and that's why the legal system and all these things become such an advantage. And blockchain basically is built in this manner where, again, the actual physical goods or even the NFTs in this case don't have to physically flow in, necessarily that way, but the transactions is what's validated. It's like, oh, it took place. I can trust you. I can do it permissionlessly, and the speed of that. So I think the culture of blockchain actually is very compatible for Hong Kong. This idea that you have property rights is sacrosanct in Hong Kong. We all believe that we should own our property in Hong Kong. We also have a strong understanding of financial systems, financial literacy, and capitalism in Hong Kong. I would argue that essentially Hong Kong probably per net capita as one of the highest capitalist ratio, right? And Web3 and blockchain is a capitalist infrastructure. So again, you have the marrying of what Hong Kong is really strong at, which is basically a sort of fintech and financial knowledge, and then putting that in with technology, which traditionally Hong Kong hasn't led in because it was a numbers game, right? It was something that like if you were in China or if you were in the US, you had a big population that you could address technology to. But with Web3, it's a global industry that is completely borderless. You could build a protocol here in Hong Kong, and it could be sold to the world, and it could be connected to the world. And also, you don't have barriers. For instance, you don't have an app store, or you don't have some kind of sort of centralized system that's not in Hong Kong, but that might be in the US or somewhere else, that decides whether you can launch or not. In Web3, you just launch on-chain, and the world is your oyster, effectively. And that actually is, again, something that Hong Kong has always been traditionally very good at. You think of the history of Hong Kong, it's a very small place. I mean, really, just millions of people. But it's often described as the pearl of Asia, not just because it's geographically in this place, because it has led to the infrastructure, whether it's transport, whether it's shipping, whether it's financial services, and now it's Web3.
Yeah, and I think also to highlight is really the diversity of Hong Kong, right? And
Absolutely.
I think that's where blockchain is a beautiful example where you can see use cases across industries. I loved how you put the linkage to FinTech, but also putting the tech forward, right? It's all about FinTech redefined, full stop, and showcasing use cases that go a little bit beyond financial services. Now, again, showcasing the tech and not only blockchain and Web3. AI is the new buzzword, and I think what very often people misunderstand that AI is not stealing the show away from Web3, but will be a huge enabler. So tell us a little bit more.
There's a few things there's many things that we think AI and Web3 sort of combined is going to sort of create explosive growth in the Web3 industry. But let's just talk about two specific examples that we love. The first one is provenance. Right? When you think about generative AI, you don't really have a good way to know whether the AI is using your data, whether it's using your creativity to create an output. But when you actually build this on-chain, you can immediately actually not only analyze it, but you can also appropriately share value across. There is no real good way today in the Web2 space in which you can actually sort of take the value that is generated by even 1 million people, or maybe say even thousands of people, and then share that value across. But through Web3, blockchain, and essentially AI, you can have sort of generative art produce works of art, for instance, that actually would then be able, through blockchain, know where that art was inspired from, and then share that value across. And essentially, it's the most scalable, permissionless DRM system in the world, if you would say, one that is not controlled by a single party. So that's a very sort of, I guess, institutional and industrial kind of use case. But the one that we love, partially because we're in gaming, and is the fact that actually we can have these autonomous AI agents that are anyway going to be helping sort of run our virtual lives, as it were. But how would that work? Well, for all of you who play games here, you're probably interacting with what's known as an NPC, a non-player character. Non-player characters are actually probably one single form of AI that every one of us is interacting every single day, even if we don't think about it. They're the ones we talk about where to go in the game. They're the ones we talk about buying something from the store of the game. It's a dumb AI today, but with LLMs and where AI is going, actually you're going to have all this sort of really sort of intelligent conversation with them. And now imagine when this AI actually starts to be able to sort of traverse because they're autonomous. Well, two things will happen. One, you'll have richer interactions in the gaming world, which is already bigger than music and film combined, which will basically engage you more and bring you more into the world. But also, AI is going to interact with each other. If for those of you in the finance world, anyway, from a market perspective, how much of AI are already using from a trading perspective? Now, when you bring that into the world of gaming and they do autonomous transactions for themselves, what are they going to be transacting with? They're going to be transacting on-chain. They're going to be doing stuff in Web3. They're going to be sending each other NFTs, and they're trying to sort of deal with sort of digital assets and tokens. They're not going to be sort of having fiat accounts and doing that kind of stuff, because that can't work. So we think that type of activity will also increase tremendously. And also, to me, AI is the antidote to how you deal with issues of fake news and so on, and also fake websites. Because in the past, we would have these antivirus and scans, but us going to website was the action that we would do. But in the future, you should be expecting to be dealing with an AI agent. And that AI agent is the one that's going to be doing the transactions for you. You're not necessarily going to be the one that's going to be clicking and doing the work. The AI agent will do it for you, because only the AI agent is going to be able to keep up with the pace of the changes that takes place. Because at the end of the day, as a human, we will have limitations as to what's right or what's wrong. but the AI actually can keep up with that. So I think we'll be using many forms of AI to help facilitate our life. In a nutshell, it's like having personal assistants, but you're not having one. You might have dozens of them, and
yeah.
they'll all work for you.
But on the other hand, Web3 brings to our AI the whole data ownership, right? Again, for you, proponent of the open metaverse of digital property rights.
And you need to have ownership, you need to have digital property rights in order for this to function, because these AI agents have to be autonomous and they have to be owned by you. That's the key point. If the AI that's built is owned by a platform, they have the ability to change it, they have the ability to manipulate it. But if the AI is your sovereign AI, it's trained on your data, it is doing what you're asking it to do, right or wrong actions it may be taking, it is ultimately your responsibility, but it also means it's accountable to you because it is yours. And that's why property rights matters, because the AI is actually your property, not someone else's.
Yes, so obviously we're looking very much forward to having you back on stage here next year at Hong Kong FinTech Week 2024. What do you think will happen over the next year, or what are you most bullish about?
Well, first of all, I mean, as I said earlier, the growth of the industry, we were at, last year at the $600 to $700 billion market size in terms of the industry. I think we're capping 1.2 to 1.3 trillion. The space is growing. You see regulatory clarity coming around the world. And more importantly, you see competition around the world. Hong Kong leading the way is not just about Hong Kong. It's about the rest of the world looking at Hong Kong and saying, oh, what's going on here? Maybe we should do this as well. Yesterday in an event, we asked people, how many people came to Hong Kong just for this event? And most of the room raised their hand. The point being that this is kind of Hong Kong's comeback story as well, not just for financial, but also for everything that's happening in Web3 and becoming a leader in that space. And the rest of the world is looking somewhat, I would say, more in envy. I mean, this morning as well, saying Hong Kong is doing it right, it's growing the industry as a whole. And I'm very optimistic that we've also come to a more normalized state. Closing the chapter of a number of very bad actors as well, that is sort of cleaning the slate and letting us move forward, which we're cheering on. So I'm very optimistic about the space, and I think 2024 will be a major growth year for Web3 and our industry overall.
That's amazing. I know whenever I have you on a fireside, I double the stage for you, so next year we have to double the stage again. Fantastic.
Thank you so much.
Brilliant. Thank you very much.
Thank you.
A hand of applause for, thank you.
Absolutely brilliant. I would not have expected anything less from two of the OGs that have been making the sector happen in Hong Kong and around the world for literally decades now. We got deep into the weeds on artificial intelligence yesterday, and we are going to be taking a closer look at that because it is transforming everything about how finance is done. We've got just really a blue chip 5-star panel coming up here today. They're going to be led by Seagull Song. Seagull Song is an international partner at King Wood Mallesons, one of the most progressive and impressive law firms based here in Hong Kong. She's got, like I said, a 5-star panel coming up here. First up, one of Hong Kong's digital banks, Livy Bank, has sent Gary Lam to join us today, where he is the Chief Technology Officer. We've got Wendy Wong. Wendy Wong is the Global Chief Information Officer for HSBC's Global Banking. We've got Jan Metzger. Jan Metzger is the head of investment banking, Asia Pacific for Citi, making the big decisions about where the big money goes. We've got Fred Xu, the National Technology Officer for Microsoft. Again, this is blue chip. And making a return to the stage, we have Nikhil Reddy, who is the Chief Executive of the Financial Conduct Authority of the United Kingdom, responsible for all the finance in Britain. Ladies and gentlemen, get ready for your 5-star panel. We're talking AI here at Hong Kong FinTech Week. Seagull Song, fly on in. Here we go.
Hello, good morning, everyone. I hope everyone can hear me. I'm Seagull from King Wood Mallesons, and here is my team, a great line of speakers today. And today we're going to talk about the future, artificial intelligence. So thanks, Andrew, for having a great introduction of us. So I will not go into details. If you want to look at the speaker's bio, please go to the website, and we'll directly dive into the very exciting discussion we are having this morning. So first of all, I'm going to ask each of our panelists to give 1-minute summary as to what they have observed during the past 12 months as to what AI, artificial intelligence, what kind of impact, the most significant changes that AI has brought to the finance industry. I will start from Mr. Rati, please.
Well, thank you, Siegel. I think over the last 12 months, we've seen a dramatic shift in global interest in AI, particularly political interest, and the desire to invest both in the official sector and the private sector in understanding the risks and collaborating across borders. We are identifying that AI is borderless, it may surpass human understanding and human intelligence, and therefore as a system, we need to get our act together. And in the UK this week, there's been the Global AI Safety Summit with a very powerful declaration coming out from 28 countries. And I think that's important for us in the finance sector, because what we need to know is that the questions around security, the questions around global cooperation are being tackled, which then enables us, I think, to have a platform on which we can support and enable innovation using AI, both in consumer markets and in wholesale markets.
Thank you. Thanks. Thank you. Yan, please.
Fantastic. Well, look, one thing that I find very exciting, if you look at the last 20 years and the amazing disruptions tech have brought, none of it has actually been around tech, whether it's e-commerce, transportation as a service, social media. None of these great firms invented new tech. They took existing tech, they found a new business model, they attached lots of capital to it, and maybe broke the law driving it forward, but they did amazing things. Now we're about to enter a 20-year period where you're going to have huge changes in real technology. It's going to be in AI, in medicine, in materials. So if we think the last 20 years have been amazing, they are a mere taster of a huge acceleration that we are right at the start of today. So that's something which is going to be interesting, fun, and potentially terrifying for all of us.
You probably have noticed Yan's passion to science. I mean, although he's in investment banking right now, but his major was really from computer programming from Cambridge. That explains his passion, excitement about tech. Wendy, please.
Yeah, hi, everyone. I would say, actually, to Ian's point, this AI trend has been just dropping like a storm, right? No other technology, has been adopted so fast. Within the last 4 or 5 months, there's so many experimenting, so many people really, doing things. At HSBC alone, we have 1,000 test cases that actually using this one is very self-initiated. So a lot of the cases, on customer experience, process engineering, workspace, and other things. So it's just, widespread, phenomenal, kind of adoption rate.
Thank you so much, Wendy, for the insight. Gary, what about you?
Yeah, thank you. John sounds like one of our very passionate business owner, right? As Levy Bank, we are a virtual bank in Hong Kong, right? So we are digital native by default, so everything straight through robotics and everything. We cannot see our customers, so we will use AI to bridge the gaps, right? And in the last 12 months, I would say, with many vendors in Hong Kong helping us to build models and facilitate the infrastructure, I would see there's a lot more business use case that we can support our business in the future.
Thank you. Fred.
Yeah,
thanks. By the way, Fred is from Microsoft, who, worked with OpenAI. And he, in the following 20 minutes, he's going to introduce to us some of the new things that OpenAI and Microsoft had started. But now, only 1 minute. Fred.
Yeah, I need an hour to talk about the partnership. But I think for the last 12 months or so, I'll see AI been using in the finance industry for a long time. I think you've been using AI machine learning for like AML, Red Hat, like CFT, all this kind of thing. But since our partnership with OpenAI, we're able to bring this technology to Hong Kong and this part of the world. I think our life is getting busy. My life is getting busier, and your life getting more busy as well. So I see the main difference is I see this AI will be accelerated in every application, every single use cases will be able to leverage generative AI technology to accelerate the adoption of AI in many years to come.
Thank you so much. So that was the first round of very quick 1 minute summary as to the panelist perspective as to the biggest change impact that AI has brought to the finance industry. The next round, that speaker will have, each of you have 3 minutes, 3 minutes longer this time, to share with the audience as to what are some of the benefits, challenges, risks that you think AI has brought to the industry or to your own specific institution. I will start with Gary. In the prep call, we talk about one of the main challenge was really fraud, right? Financial fraud. For example, deep fake. The new AI technology could swap your face, change the voice, use AI voice to just imitate you, right? So how do we do the voice recognition in the future to prevent AI finance fraud?
Yeah. When I hear what Jan mentioned about 20 years ago, we built software to support our business. When AI come in, I kind of imagine back to the time that when Excel come out, when all the business start crunching their VBA scripts, right? And now AI come out, business I want to do some prompt, I want to do some micro models that they want to build. When this technology is so easy to adopt by our consumer, our user now, I would see there's a lot of analytics they can do by themselves. For example, when we look into the fraud system, we may have a lot of alerts, millions lines of kind of informations that in the past, you may imagine there will be a software life cycle that you need to raise the requirements, you need to do some data crunching, and then you need to build a software to get back to the users. But now, as a virtual bank as well, we can almost like see it real time. And then when we see it real time, we can respond and we can change the rules, and we can try to use in the protection of our customer angle to how to fight the fraud together. Yeah, especially in the recent days, you can see there's a lot of deep fake technology that because we cannot see our customers, everything used by facial recognition technologies. How can we fish out those bad guys from the good one, right? And how can we issue our lending, our money to the right applicants, but not the fraudsters? So we use a lot of data, and when data come to play, manpower come to play. When AI comes in, we can dramatically slow down their efforts. So that is what I see. Right now, we are digital native, and moving forward, my vision is go for more AI native for the entire firm. Yeah, thank you.
Thank you, Gary. Wendy, so now it's your turn. In the call that we briefly talked about, one of the concerns that was transparency. So for example, how AI is going to work with humans in some of those very important decisions. For example, when I am applying, for example, a home loan, or a car loan, will the AI just make decisions as to am I eligible or not based on the track records, my credit records, or some of the other data it's collecting? There are concerns inherent with AI, algorithm risk, discrimination against gender, ethnic groups. So how do you think it's going to work when it comes to transparency and also mitigate some of those discrimination risks associated with AI application in the finance industry?
Yeah,
Wendy.
So I would say, well, while the world is passionately adopting Gen AI, one very important topic is about the responsible use of AI, right? So that is, on everybody's mind to do that. So I would say a few areas that, as we're exploring this technology, we're also putting in frameworks and governance to really, making sure that we're using this responsibly. So firstly, be very conscious about the information and the data we're using, whether it's public or private, whether we have the right to do those kind of things, right? So that's a conscious, thinking through that process. Then actually, to Gary's point, the AI actually can process a huge amount of information that humans cannot, right? So therefore, it gives us, much better access to some of the information, the decision, and things like that. However, at this point in time, we're not using AI only to do the judgmental, decisioning making. We are carefully looking at how the decision has been arrived. Are they the right outcome? How do we actually constantly tuning it and have a framework to review and approve those models? But I think part of that is also actually through that process, because the Gen AI capability with the new technologies being developed, it actually gives us to point to say where the information was obtained, how the decision was being made, whether the human beings accept or decline that decision and then make the tuning better, and then we can actually track those records of all the chains of the decision making, as well as the tuning of the model and going forward. So actually, comparing to everything's done by human beings, not everything tends to be fully documented. So if we're careful, we can actually make this transparency and traceability better using the latest technology and Gen AI capabilities.
Thank you, Wendy. That was very thoughtful. So, Yan, it's your turn. I mean, one big question that probably everyone has in mind is, well, apparently we will enjoy the convenience that AI has brought to our lives. But what about our jobs? Are AI going to steal our jobs? Are we going to lose our jobs? And I understand that both you yourself and also your institution has an emphasis and a focus on this workplace thing. What is your view on that?
Sure, I'll talk you all through a few quick thoughts. The first one is, if you look at many industries today, whether that's professional services or many kinds of manufacturing, most humans today, but in particular bankers, spend 80% of their time processing stuff and 20% of their time thinking. That's going to inverse with AI. You're going to spend 20% of your time telling the AI what to process, and then you're going to spend 80% of your time thinking. So you have to hope that you have some smart thoughts, because you're going to have to compete much more with thought rather than processing. What that's going to mean is also going to change the way we learn. You're going to have to learn much more about learning. In fact, there is some city research out there that estimates that anybody who's in high school today will have 6 careers, of which 4 have not yet been invented. And that actually brings me to the final point I wanted to make on this in the short time, which is today within humans, and maybe I take medicine as an example, we prize technical knowledge very highly. Doctors spend a huge amount of time, 8+ years, acquiring technical knowledge, and then they're also told empathy also matters, and it's part of being a great doctor. That will switch. The AI will have all the knowledge, and you as a doctor will be much more judged whether she or he can give empathy. So emotional intelligence and empathy as a core human trait will actually go up in importance. And the final thing I will say, and I guess this is from some of the doomsday sayers with AI, is they're all saying, be nice to the AI, because the AI may be in charge in 20 years, and it will remember who was nice to it. So if you're pounding away with a large language model, ask the questions politely.
Well, I don't know if Yang is too optimistic or kind of rational optimistic about AI, but I hear you loud and clear, yes, we should be nice, not only to AI, but also to the service providers who create AI, so they have their sense and sensation to make sure the AI work with us, not engage us. So now I'm going to direct the question to you, Fred. So you're from Microsoft, which is very closely working with OpenAI, and you shared with us earlier that some of the new programs that OpenAI has recently launched. And also, what is the perspective from the service provider, AI service provider?
Yeah, I think first and foremost, I think our role is to really bring the latest, greatest technology to the world, right? Especially this part of the world. So people can leverage this generative AI or OpenAI models to help them to do their work. So when we actually announced this first phase of partnership in January, we're able to bring all this large language model on our platform. So the way we leverage that, first of all, we infuse this model into our own product. For example, Microsoft 365 Word, Excel, PowerPoint. The good news, since like 2 days ago, we actually make it generally available. We call our product called Copilot. So Microsoft 365 Copilot can help you to do a lot of work. For example, how we read your email faster, how we do your PowerPoint, Word faster. So the formula that Yang talked about, 80-20%. So a lot of people have a lot of digital debt. How many unread email you have? I have 1,000, you probably 2,000. So these tools can help you to clean up all this digital debt and spend more time on creativity work. So this is actually one way we actually infuse this technology in our own product. We also bring this model to help our developers, like a bank. You have a lot of developers. You want to leverage this technology to associate with other products you want to do. So it's the OpenAI models, right? So our role is to explain and help our customer understand this model, not just customer, not just finance industry customer, but also regulators, the government, understand the impact and how it works, and how to apply responsible AI model, our ethical model, to use this technology in the responsible manner. So finally, if people are still afraid of this technology, for example, if I have a document or image generated from this AI, who owns the IP? Who has the copyright? Because of that, they may not want to touch this technology. That's why we actually introduced another program we call AI Customer Commitment, and actually that program is a co-pilot customer commitment. I need to read it carefully because there are a lot of legal people here. so what that commitment means is if a third party sues a commercial customer, yourself, for copyright infringement for using Microsoft Copilot or the output they generate, we will defend the customer and pay for the amount of any adverse judgment and settlement that result from that lawsuit. Okay, so this is actually our commitment. Also, there's some fine print as well. Anyway, so this is our role to bring the technology here, use the technology into our product, or allow our customer to use this product, onboard this product, and also help our customer to deploy and use this technology in a responsible manner and defend them for any lawsuit generated from our product. So that's
Thank you very much. So Fred just mentioned the indemnity clause that Microsoft and also Google launched. Because there's IP risk associated with using AI products. For example, when AI is during the process of training AI, we have to use lots of works and data. Some of the works are copyrighted works, so there's inherent IP copyright risk associated with training AI. That's why Google and Microsoft, along with other AI service providers, have basically said, we will indemnify you, defend the user if you have concerns or you're facing litigation down the road. So coming to you, Mr. Ratti, this has been a very exciting week. We know over the weekend, President Biden announced the new executive order for safe, secure, and trustworthy AI. And for the past 2 days ago, the declaration was signed by 28 countries, including not only UK, EU, but also United States and China. And then your prime minister was the first hosting prime minister and also country for the first global AI summit. So what is your perspective, UK perspective? What is your view on international collaboration? Whatever, please, Mr. Ratti.
Sure. Well, I like Jan's call for us to be nice. As regulators, we're always nice. I'm sure you agree, Jan. But I think you're quite right to point out the AI Safety Summit, the first global summit that's been taking place in the UK over the last 2 days, is an incredibly significant event. And it's very powerful that a declaration was secured and fronted by, as you said, US, UK, EU, China, and 24 other countries, collaborating not only on the benefits, but also on the risks of frontier AI and recognizing that this is going to need global collaboration. Within the regulatory community, I just came back from International Securities Regulators meeting in Madrid, and this was, we spent a day on this topic. And for every benefit, and there are so many benefits, hyper-personalization of products and big consumer benefits, there are also challenges, whether that's differentiation or discrimination. In the markets area, ability to have much more efficient markets, cheaper cross-border payments, greater automation, all of those things. At the same time, though, we've seen in wholesale markets around the world greater use of programmatic trading. The ability for herding to happen if you have a number of these highly powered computers coordinating trading, potential increase in flash crashes as they operate across board and across markets. So we have to think about this as regulators. How do we, from a market integrity perspective, manage this so that markets stay safe and clean? That can only happen with international collaboration.
I totally agree with you on international collaboration. I mean, it's like the climate change. I mean, no single country could solve the problem, address all the risks and concerns, single-handedly. So we have 1 minute 45 minutes. Now, this is really my favorite time when I was moderating a panel. That's what I call crystal ball reading time. Each of the panelists will have 30 seconds to share with the audience their predictions, projections, warning, 30 seconds, whatever they want to share with, as to what is your view, AI's impact in the future, down the road, in the next 1 year, 2 years, 5 years. Mr. Ratti, go.
I sometimes joke that we should be renamed FCAI, but I don't think that will happen. I think we can expect every 12 to 18 months some very disruptive change in the way we organize our institutions and in the market behavior. And therefore, our workforce will need to constantly reskill. And that shift in mindset of constant reskilling and retraining, I think, is going to be fundamental.
Thank you. Yeah.
All right, I'll give you a few. Driving will be outlawed in our lifetime. Everybody under 30 today will live to 120. The rest of us will die on schedule.
Oh.
And thirdly, general practitioners will cease to exist.
Wow.
Wow. Wendy, I hope it's an up note. Go ahead.
I would actually say it will change a lot of the industry, how we operate. And I think new ecosystems will be formed because of this.
Yeah.
Okay, thanks. Gary.
For me, we are builders, we are technologists. So I don't have a crystal ball, I'm more call for help. In Hong Kong, we are lucky enough in this jurisdiction, we have CDI, we have open banking. Algorithm-wise, we have. People-wise, we have. But data, I'm more call for the collaboration with many of you here in the future.
Thank you, Fred.
Yeah, don't get too scared that AI will replace your jobs. AI actually help you to do your job better. Treat it like your co-pilot, not an autopilot. So don't get scared. So be friendly with your co-pilot.
Thank you so much. Let's give a round of applause to all the speakers today for our session. Thank you.
Absolutely fantastic, Siegel. Great job with this amazing panel. Thank you so much. Thank you, thank you, thank you, thank you. Wow, I mean, these are the big guns, and that's why we got a full house here today. Changing gears a little bit, Hong Kong has done it. They have pulled the trigger. They have made the decision that they are going to be a friendly environment for crypto companies. And so in doing so, they are changing how everything is happening. So if you are considering moving your crypto business somewhere in Asia, then this is the panel for you. If you are too legit to quit, you might want to think about moving to Hong Kong, but you're going to want to know the details, and that is what our next two speakers are going to be getting into up here on the Hong Kong FinTech Week stage. We are bringing Clara Chu. She is the CEO of QReg, and a lot of people know her. The last couple of years, she's really come out as a strong advocate for the digital asset space, and she was formerly a regulator and the head of FinTech and licensing within the Securities and Futures Commission of Hong Kong. But of course, she's been released from those bounds, and like I said, now the CEO of QReg. She's going to be joined on stage by the Global Chief Commercial Officer of OKX. You might know them as, one of the biggest and best exchanges in the world. You might know them from the McLaren sponsorship at Formula One. But Lennox Lai is the Global Chief Commercial Officer, and he's going to be joining Clara Chu on stage right about now. Let's have him, Clara and Lennox. Let's do this. Yeah. All right. You got it. Woo.
Okay, testing. So it's always nice talking to you, Carol.
Thank you.
So maybe just a little bit, giving a little bit context of your background, right? So actually, Carol was Hong Kong SFC, FinTech Head of Licensing Directors till 2021. And also she is the architect and the writer of SFC licensing, and also the supervision regulation of virtual asset business in Hong Kong. And also the initiator of the entire virtual asset regulatory framework in Hong Kong. And she's also a member of SFC FinTech Advisory Group appointed by the SFC. And also Kara is also deeply involved in SFC policy supervision for her work during her last 14 years. And also have been a lawyer for international firms before joining the SFC. Okay, right now she's now running her own regulatory consulting business, QReg, with another ex-SFC member.
Thank you, Lennox. For Lennox, I think many of you know him, but anyway, I just talking, he now leads the strategy and operation of OKX Group, and he's also one of the earliest employees to join the OKX Group. And since then, he has championed financial inclusion through the power of crypto and decentralized finance. With more than 15 years of experience in the crypto world and financial services, Leonard plays a very key role in OKX transformation from a centralized crypto exchange to the largest platform for Web3 services, NFT, and blockchain, and also gaming.
Yeah.
Thank you, Leonard. Very, very nice to talk to you.
Yeah,
I know that you travel around, for your job, your role for OKX Group. You have seen so many different jurisdiction regulation. Why do you think Hong Kong is one of the most attractive area for the VA business?
Hong Kong is particularly interesting because our industry is a combination of technology and finance. So a lot of people recognize that, or maybe call Hong Kong is not particularly a tech center, which we don't exactly agree, because when we build something and we want to have talents in global scale, that's programmers, back-end engineering, full-stack engineering, product, we normally need the particular employee or our talents need to equip with certain kind of very deep financial understanding, financial literacy to build the underlying system. So Hong Kong is particularly favorable in building your startup, especially in FinTech area and virtual asset area. So that's very special, unlike other jurisdictions. So that's why we put our product tech center in Hong Kong, in Causeway Bay, for so many years. Yeah.
Yeah, very nice office.
Yeah. Yeah. So Kara, I think going forward we are having the regulatory regime in Hong Kong, and I know that you're previously working so hard, and I think you're the person to drive that virtual asset framework in Hong Kong. So what do you think the next step? Do you think it's successful so far at this stage? What do you think the next step of our industry?
Yeah, I think for Hong Kong, we have been very successful in building our regulatory framework for virtual assets. When we go back a little bit, like history, which now, haven't left the SRC, I could share with you. Yeah, when it was in 2018, we started to think about whether we should regulate the virtual asset area, and then finally we came up with a position paper saying Hong Kong is going to regulate this area. And then in 2019, we also published a very detailed guideline as to how Hong Kong will regulate the virtual asset crypto platform. And also very detailed, like the requirements, what we are going to do in the next 1 or 2 years with the licensing regime, supervisory regime, and all these. I still remember that, in that morning when we published it, immediately we got the international newspaper coverage about what Hong Kong is going to do. I still remember it would be, Financial Times, Wall Street Journal. Immediately after a few hours, they also published our story. So it is very, very rare for Hong Kong to, to be kind of like a pioneer. So I would say that for Hong Kong virtual asset regulatory framework, we are the pioneer. We set the scene because at that time, 2018, 2019, a lot of international regulators, SEC or FCA in UK, they are still thinking, what to do, how to do it, whether we should do it. But we are the first one who took the bold step and regulate this area. And for this, I think so far it has been, very well receptive. Especially, I know that, or some of you also know that other jurisdiction regulators, they are also copying or taking reference about our regulations so as to shape their own regulations in their jurisdiction. But in the last few years, because COVID, and also at that time, our regulation was really, really new. So we have to be very prudent. For example, we have that kind of like professional investor restriction and all the, probably you have heard about it. But we have now kind of improved our regulation. So we have removed it. And then now all these license exchanges could serve retail. And for that, of course, our VA platform regulation, I think, still have rooms for improvement. For example, we have a particular requirement saying you have to put your asset in cold wallet and hot wallet with a specific ratio, 98 and 2.
Yes.
Then, for example, like that requirement at the very beginning when I proposed it, I drafted it, it was with good intention because we thought that, assets in hot wallet are more inclined to be hacked. But for now, sometimes when we see that for those new crypto exchanges, when they start, maybe they don't have a lot of assets in their hands, the client asset, so it's very, very easy for them to breach that requirement, especially maybe one big deposit from a particular client. So this kind of requirements, then I think we need further time to see whether we need a little bit refinement so as to suit the reality. So for you, Linus, I see that you have very experience in all these many different areas of virtual assets. So what do you think in Hong Kong? What do you think the hottest topic now? What are the potential in the virtual asset business? Because now we have many different things. We have platforms. We have tokenized securities or crypto fund, or NFT, many things. So what do you think?
Yeah, my thought is we are actually exploring the frontier of virtual assets and what it represents. So I think we spent around 5 to 6 years mostly focused on building the underlying blockchain technology. The blockchain technology actually means to our industry is actually in one sentence more like a global settlement network with relatively efficient and transparent and cheap, and also globalized. So what do you think about this? Okay, let's create different kind of virtual asset class. But right now the industry exploring whether or not we can extend further to probably tokenization of some of the existing financial contract. Because when I'm working in the financial industry, you spend a lot of time what we call the trade cycle. The time and cost as well. So from the very beginning of trade cycle, it's more like trade confirmation, execution, clearing the process, checking the balance between each of the counterparty, and finally confirmation of the trade and reporting. This kind of process, if you think about right now, is relatively legacy. If you compare if you manage to tokenize a majority of some of the financial contract, for example, bonds or, for example, OTC transaction, with a blockchain-based transaction, I think we can largely eradicate or eliminate a majority of the costs. So think about that. If you're a trader or you're institutional, for the very first time that you engage with financial transaction, you already know this transaction will be executed automatically through smart contract and also prevented. You don't necessarily need to hire a bunch of people or have a different kind of procedure, SOP, to check and make sure the trade happen and make sure the trade will be settled properly. So I think that's a very good direction that's taking our virtual asset further. Probably, I would not surprise that a majority of financial transaction or contract could be put on chain and trade globally on chain. So I think that's just a start. I think. What do you think about the next step, or in regulatory aspect? What's the next step that we can put it to expand further to the financial asset class?
Yeah, for me, my expertise will be on the regulations, regulatory framework, policy, working with the government or the financial regulators in Hong Kong. What I would see is that, as I just briefly mentioned, like last year I was a very strong advocate about professional investor removal, that kind of requirement removal, and then now we have the retail, so the licensed crypto exchanges could serve retail. And then another thing, I guess, other than some minor adjustment about the requirements, as I also have briefly mentioned, I think because of the collapse of JPEG's case, which has, to me, I think personally, I think that also exposed some kind of like the necessity of regulating crypto OTC business, OTC shops. For me, in the past few years, in fact, I also thought about it at that time. That was also, on my roadmap about how to gradually build a regulatory framework. And because of the collapse of JPEG, what I see is there is some urgency in dealing with that solving this problem. Because I think for general public in Hong Kong, crypto OTC shops are more familiar to them.
Yeah.
You know, they walk in the street, they see
point.
OTC shop, and then sometimes it's also difficult for one to differentiate what is, like, you know, you guys, this centralized crypto platform, which are regulated or could be regulated. Some are called OTC shops, which are not regulated. There is no licensing regime for that for them. So for average investor or, you know, a citizen in Hong Kong walking in the street, I don't think one can easily understand what is the difference. So I guess there should be more like education, of course, about this. And another thing is we should properly consider whether we should regulate this area, this kind of business, have a robust licensing and regulatory regime for that. So this is the first thing I think from the regulatory development that we may think of. Another thing is crypto custodian. I think you have heard a lot. In Hong Kong, we have some small companies or crypto exchanges, of course, can also be crypto custodian as well, but we don't have a very robust licensing and supervisory framework for these crypto custodians. Nowadays, many these kind of crypto custodian, they are only holding TCSP license on the company's registry. They are not regulated by SFC. But what I think is this kind of crypto custodian, they're holding investors' assets, so their integrity, their safeguard as to clients' assets is very, very important. So I think we should also think about it, we should have some regulation in this area.
Under SFC framework, you think?
For me, yes, likely SFC, but I don't know whether they are going to take care of it, because we still have other financial regulators in Hong Kong, HMA, or even like custom and excise police, many other different regulators. And then the third thing I think everyone is talking about is stablecoin. I see stablecoin is a big area. Many people would like to come to Hong Kong, maybe issue some stablecoins. I see some benefit of stablecoins here, because it may facilitate some kind of business as well. And then for the crypto side, I think if Hong Kong we have a robust stablecoin regulatory framework, it will also help our market to have an orderly development. And before any big things, bad things happens, I think we really need to do something about it first, and then everyone here probably know HKMA is doing something about it, thinking and then designing. So I hope that to see their final product and our regulatory framework in this area probably next year. And then, so these are the three main areas. In the longer run, what I think we can also think about a regulatory framework, or to see the regulation will be more on the, for example, whether we should have clearer or regulations about like crypto derivatives products and also market makers for in the crypto market. And then for me, I'm a strong advocate of regulatory clarity. I like all our regulations to be clear, so that some people, when they are doing this business, they won't accidentally fall into the crack and then become a criminal. No one wants to do so. So I think there is some areas we should look into, and then probably there is a regulatory roadmap we should have.
Absolutely. I think the regulatory roadmap is actually super important to the industry.
Yeah. So I guess I have talked a lot. So Lennox, do you have any other thing you would like to share with us today?
Yeah, I think I think Hong Kong, because the topic is more like how to Hong Kong become the virtual asset hub. So I think one of the necessary is the mindset of Hong Kong across the entire industry is. I think virtual asset probably is one of the best technologies, revolutionary technologies, that Hong Kong has all the ingredients to grip and to physically build a global center of virtual asset. If virtual asset manage to become the next step of our financial markets, and if we can visualize that a majority of financial transaction probably could be tokenized and trade, grow in global scale on chain. I think Hong Kong has everything it needs: talents, regulations, legal framework, and also basic infrastructure to make it happen. I think as a whole, as an industry participant, I think we should seize these particular opportunities for Hong Kong if we look further ahead, 10 years, 20 years. And this is something that, this is a particular piece of technologies that we cannot miss. There's something like, for example, regulatory roadmap, some of the very important things that we should think about. And also, what's the next step of the innovation? The innovation not particularly just on product or just on chain, or how we work collaboratively with the existing traditional financial infrastructure and raise the bar of compliance standards or AML standards, and also how we do things in terms of trade execution, settlements, and clarity. So eventually, this kind of virtual asset will look very close and be part of the overall mega financial system in Hong Kong. So, but anyway, thank you so much for talking with you, Tara. It's all the time. It's always my pleasure. And thank you for doing so much for Hong Kong.
Thank you, Leonard. Yeah, my pleasure talking to you.
Yep.
So that's what we talk about today.
Yeah.
Yeah. So
thank you.
Thank you.
Yeah.
Thank you.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
All right, we are back in action on the stage here at Hong Kong FinTech Week, and we're taking a look at a dynamo, Project Dynamo, in our next session powered by our friends at the BIS Innovation Hub. Now, hello, oh, they're coming right at me. They don't want to wait. They're like following me right up on stage. Here they come. All right, well, ladies and gentlemen, I'll give them an intro while they're seated. Let's hear, these guys are key. Let's hear it for them as they come. So, tokens have made their way into finance, into property and real estate, but now they are making their way into the wonderful world of trade. And we are going to find out about how tokens, ideally, and perhaps in the future, can help to reform the creaky old systems of trade finance and blow them away with something new. Here on stage today, we have Ernest Ho. Ernest Ho is the head of digital assets at the Hong Kong Monetary Authority, our central bank for Hong Kong. There we go. We have Mr. Pursuit Lee. Mr. Pursuit Lee is the head of international business at Link Logics. We also welcome from Standard Chartered Bank, Stephen Hu, who is their head of digital assets and trade and working capital. Great to have them. And the woman in charge of this from the BIS Innovation Hub, where she's the leader, is Lucy Wong. So Lucy, are you ready for this?
Yes, definitely.
All right, let's do it. Project Dynamo, go.
Right, thank you for the very warm introduction. Right, let's see if you can see our slides are not being loaded. No worries at all. So, hi everyone, my name is Lucy. I'm an advisor at the Bank for International Settlements Innovation Hub Hong Kong Center. And I have been the lead on Project Dynamo, a joint project with the Hong Kong Monetary Authority, together with private sector project partners, including Standard Chartered and Link Logics. So we closed the project in June this year. So very happy today that we have the opportunity at the FinTech Week to give you a taste of what we have delivered with the project. So Project Dynamo delivered a prototype platform using stablecoin or digital tokens for SME finance in a supply chain setting. So some of you might be very familiar with the funding challenges faced by SMEs. According to a World Bank report, in emerging markets alone, the funding gap faced by SMEs is $5.2 trillion every year. And according to another report, a significant part of SMEs are part of global supply chains, and their funding needs is in the majority related to trade finance. So in the current supply chain setting, most of the transactions are done on an open account basis. So that means the buyers don't pay until the ships have been shipped. And that creates a significant funding challenges on the suppliers. And if we look at a supply chain setting, when you get to the bottom of the supply chain, many of the suppliers are SMEs. So they face significant funding challenges, and they have to rely on their own savings to fund their manufacturing activities. So what we explored in Project Dynamo is to use stablecoin or digital token as a means of programmable and transferable means of settlement in the supply chain. So how does it work? So when on the prototype platform, we have the anchor buyer and a chain of suppliers. And we also have a digital token issuer on the same blockchain-based platform. And when the anchor buyer places a purchase order with the first-tier supplier, it at the same time transfers a digital token to that supplier. The token will be programmed with different conditions on it. The condition can be action-based. So for instance, the payment will only be effected if electronic bill of lading is issued on a third-party trade finance platform. And it could be time-based. For instance, the payment would only happen on or after a certain date. Or it could be data-based. So for instance, the payment would only be made if a certain supplier has met an ESG rating. So once the token is transferred to the tier 1 supplier, the supplier has 3 options of dealing with that token. So the first option is to hold on to that token until all the conditions programmed on the token are met, and then the supplier will get paid automatically because everything has been programmed on smart contracts. The second option is to transfer all or part of that token to its own suppliers. So that's the tier 2 supplier. So because the tier 1 supplier needs to subcontract part of the purchase order to the second tier supplier or purchase raw materials from the second tier supplier, so it needs to pay that second tier supplier. Instead of paying in cash or in other method of payment, it can use the token for that purpose. And the third option is to sell that token to the institutional investors that we think would be interested in provide funding to the suppliers. So what are the benefits for the institutional investors? They have, because it's a blockchain-based platform, it provides visibility to the investors on the entirety of that transaction. And it also provides them an opportunity to look at the past performance records of all the suppliers. So we believe that might potentially make a difference. So that's a quick summary of what Project Dynamo is about. So let me turn to our project partners. So Pursuit, I want to start with you first. LinkLogix has a long-established track record in supply chain finance. What do you see are the biggest benefits brought by tokenization and blockchain and smart contracts? And what do you see are the other potential use cases for this type of tokens?
Okay, sure. Thank you so much, Lucy, for the introduction. And obviously, it's my pleasure to be here on the stage. So speaking of tokenization, right, in LinkLogix, we have been focusing on a wide array of the Web3 initiatives. So Dynamo is for sure one of them, is where we see there is a huge opportunities where if we can utilize the stablecoin technologies and the smart contract technologies on the distributed ledger technologies to create something that is useful for the trade. And when it comes to trade, the problem we usually face is on, let's say, international cross-border transactions. How can you make sure that you can remit, let's say, with the traditional payment scheme, you remit with the SWIFT message, but they are usually subject to, let's say, different business day and all that, right? So the gap and all these, the settlement gap would be quite a concern. So with the tokenization technologies, we can sort of make all these transactions on the blockchain, and all blockchain transactions, they are immediately effected, irrevocable, and so we can make these to be circulated on a cross-border basis internationally. And then speaking of what are the interesting use cases that we can think of, apart from just financing, one thing I can, and I strongly advocate to all the users along the chain to try out, is the sustainability-related payment. So think about, like, as a buyer, you may be looking for different avenues to try to influence your suppliers in behaving well in terms of meeting the ESG targets. For example, like your Scope 3 emission targets, it pertains to how the suppliers emit the carbon gas that will also affect your own Scope 3 target. So can we sort of introduce them in solution where the buyer can then make payments with some like ESG targets, and then the suppliers will only be able to receive these payments if the targets are being met. So if you can really push this forward, commercialize it, then it will be a great opportunity.
Great, thank you, Pursuit. So Stephen, let me turn to you. So during the project, we explored 3 options of structuring the tokens. So we worked on structuring backing the token one-to-one with fiat currency, and put aside in the custodian account. The second option was to back it one-to-one with deposits in a bank account. And then the third option that we explored was backing it with a letter of guarantee either from the anchor buyer itself or from the anchor buyer's relationship bank. So can you share with us in terms of what do you see are the pros and cons of each type of structuring the token? And what do you see as the commercial viability of each option of structuring the tokens?
Sure. Standard Chartered participation in Project Dynamo actually is part of our efforts to drive the real-world utility of the digital assets. So in this case, as you mentioned, these digital tokens were used to facilitate the SME financing, and in turn, it will help to stimulate the growth of the real economy. So I think the bigger picture is that as an industry, we're at a crossroad. So the path we choose today will have long-lasting implications to the future of the money and the financial infrastructure. Therefore, it's very important for commercial bank to take a more proactive approach to evaluate the different options of the money and build asset and liability network that is ready for the next decade. Fiat currency-backed digital tokens are easy to understand. It requires less effort in terms of market education. I think it's also more likely to achieve the regulatory and the legal clarity in market, for example, in Singapore or in Hong Kong. And there are rules in place to regulate the governance, the issuance, the stabilization mechanism, the wallet to support such tokens, for example, both in Hong Kong and in Singapore. And we have started to see more and more regulators giving priority to regulate the tokens actually that are proposed to reference to one or more fiat currencies. But the commercial challenge is really that not all the anchor buyer enterprises in the supply chain may be motivated to adopt the fully cash-backed digital token because this will have a liquidity and cash flow implications to their businesses, right? And we have tested to apply programmability to the tokens, for example, applying a lock and lock feature, very similar to the way that we do earmarking today, and achieve some promising results from technology standpoint. But there are more work required to reach a conclusion. But if you, on the other hand, if you look at the digital token backing by a bank guarantee or a corporate guarantee, I think there will be less implication in terms of liquidity and cash flow to the anchor buyer. So there's a chance to trigger a chain effect of adoption starting from the buyer side in the supply chain. But it is, I think it's unlikely to fall within the current stablecoin regimes, I think in both Hong Kong and also in Singapore, because it does not fulfill the cash and cash equivalent reserve requirements. And ordinarily, the guarantee shouldn't be considered as a cash equivalent, right? So, so in a nutshell, the commercial viability is really a function of legal requirements, regulations, the business needs, and the client demands. I think the collaboration, public-private partnership are going to be the key to achieve the adoption commercially.
Very well said, Stephen, and about the public and private collaboration. That brings us to our public sector representative. Ernest, you are the head of digital finance at the HKMA. The division was set up a year ago. So first of all, happy anniversary. Can you share with us, like, what have been your priorities for the past year? And looking forward, I mean, what are your takeaways from this particular project? And what are your priorities, say, for the next 3 to 5 years?
Yeah, sure. Thank you, Lucy. So yeah, as Lucy said, I'm now leading a new division within the HKMA. It's called Digital Finance Division. Obviously, one of the important jobs of us is our team is to coordinate all the virtual asset-related initiatives internally within the HMA, but also we're also tasked to think about and looked into, for example, all sort of emerging technologies that could potentially be transformative, not only to the daily work of the HMA, but also to the broader financial sector. And we looked at it not only from a technology standpoint, but also from more importantly, from a policy and regulatory standpoint. And because of that, for example, we talk about our priorities right now in the near term. Right now, our team is working on the stablecoin regulatory regime in Hong Kong. Our plan is to implement it by hopefully next year, subject to legislative processes. And also in the very near term, in due course, we are going to publish a public consultation paper on our legislative proposal. So please stay tuned. Give us any feedback, comments you might have. Anything would be highly appreciated. In terms of Project Dynamo, to me, it's exactly the kind of project that we want to participate in, and it's a pleasure for us to be a part of it for just many different reasons. For example, it's an innovative use of tokens. It has we talked about different kinds of tokens, whether it's stablecoin, fiat-backed stablecoin, or other types of tokens. And also, it touches on a lot of the important, things that we as HMA want to achieve. For example, financial inclusion, and I think Pursuit talk about sustainability. These are all the stuff that we want to achieve better with, technological innovation. So I think this is a project that we are very, very honored to be part of, and I'm sure it's going to be a successful project down the road.
Thank you very much. And actually now, Pursuit, let me come back to you. We closed the project in June, and can you give us a view on what has been your progress in terms of commercialization of the project, really implemented in real life? What do you see are the main adoption challenges? What's stopping us from reaping the benefits from this sort of innovation?
Okay, sure. So regarding the commercialization, obviously we are doing something on that, and hopefully by early next year we can make some announcements. So to stay tuned with us. And then as for challenges, I see I echo with Stephen's point as well. So regarding the regulatory certainty and also the inconsistency of the regulations, can a token be issued in one country be used in another country? So all that will sort of impact the usability of the token. Because we are talking about trade is just a cross-border thing by nature. And another aspect is perhaps on education. So although the token itself has a bunch of really good features, it may take time for the audience to understand what the token is about. And all that will take time, but obviously we are working hard on that, and hopefully we can do something. Sure.
Great, that's very good to hear. And Stephen, when we talked about trade finance, many people think that's the home turf of banks, right? But now we're actually presenting the case where a FinTech firm could come in and provide trade finance. So what do you see are the competitive advantages of a bank in the increasingly digitalized world? And what are the relevant initiatives Standard Chartered is undertaking?
2023, I would say, is really the first year in the era of a real-world asset tokenization. So if you see Standard Chartered as well as other mainstream financial institutions have already embarked on the journey of tokenization to prepare our client for the future new economy. In terms of competitive advantage, I think there's at least several things I want to highlight here. I think the first is actually the asset. There are many tokenization initiatives at this moment that are aiming to drive the demand, but I think the challenge down the road is to ensure there's a sufficient supply of the asset. Banks, commercial banks, have a strong origination capacity and have a large asset base, which is, to me, a killer advantages in the tokenized economy. That will be the first competitive advantage, I would say. So I think the second one is actually more from the trust perspective. Unlike cryptocurrencies, the asset tokenization requires an instant and a smooth connection between the blockchain and also the real world to ensure the underlying assets are real, are not misused, and also not being double spent. So there is a need for a centralized authority. Through the various pilots that we have done, we have already concluded that it is not realistic to achieve a full scale of a decentralization in the asset tokenization world. So the banks are the trust anchors, and banks also is the bridge between the real world and also the asset. So apart from Project Dynamo, we have also focused on the use case of originate to distribute. I think we have collaborated with the Link Lodges to develop an initial token offering platform that repackage thousands of trade and working capital loans into fungible token that can be traded in the secondary market. So a lot of interesting stuff is going on. I think we are looking at more from both the origination to the distribution side, the full life cycle of those assets.
Great, that's very great to hear. And Ernest, I really want to end this panel in a very forward-looking note. So can you share with us, what do you see as the future of digital finance in Hong Kong? And for lots of the companies who are present and already operating in Hong Kong today, or those who are considering starting their business in Hong Kong in the sector of digital finance, what could they expect? What should they watch out for?
Yeah, sure. It's indeed a forward-looking question. I don't have a crystal ball, honestly, but I can talk all day about Hong Kong, FinTech, and also the fact that regulators, financial regulators like the HMA, SFC, we all together want to provide regulatory clarity to everybody who are interested in FinTech and even crypto, virtual asset space. But I think what I'm going to talk about now is really how I feel about this year. I was in the FinTech week last year, and this year I'm here. I can truly feel that things are happening here in Hong Kong. Just think about all the interesting discussion you had with the people next to you, everybody in this conference and also during the whole week. Just think about the enthusiasm of the banking sector and also other ecosystem partners like Link Lodges about all this. And I feel like it just tells me that things are happening in Hong Kong, and it just keeps me so busy every day. And I really hope that this will continue, and the Hong Kong FinTech journey, and also not just FinTech, to be honest, the whole overall broader technology journey is just beginning. We're going to be just carry on with the journey and just keep going. And so I think again, I can talk about all day about what's the future going to be like in Hong Kong in terms of digital finance. But again, I don't have a crystal ball, but I feel like the momentum is there, and I feel like I can certainly feel the enthusiasm of everybody who want to be part of this.
Okay, thank you so much for wrapping up our panel in such an optimistic and positive and uplifting way. So I'll maybe just turn to the rest of the panelists and see if they have any closing remarks that you want to add that we haven't touched upon.
Sure, maybe I'll take it first. So for me, I myself am super enthusiastic about the future of the Web3 technologies and the application of obviously tokenization in this aspect into international trade. For me, I personally believe these marry really well each other. So I really hope that with the proper regulatory clarities, we are going to do something big and do something real here. Yeah.
Yeah, I guess to pursue point, I think there was discussion about fiat-backed stablecoin and potential use cases and other type of tokens with even possibly more interesting use cases. I think obviously we're working on the stablecoin regime right now, but the market is just evolving so quickly every day. I think we are obviously ready to listen to the market's feedback and also sort of just change or revise our regime if needed. If that's what the market think is going to be interesting and important for them. So again, just want to do some advertising here again. So we're going to publish a public consultation paper very soon. Please feel free to find some time to read through it and give us more comments and feedbacks. Thank you.
Right. Any last words for Stephen?
I think collaboration is going to be the key. This is such a new space, and tokenization is a journey that we are all part of, right? So we feel very privileged to work with the FinTech partners, also with the regulators to be on the same journey. I think we have the same destination, and as long as we collaborate, work together, I think we can achieve a very good outcome and bring you a new tokenized economy to life.
Right. Very well said. Thank you. So, well, unfortunately, that's the end of our panel. If you want to understand further about Project Dynamo, please feel free to search BIS Innovation Hub Project Dynamo. you'll be able to find our website, and you will be able to download the full project report. And this year, for the first time, the BIS Innovation Hub has set up a booth here at FinTech Week. Our booth is right next to the Hong Kong GBA stage. Please feel free to drop by. You'll be able to see the innovation projects undertaken by our global centers. And we are also joined by the central banks of Norway, Malaysia, and Thailand, presenting their very important innovation initiatives. So please feel free to stop by, talk to us if you have questions about our projects. And with that, I would say we want to wish you a very successful time here at the FinTech Week. And thank you for coming to our panel. And please give it up to our excellent panelists.
All right, thank you very much for that dynamic panel talking about Project Dynamo. I am going to give you guys a quick heads up. The next session is in Putonghua. So if you have one of the simultaneous interpretation devices, put it on now. And if you don't, you might want to run and grab one and bring it back, because we are introducing our next speaker who's going to talk about something that is like very, very hot topic right now, which is artificial intelligence. Now, people know that AI is big, and I'm sure everybody in this room knows about the next level, which knows that it is large language learning models that are really, this is the latest form of AI that people are talking about. Of course, there have been other forms of AI in play for quite some time. But we're going to be talking about how it is going to arrive, how it is going to impact the world of finance. And we're going to be doing that with Mr. Zhang Ning. Mr. Zhang Ning is the Vice General Manager and the CTO at Mashang Consumer Finance. And he's going to be bringing that perspective of how AI is going to change the world of finance. So here he comes, Mr. Zhang Ning. Hey, let's hear it for him. Hey.
大家上午好，今天我跟大家想分享的是如何利用大规模数据决策的技术和大模型进行金融创新啊。我是马上消费的蒋宁啊，我是首席技术官啊。那开篇呢，我想跟大家简单介绍一下我们公司的基本情况。我们是一家持有中国银保监会消费金融牌照的消费金融公司，同时也是一家 AI 驱动的科技公司。我们2015年成立，到现在为止，已经服务1.8亿的中国用户。我们现在有2000名数据分析科学家和人工智能的专家，现在在参与63项中国金融科技的标准和行业标准的制定。同时，我们在深度利用人工智能和大数据的技术，在领导国家3项的重大金融科技工程，同时跟中国19所大学在金融领域、在人工智能领域探索最新的前沿技术。那到今年的10月份为止，我们的收入大约在100亿人民币左右。成立8年，累加上税78亿啊。那我们希望用数字化的决策技术，能构建一个全新的、崭新的零售金融平台。那下面是我们在数据决策和人工智能领域我们一些基本的实践的成果。那分3个部分。第一个部分是大规模数据的基础设施，第二部分是基于大规模数据基础设施我们做的人工智能技术的探索，第3部分是我们如何把它落地到零售金融场景的。所以第一部分大家可以看到，我们作为一家独立的金融科技公司，今天拥有接近100个批的数据，有将近10万以上个关于人的行为特征的变量，用于营销和风险控制。同时，我们底层还有20多万张基本的客户的风险行为以及它的活跃的基本数据。那在第2个领域，我们把这些数据构建了一个基于大规模数据决策的这样一个体系。传统的机器学习，可能我们常见的是几万变量、几十万特征， 那今天我们需要构建的是一个上亿的特征，并且这特征是比较稀疏的。那今天可以看到，我们今天可以基于每天用户1000万个他的个性化的行为，做出个性化的营销和风险的判断。我们每天可以做上亿次的模型的计算，用于客户个性化的营销策略和风险控制。那同时，我们现在每秒可以处理150万特征的计算。那这些都是我们把数据的技术由传统的机器学习延伸到大规模特征计算以及大规模特征的模型的计算体系下开展我们的零售金融活动。那第3部分是关于我们在零售金融的一些取得的成绩。大家可以看到，我们成立8年时间，基本今天注册了1.8亿的用户，服务了几千万的中国的乡镇的普通市民。同时，我们围绕零售金融的6大风险场景，构建了一个实时的、全方位的风险管理的体系。同时，跟100多家中国的消费场景进行一个开放性的一个合作。那这是我们在过往的几年里面一些实践。那下面我要跟大家分享的是我们对未来的思考，以及我们的一些目标，我们的一些架构，我们的一些业务模式。未来基于大数据，特别是大模型，我们有哪些挑战？我们有哪些机会呢？左侧大家可以看到，今天在一个技术高度变化的这样一个世界里，消费者的行为每天也都发生巨大的变化。我们到底如何感知消费者这些多变的行为？第二是数据呈几何式的增长，我们如何有效地管理这些数据，让数据产生价值？第3个是我们如何能够保定稳定的一些人工智能的算力第4是如何我们能构建一个新型的基于实时决策的这样一个体系，来帮助我们能进行自适应式的自动化的一些营销和风控。那我们觉得关键的未来的几个重要的一些战略或者趋势，就是我们如何拥抱一个能够实时决策，能用算法替代人的先验经验决策的这样一个新型的组织，同时能够构建一个可产生稳定结果，能够让人工智能按照人的预期一样，在金融领域能够可靠的为我们服务的新型的这样一个架构。同时的话，我们能够构建一个跟我们的合作伙伴能够进行群体智能的这样新型的一个体系。那我们把这个我们的思考分成了4个部分：数据、算法、算力，还有个平台。那我们今天在数据领域，我们希望能构建一个实时跟离线结合，客户的稳定态的数据跟客户的高度稀疏特征的数据结合，能够把客户的行为特征变成一种可计算的、可推理的宝贵的数据资产。在算法领域，我们希望能突破基于时间序列的一些因果关系的推断，让我们的决策能够从鲜艳的经验里面，通过大模型 通过数据能找到之间的逻辑关系。在计算领域，我们希望能够构建新型的算力平台，能够解决跨云、线上线下多云这样一个稳定的人工智能的计算的一个平台。在体系领域，我们希望能够实现大规模仿真，然后让我们的决策能够在这种大规模仿真中找到因果的关系，找到用户今天到底在思考什么，进而取代鲜艳的经验。那在算法领域，我们特别有3个领域的思考。第一个是在线的持续学习。那在线的持续学习在以往都是互联网专属的一个技术领域，但今天在金融领域，我们要把它变成一种新的武器。那它能够让我们利用最新的大模型的 transformer 的这种算法，解决时序列的稀疏特征的这些用户行为，进而能够进行线上线下的实时推理预测，能基于用户的行为，能做出快速的、最佳的、个性化的判断和反应。第二个是我们希望能构建一个能够组合式的新的人工智能平台。大模型对传统的深度学习并不是一个取代，而是合作的关系。我们如何让大模型和传统的几千个人工智能的普通的模型有效的组合，而完成一个端对端的一个金融领域的任务。那最后一个是金融大模型，它有本质的一个要求，就是安全、合规，如何用对抗学习来解决模型的鲁棒性问题、模型的安全问题、模型的合规问题。因为金融领域，我们要保证100%的金融安全、交易的安全。那这就是我们在思考的3个算法的领域。那围绕这些思考，我们定了6个目标。首先是让我们的训练的数据更加广泛，包括非结构化的数据、声音、视频，让我们训练的成本更低，能够找到更好的训练的方法，包括模型增流的技术，然后让我们的计算成本更加稳定、更加有优势，同时让我们的合规更加全面，让我们的交易更加安全，让金融大模型能全方位覆盖我们金融的营销、获客全价值链的各个环节。那围绕这个我们的思考，我们把它进行了一个结构化的梳理。那这个结构包括6个领域，从基础的理解到模型的推理能力，到组合能力，到以及在金融领域落地的所需要的创造能力，以及未来在金融领域所需要的安全合规能力。那这里面我举一个特别重要的，在金融领域我们大模型的安全合规的能力。那这是一个自动化营销的例子。那今天我们要完成一个基于客户行为的非常个性化的线上的事件的营销，我们要预测用户的意图，我们要自动产生这次基于用户意图的一些内容。那这个内容就包括内容的安全、合规，以及如何识别客户是不是有一些非法的意图，我们也简直称为对抗学习。那这样的话，才能保证金融大模型它的创造能力的同时，具备安全、合规的能力的。那这是我们的希望未来能打造的业务模式。30%，我们希望持续在零售金融领域创新， 50%，我们希望利用大模型和大规模数据决策的力量，构建一个开放的平台，服务我们的生态，服务我们的银行、保险这些合作伙伴。那还有20%，我们希望我们的收入能够完全来自于我们的人工智能的基础产品。那为此，我们现在累加已经申请了1500项专利，覆盖了零售金融的营销、获客、风险、运营的各个环节。那我们希望在2024年年底，我们的科技的服务收入能超过70%。我们预计在今年的2023年年底，我们的科技服务收入能够过半，能够。我们正在经历一个巨大的科技变革的时代，它为我们提供了一个广泛的一个变革的机会。那我们希望和我们的合作伙伴能共同打造一个开放、融合的新型的数字生态。好，谢谢大家。
谢谢张俊，谢谢张俊，非常好，非常好。There are many mainland technology companies that have grown and become unicorns, and then there's so many of them. There's like herds of unicorns, and then they grow up, become these ginormous multinational, multi-billion-dollar ventures that conquer the world. But for many of them, in the early days, their path to success is supercharged by financial know-how and connections from Hong Kong. And so we're going to hear from two experts in the field now, and they will let you know how you can tap into that two-way flow of entrepreneurial verve and technological expertise and putting it together with the financial know-how that allows them to head off into the stratosphere. We're going to be welcoming Henry Yuan. Henry Yuan is the general manager at ABCI Investment Management, and he's going to be joined by Mr. Jonathan Wu, who is the founding partner at Wings Capital Ventures, and they're going to let us know about this magical, wonderful combination of entrepreneurship, technology, and finance, and where the magic happens. So, gentlemen, come on down. Here they come. All right. Oh, I'm doing a fist bump. All right, we're doing it. Go get them, guys.
Good afternoon. So very happy to be here at Hong Kong FinTech Week 2023. Perhaps we can start off with some introduction, and then we go right into three interesting topics. Henry, why don't you start first?
Sure. Thanks, Jonathan. Really glad to be here. Just a brief introduction without too much advertising. ABCI is part of the Agricultural Bank of China. I think based on the recent numbers, we're probably the second largest bank in China. Myself, the general manager for ABCI Investment Management, we run a portfolio across public and private equity and debt. Myself actually been in Hong Kong since 2005. Before that, worked in Beijing and in the US. I actually never thought I would be in Hong Kong for such a long time. That's probably the beauty of Hong Kong. Jonathan and I, we're probably typical of the financial services professionals in Hong Kong. Some are from international and converted to be a local. And I think, Jonathan, you are the real local,
yes.
Hong Kong.
Yes, yes. So yeah, like Henry said, I was born and raised here, a Hong Kong local. I actually went to a local school as well. And then I studied in US, did some investment banking, and then returned to Hong Kong around 2008. Then on, I think the next 10 years, I was doing China private equity. And then in recent years, I shift gears to Hong Kong VC. So now I run my own VC firm, Wings Capital Ventures. We are focusing on Hong Kong and Southeast Asia, FinTech and SaaS opportunities. I guess first topic, I think a lot of people might be curious. Henry, there's always an eye for international in the Chinese SOE platforms, banking platforms, investment platforms. Why is this eye so important? Can you give us more color about what's the strategy and rationale behind this?
Yeah, sure. Actually, Johnson, you hit the nail on the head. I think the international, particularly at this moment, is very crucial. I would also add on 2 more I's: is international, but also innovation and investment. That would make it 3 I's. I think if you look at the FinTech space and the financial services development, particularly in China, the rapid growth from the something like Alipay to replace the credit cards, and you see the WeChat replace Red Packet, and all those days are gone. And now we're in a stage we really need really heavy lifting. A lot of things is you need to work out the details, and you look at how to leverage the most advanced technology, go very deep into financial services, the details. You work with the regulators, have a frequent dialogue, and really come up with some innovative product and solutions. And that really need a joint effort, both from the product people, from the entrepreneurs, from the investors, even also from some of the established financial institutions. They all work together. That's why Hong Kong play a very crucial role. And this is something you can't find from other places. I give you an example. You see the Invest HK really did a great job for the FinTech Week, and they came up with the themes names as a redefined FinTech. That's a really bold and innovative theme. And you see all the regulators, from HKMA, from different places, they talk about a lot of details, from the fund platform products, from the payment system, try to reduce the consumer cost. A lot of things go to the details of the financial services and tech. So this is something you really not can be able to find from other places. It's only Hong Kong uniquely positioned and can leverage all this, bring all the talents globally, but also locally, and make them deep-rooted here, let them innovate. And that is the unique beauty of the Hong Kong.
Absolutely agree. I think Hong Kong is a great city for, I guess, mainland or international business people to do business here and get something exciting going on. I think in the past 10 years that I've been working in Hong Kong or mainland China, what I've seen is a very good springboard for, I think 10 years ago it was good for the international brands to get into mainland China. Looked at these Central, Causeway Bay, Tsim Sha Tsui, full of like flagship stores of the international brands. And then they will open like 500 stores in mainland China. And then recent years, obviously a lot of financial institutions and probably some consumer brands are using Hong Kong as a springboard to go global, such as, I think Meituan is a good example. Like they started this Kita international brand. In fact, I had Kita for lunch before this talk. And then we see a lot of these Suan Cai Yu as well. Suan Cai Yu opening up in Hong Kong and other like spicy hot pot, etc. So these are more consumer brands. For financial businesses, I think we're relying on the infrastructure here, common law, free flow of capital, even international flights. I think we have the most direct international flights in the entire China to global. And also the talent pool here. We have developed, I think over the past 50 years, very strong talent for professional services. Big Four accounting firms, Magic Circle law firms, and recently some leading Chinese accounting and law firms as well. And for asset management, we have Cayman law firms too, right? So these are great infrastructure for a springboard that goes both directions. I think next topic, I guess maybe Henry. Can you give us some color about like when ABCI makes investments, do you consider the global strategy for the targets, and what are the potentials to expand from mainland to global?
Yeah, sure, Johnson. I think yes, we do. Many of our investment targets we actually look at it to have a global strategy. Some of them maybe they want to try to leverage the Hong Kong's infrastructure, regulatory framework, and maybe they want to set up their international headquarters over here. They have a very well developed products in mainland China already. They're trying to find the next growth engine. Some of the firms, maybe they are here in Hong Kong, they come up innovative solutions, and they looking for to attract global capital to invest in China. I give you an example, like MicroConnect. We invested in the B round. They recently did a C round, brought all those global investors like from the Middle East, from the European countries, from the US, from Southeast Asia, and also from Greater China, including Meituan. This is a perfect example of the startups, the fintech firms in Hong Kong here. They attract the global capital, and they also take advantage of the digitalization in mainland China, the big consumer market in mainland China. Like the funders of MicroConnect and Charles and Gary, they got a lot of experience in the professional financial services area, and they chose an area which has a huge untapped potential, which is quite different from what they previously been working on. And they come up with a solution and also innovative product, a DRC, which is not fixed income, not equity, but also they establish the exchange as well. So those are the type of things you can see. They could from an angle of the financial services to gain a lot of experience from the established financial institutions, and they work with the team, with the technology team, with the regulators, come up with an innovative solution, and could represent the future of financial services. I think it's from going forward, you can see, given what's been developed in AI, data analytics, data processing, a lot of technologies, blockchain, and also the regulatory support, you could see many more startups emerge to be very successful in the specific detailed segment areas, not from the established financial institutions, but from those startups, because you really need a corporate structure, a team, and also the capital to support this type of innovation. I mean, you can't just see some of the teams just running meetings, and then a lot of meetings, and constrained by those structure, which sort of to some extent preventing the innovation. So these those startups with Hong Kong's innovative ecosystem support, they could very well be very successful, and that's why we can see a lot of global talents be attracted to Hong Kong, and hopefully we will work with a lot of partners to develop an innovative ecosystem to support this. In the meantime, we actually been working with Hong Kong Cyberport to try to do a lot of innovative and meaningful things to support this. We're more than happy to work with many of the partners.
Great, great. So MicroConnect is a great example. I guess I can maybe add a couple to the list. So two of them from my portfolio company. One of them is called Coherent. It's an insurance tech company that started out of Hong Kong. In fact, it's founded by an Australian expat. So it's a very unique startup that we found maybe 4 or 5 years ago. They started doing insurance tech, serving global insurance companies in Hong Kong, and then quickly expanded into Southeast Asia, and now quickly expanding into insurance and banking sectors in the US. So it's a classic example of like international talent coming to Hong Kong and starting a new business in FinTech and then expanding globally. So I think a lot of the startups, including MicroConnect or names in our portfolio, benefited from the government subsidies, government initiatives, and funding. So you mentioned Cyberport. I myself also very active in the Cyberport community. I think Hong Kong Science Park also helped us a lot. And Henry, do you have an insight about how are these funding specifically help the ecosystem, is there any pockets of areas that we need more funding or more support?
Yeah, sure. I think, Johnson, you brought a very important point. I think we're in a stage of, we need to be more innovative to develop this Hong Kong ecosystem to support those startups, particularly in the financial services or FinTech area. Given what has been developed in the technology front, it's really, those mind-blowing breakthroughs, I think really lower the bar for the innovation. And a lot of things could happen because there's many crossover, many, technology can be put into place to make a lot of things could happen we never imagined. We ourselves need to have an entrepreneurship when we try to design this ecosystem. And you need the long-term capital. I think you need a lot of support and resources we can give those startups. Either give them a guidance in terms of product, whether they could be the wealth management area, insurance, banking, payment, all kinds of things. In Hong Kong, we got tons of international financial institutions. We got a lot of transactions, a lot of flows, a lot of experience, very well-established infrastructure, and also the regulatory framework. And all those things, we should try to help and use this to help those startups and equip them with the long-term capital. And maybe to some extent, we should develop a so-called super app. It's not a real super app, but it's something really super powerful to think of the things, what the startup they need, what kind of services they need, what support they will need. So let them focus on the segmented area, and also let them to collaborate with other teams and also the established financial institutions to inspire each other, to let them to come up with a solution, kind of maybe a comprehensive, holistic solution. So I think that's the most important thing we should do. Obviously, that will need a joint efforts, from the private money, from the public. The good things is we see a lot of initiatives from Hong Kong regulators. As I mentioned earlier, a lot of good things, a lot of technical details were done by the regulators. So need a frequent dialogue and need a very comprehensive and innovative approach to develop this ecosystem.
Wonderful insights. I guess I can add to that is, from my experience in the past years, we have probably looked at almost 200 startups in Hong Kong, many of them from Hong Kong Science Park. And when you talk about inspiration, I totally feel that, because we have met a lot of entrepreneurs from mainland China, and when they came to Hong Kong, they had an idea, and then after knowing the market, meeting with different people and international investors, they changed their business model. Maybe they should tweak their apps a little bit, and also like adapt to the international market. So I think it's a very good dynamics and interactions to happen in Hong Kong and Science Park, Cyberport, etc. And I think the other point I want to make is we're seeing obviously more local capital going into VC, but also some international VC firms are coming to set up offices in Hong Kong as well. These are great initiatives, but I think a lot of the government funding is focusing on maybe the earlier stage and then later stage, but the middle pocket is a bit lack of capital at this moment, which is where we play in. So in a way, it's good for us, but we would also like to see more and more capital in the sort of A round or pre-A or A+, that type of segment. And also I think a lot of the startups are in the FinTech space. So we would like to see more variety of startups, such as I think FinTech, e-commerce, and SaaS are the largest, but I think PropTech also has a big potential because we have a huge property market and a lot of the great property developers and property investors in Hong Kong and international as well. So I think these are the opportunities that we see, and probably what we can do better in our ecosystem. So these are the sort of startup and capital side, but I think the foundation is also very solid that we mentioned with the infrastructure, et cetera. And I think the government is doing a lot of great initiatives that help us to thrive. Such as I think Invest Hong Kong is organizing this great event, and I think they are organizing similar events overseas as well. So we're very glad to see these efforts by the government to, first of all, make the local ecosystem better and also attract talents, capital, and ideas from international.
Yeah, I couldn't agree with you more, Jonathan. I think it's, back to the things we discussed, I think the perfect timing for Hong Kong to really attract a lot of, international talents to come over here, create an environment to support them, make them successful, use less time to be successful, and they have a higher possibility to succeed. I have to say, Invest HK really did a fantastic job to organize this Hong Kong FinTech Week. And we all know in China, they have the Spring Festival Gala Chun Wan every year. It's like, as time goes on, many years it's getting more and more difficult. I would imagine probably that should be the case for Hong Kong FinTech Week. However, this year certainly not. I mean, you can see a lot of global tenants, VCs, investors, startups, talents to come over to this and inspire each other. It will be a great success.
Great, Henry. So just a quick wrap up. I guess we can kind of draw a conclusion that it's a great springboard for international business going to China and mainland going abroad, right? And then the Hong Kong government is helping us to develop this VC ecosystem in Hong Kong. So thank you very much. I think, hope you have a great afternoon and rest of the event.
Thank you.
Thank you.
All right, thank you very much to both of you gentlemen. Great job up there, wonderful. And as long as the Chinese entrepreneurs keep thinking up new businesses, Hong Kong will keep the money flowing. There's going to be a lot of talk of AI. It is inescapable. It is reaching into all our lives. And, we've heard some talk up here on this stage, but our next couple of speakers, they want to dig a little bit deeper. They want to know, they want to see, really sit down and say, all right. How much of this is like riding up the Gartner hype cycle, and how much of this is going to be real? And they're in a position to do so. A lot of you know already Christy Schwartz. She's been a lot on this stage over the last couple of days. The FinTech go-to legal eagle in Hong Kong for many years, doing a lot of work in Dubai and the Middle East and other parts of the world as well. She's going to be joined on stage by Stephen Choi, who is the co-founder and CEO of Ask Laura. And they're going to get into this. Here they come. Christy Schwartz, bring out your guy and let's do this. Hey, all right.
Hello and good afternoon, everyone, and thanks for staying through your lunch break to have us speak. I'd like to first basically take a look at an introduction to our speaker, Stephen Choi. The reason being is he's super impressive and knows a heck of a lot about this. When I was preparing for this talk today, this fireside chat, there were a lot of misconceptions on my part, and I think that Stephen's actually able to set us right. Hence why we've named this panel Beyond the Hype, the Real Impact of AI in FinTech. So just reading it out, Stephen, as Andrew mentioned, is the co-founder and CTO of Ask Laura, which is a SFC licensed stock trading platform, and has basically a lot of experience. He was previously a quant trader and fund manager of all the usual suspects, Merrill Lynch, HSBC, Citi, and Marriott Asset Management. He also has written many papers and, of course, speaks at a lot of conferences such as this on this topic. Stephen holds an MS in financial mathematics from University of Chicago and a bachelor's degree from Northwestern University. So, Stephen, let's just jump right into it. When we were talking to prepare for this, I think there's a lot of misconceptions. So let's start from the basics. For most people, I think every single panel almost has spoken about AI since I've been here for the last 2 days. What is it really about? Did it come out of the blue? I was of the misconception that, wow, it just came out of the blue, ChatGPT, out of nowhere. Yeah. Obviously, it didn't.
Christy, thanks for the intro. We're Ask Laura, and we've been doing
AI and generative AI into finance and advisory. And actually, it's the question that a lot of people kind of are afraid to ask, saying that, you know, where did this come out of? It's everywhere now. Yeah. It's the dominant storyline. But all the technology and all these theoretical advancements, they're like 10 years old. Vectorization, tokenization, embedding. So they're all stuff that kind of started 10, 7, 5 years ago. I tell you that Ask Laura, we've been doing this for 5 years. About early 2021, we first developed our first version of our model. And we asked it, because this is when Ukraine war just started, we asked it, what stocks do well in war? And then it came back and it said Disney, Mickey Mouse Disney. And it said it with such high conviction that we really had to look through all the data. And what we did was we got this model to look at earnings reports, news, and go through all millions and millions of data sources. And it said Disney because Disney has, at that time, Infinity Wars, Avengers Infinity Wars breaks box office records, Star Wars merchandise gave it new revenues, new record revenues. So the model said, in war, Disney does best. So even back then, it wasn't really that smart enough to understand what war is. So how did it kind of get to this kind of real intelligence? Is that it took a company to make a bet. Starting about 4 years ago, they started putting in tens of millions, hundreds of millions to train a multiple 100 billion parameter model and look at 100 billions of words and train it just kind of almost brute force. So you could think that you had to make this bet without knowing that there's a market, there's a product market fit, right. And they just kind of went through it. And then this became something that was possible because OpenAI at the time was not profit. They didn't have to look at budgetary constraints and just made that bet. And this is after 2-3 years. Last year, that's when ChatGPT kind of just really got intelligent enough so that we could start using it for a lot of different purposes.
Now we talk about being intelligent enough, but one of the things we've mentioned is people also talk about hallucinations and these large language modes going off track. Why does this happen? And does it impact really what you're looking at in the FinTech or financial solutions space?
So the big thing of why it became so kind of interesting and popular is that it started talking like a human. And if you think about how a robot talks, a robot kind of gives you, predefined, generated, repeats things. And ChatGPT can actually go and do different ways of talking, like a human would. You would talk about in this perspective, you would talk about this other perspective, maybe change your line of reasoning. And that's actually possible because in these large models, there's a bit of probability, a chance. There's a bit of randomness, just like how we can talk in different ways, so that that's why it can actually go off stream. It doesn't always give you exactly, the same thing twice. And this is part of why there's a bit of problems and challenges. There's a bit of reasons why it goes off track. Right. And this is kind of the problems that it is for really, really mission critical domains.
So what are the good uses in a generative AI? And will it replace us? I mean, I've always heard for years that Watson, I think, from IBM, we're going to replace lawyers, and some people were saying, yay to that. Replacing the lawyers would be great. But so what are the really good uses, and is it really going to replace humans and jobs?
So even going beyond that, kind of these days in the headlines among the AI geeks is that there's a bunch of people saying that this is Skynet, this is Terminator, we're being extinct in 20, 30 years. Another one saying it's a little bit overboard. Talking about the hallucinations, the Disney and war, I'm actually in the non-Skynet camp. And I think the reason why is, you could kind of think of two different ways. One is there's a generation, like creating content part of it, that's really good right now. And then there's a predictive part that it's not really yet sufficient. And you could kind of think right now of these LLMs like, I mean, when we were younger, there were these TV shows, Robot Android comes up and, you know, they mistake something, take something literally, hilarity ensues, and you have a comedy 30-minute show. It's almost kind of like that.
Right.
So it could generate things that are interesting and pretty human-like, but it can't make the predictions. So if you kind of think about in the space of, I guess, in legal or in finance or even in medical, these mission-critical domains, the real high expertise, where we make the predictions, is still not there. It's kind of like having this kind of young android just read through every single book on earth. So the generations there, I think it's more on the first line of sales, the first line of interaction in all of our fields where it becomes more accessible and more possible is where there's a lot of use case.
In that instance then, would you say that from the financial tech perspective that it's there yet, or do we have some time to go?
I think in finance, there's a lot of, we call it in statistics, precision and recall. So you can try to pick the right stocks, go for a hedge fund, you know, be the real, you know, top-notch Warren Buffett. That is actually quite difficult because that takes a lot of expertise, a lot of prediction. I think there's also points where you could kind of say, this is something that you shouldn't do, and be able to explain it nicely. So if you're in your 70s, in your retirement, you shouldn't go try doing GameStop. This is not something you should do. Look for some yields, tax. These are the kind of general, you know, pretty well-established ideas that if explained in a very nice, you know, human-like way, can be accessible to anyone. So you don't need to go to a real, you know, very top-notch private banker. You don't need to get these really expertise stuff from the senior bankers, the senior lawyers.
Will we overcome this? And if so, maybe when? Is it a 2-year, 5-year, even longer prediction?
So when we first started getting into this AI 5 years ago, this was about the kind of the technology and theory advancements in vision. So there's all this theory, academic papers on how to make models to be able to recognize humans and movements and tell the difference between objects. And it gets to a certain degree. And then after that, it was all implementation. So you've got sense time right around here. All of these things, you could just go on AWS and have something that could track you in 5 lines of code. So it was actually implementation that was the last 5 years. I think in language, we've kind of got through where the kind of upper limit of where we can be. The models are 200 billion parameters, and you're looking at, you know, hundreds of billions of text. And if you don't infringe on privacy, it's kind of, it's read everything there is. So I think the theory of this, of being able to generate, is at its kind of upper limit.
Okay.
It's more like being able to implement this and do all of these things in these domains within the right frameworks, which is a lot of engineering.
Gotcha. But you mentioned sense time. So are there any other companies that you think are doing well or doing better in this space? Does anyone have maybe a competitive edge?
Actually, so in one sense, right now, it's actually ongoing. So we just wrote a paper on this AI, and before we've written a few papers, and you know, kind of reference 10-year-old, 20-year-old, you know, papers. This paper was written all with ideas that was generated in the last 2 years. It's just the theory is kind of really gone. There's been an explosion in this theory. So I think right now it's not out there yet. There's not all the things that's out there like sense time. It's probably going to take another 2 years for this to really kind of hit the users, 1 or 2 years. But in terms of kind of where it's leading, it's probably, you know, the US, because all of the data, all the social media is in English.
Well, exactly. I was going to ask you, so what do you think? What are the countries that are leading in this space, and possibly why?
So, I mean, you got to think, if you have hundreds of millions of parameters, kind of usually mathematically, it needs to read something along the line of 100 billion words or more. Some people at Google say it needs to be trillions of words. So right now, just the dominant lingua franca of social media, internet, many kind of text online, and also YouTube videos, TikToks are primarily in English. The language models are starting to understand, combined with vision, be able to read or be able to look at videos so that it's the source. So it's actually the English kind of nations, the English-speaking nations that have the edge beyond talent. But being in Hong Kong, having Hong Kong colleagues, and then just talking about my colleagues, but Hong Kong is actually quite a really hidden underdog with a lot of potential because it's language models. We're talking about large language models, and Hong Kong has really strong STEM. The students and the academics here in STEM are very powerful, but I've noticed, pretty much almost all these students speak 2, if not 3, sometimes 4 languages. So in their mind, they're already processing this and figuring out how they are going through these languages. So in Hong Kong, these students already have the STEM, but innately know how to kind of play around with languages.
Good stuff. I'm going to ask a question. This is one from the office. So one of my colleagues said, given how prolific and effective ChatGPT is, how do you see generative AI transforming customer experience in the fintech space?
So this is where all of the investments are going, especially in the US. You see, it's, like I said, it's not out there yet because it's still ongoing. But some of these large firms are just putting together 50, 60, 100% teams to be able to tackle the first line of interaction, the first kind of signal back from the users or client signals. So it's not, like I said before, it was a little bit of engineering. It's not, let's ask ChatGPT to talk about this. It's engineering your knowledge, your data, being able to pull that out correctly, go to a large language model and tell them, can you say this in a more human-like manner? And then be able to talk to the user so that it's not that kind of robotic chatbot experience that most of it have gone through the last 5 years.
Which brings me to the next point around possibly responsibility and the need for perhaps regulation in the AI space. I mean, we've all talked about, and I think we've heard for the last 2 days, everyone's saying AI, 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 but no one's kind of gone beyond that to say, do you think it's necessary to have regulation around this, or at least a set of framework or parameters for which everyone should use this technology?
I think it's so kind of the explosive growth has made it really hard to put in regulations because, frankly, I mean, unless you're really into it, it's hard to understand the nuances. But having said that, I think it's almost kind of like in finance, we always have a risk officer, right? So there's probably some sort of AI officer or someone who's looking at this, verifying the data, verifying the models, who will have somewhere to report it to and keep a record. That's probably the first step where it should go. But
maybe a bit of self-regulation in there?
A bit of self-regulation, maybe something kind of at a top framework where you have things to have documentation, but having very, very kind of stringent standards and regulation, I think even the industry practitioners don't really know how to get through, so that this is probably going to be the big topic for the next 2 years as well.
So finally, thanks for that. What is your practical vision for the future of AI in finance? And is there anything in particular that you're going to predict, if you could predict and have a magic ball? What's the 2-year, 5-year, 10-year predictability around AI?
So I think, like vision, the next 5 years is when everything gets implemented. For finance, for legal, for medical, we have things that this is going to happen, and this is probably going to affect the jobs and employment of kind of the first client-facing. Could almost kind of think of it like triage, like the first instance, and make more services available for the mass retail. So this is going to be implemented in the next 5 years. But I think for the time being, for the very immediate future, it's kind of hit this upper limit, so that being able to say that this will, be Skynet or be able to do some sort of prediction will take another huge leap in theory, another huge leap in technology. So I personally, I'm in the camp that this is not happening for another 10 years. So for about 10, 20 years, I think
I have a job
yes,
still.
Yes,
Oh,
we
yeah,
are still a little safe, so yeah.
Fantastic. Are there any final words if there's somebody in this space that says, oh, I'm definitely interested but don't know where to go? Where would you point them to?
There is tremendous amounts of literature online, especially on Medium because of all the geeks like me and my data science team. But yeah, I mean, I think we need to have more people kind of discussing this in nuance. So please feel free to ping me, contact me on LinkedIn, and happy to discuss.
Stephen Choi, Ask Laura, thank you very much for your time, and thank you to our audience today.
Thank you, Christy.
All right, and thank you to Christy Schwartz, who's been doing double, triple, quadruple overtime at Hong Kong FinTech Week. This stage, other stages. Of course, she does her best work on this stage because, hey, it's the center stage, baby. So we have a lot of excitement out here. We're now going to be talking about Web3, and I'm going to tell you something you might not have heard of before. Just because Web3 is coming does not mean that Web 2.0 is going anywhere, right? The two of them are going to interact. They are going to merge. They are going to, going to have to interface in a lot of different ways. And our next panel is going to talk about how that is going to happen. The panel is going to be led by Amanda Cassatt, the co-founder and CEO of Serotonin. And she's going to be joined on stage by Kavi Hari Leila, who's the business director with Payment Asia. We're also going to welcome Joshua Meng, who is the founder of RSS3. And rounding out the panel and making it complete is going to be Yang Shuo, who is the general manager at Blockchain Infrastructure. So Amanda is charged up and ready to go with her panel. Amanda, bring it. Yeah, let's hear it for them.
Hello, thank you for being here today. My name is Amanda Cassatt, and I'm the founder and CEO of Serotonin, the leading global Web3 marketing firm and product studio. I have a really great panel here today. Want to start with some introductions so you can meet everyone here.
Yeah, thank you everyone, and I'm proud to be invited here to talk about the Web 2 and the Web 3, some hot topic, and maybe share some information from my side. Thank you.
Hi, my name is Kavi Hari Leila. I'm from Payment Asia. We're a traditional payments gateway company, but now we have to envisage moving to the Web 3 world and talk about a lot about the digital web.
Hey guys, my name is Joshua Meng. I'm the founder and CEO of RSS3. Basically, we are the open information layer. You can think of it as the sort of like Google for Web 1. We are kind of like the one for Web 3. We cover every piece of open information, blockchains, decentralized networks and stuff. And we try to disseminate it in a specific way, searches, subscriptions, and we support a lot of social media, search engines, and AI models.
So everyone on this panel has a really different perspective on the Web3 landscape, coming from the investor side, the payment side, Web 2 to Web 3, and also the Web 3 native startup side. And so I'd love to just hear from each of you to begin with how each of your organizations is approaching the transition from Web 2 to Web 3. Maybe starting with you, Shua?
Yeah, thank you. And from my side, from my point of view, I think that our company, the strategy of the investment has not changed much. What's the technology, because that we just focus on the industrial investment compared to the financial investment. So actually, I think this year, maybe in the 12 months, in the last 1 year, I think maybe the climate of this industry just has changed. So I think the market nowadays, they want to see how to bring the value add-on in the traditional industrial for the blockchain technology, for Web3 technology, And the people, they want to just find out how the value add on in this traditional industrial and combined with the Web2 companies. So actually, we want to find out the opportunity here. So we just share the information, yeah.
So it's a lot of figuring out how existing industry is going to update by coming on chain?
Yeah, so why they come to the chain, yeah, I think that's the critical problem, yeah.
Makes sense, and we'll double down and talk about that more. Kavi, your perspective.
Okay, so coming from a payments background, and that's where we sit today, we're looking at essentially crypto payments, and that's where our Web3 platform needs to emerge to and get to. But we have to face, why is it beneficial for all of us? So we look at three aspects. One, it's efficient. Two, it's very cost effective. And three, it's actually much more secure because it all can be verified on the blockchain. Now it's a position of how do we migrate to that position from where we are today? And there are a lot of challenges that we do face. Okay, and I can go a little bit onto these challenges and touch on them very on a high level. We have regulations that we need to all explore and see what are we allowed to do and what are we need to be compliant in doing. B, you need to see the adaptability and the acceptiveness of these regulations from the various merchants, and not just merchants, but also consumers alike. Lastly, we refer to education. Now, when we look at education, most of us on the tech side who understand crypto assets and how to buy them and operate them, it's easy for us. But let's take the layman, let's take the everyday person who wants to go and buy a crypto. They go, they register on the platform, and they just see charts, they get confused. If you compare buying one of the crypto or block or coins, and you compare buying a stock, there's a vast difference in how easy the user interfaces are. So that becomes a huge education process that we need to follow.
So the challenges are clear, but how are you planning to go on chain with payments at Payment Asia, considering those challenges?
So no, for us, the technology is there to get there. So part of our view is we want to work with regulators. We want to be involved in the dialogue with the regulators so that we can help discuss what our parameters and our frame is to do it. There are legitimate concerns that regulators have. They have AML concerns, and they have, and not really their fault, but it's been some unsavory characters that have operated in the space that have given it a bad name, where regulation needs to be there to give confidence to the market. And that's very important.
Makes sense. And Josh, at RSS3, maybe you can tell us a little bit about how you're approaching the space from a native perspective.
Absolutely. So RSS3, we were born as an open and decentralized way, right? So we don't really have a lot of challenges saying, okay, we want to transition into Web3 because we were born here. But one of the really important things is that we want to make sure we can, in a way, attract as many people, users from Web2 to Web3 as possible. And if you look at Web3, we take it as a way to invest, or like a financial infrastructure. It's pretty mature in a way. But if you look at it as the new generation of the websites or like a new generation of the internet, then it's pretty young, right? We don't really see a lot of content, enough information, social medias, these built upon Web3. And we want to make sure that we learn enough stuff from Web2, and at the same time, we bring up the sort of like the unique characteristics of Web3 and try to say, okay, how do we attract all these people that's been sticking with Web2 to Web3, right? There have been a lot of interesting events when there is a privacy breach, there's an incident where someone's get banned. They think about decentralization, think about openness, but it's still pretty challenging for all of us who are building for Web3 as a new internet to see how we drag users from Web2 here.
One thing that we see a lot at Serotonin with our clients and partners is they're figuring out whether, when they're starting a startup, to target Web3 native users, especially if the experience that they're being brought into is a more Web3 native style of experience, versus trying to target Web2 users. Where do you fall on that spectrum? And when you're trying to target those Web2 users, how do you do it?
I think this is a really interesting question. We were trying to figure it out at the beginning. We've been here for 2 years. We do have quite an amount of users compared to other products. But I think one of the one of the ways that you look at this is to say, okay, what is the essential stuff that to bring to the market, bring to the table, right? So for us, we are bringing in the infrastructure. So most likely we're going to talk to Web3 builders and say, okay, we are the only one that could help you to, let's just say you want to look at 500 of your friends, what are they doing on chain? You want to say, okay, I want to search the whole Web3 just like I do on Google. We are the only one, we're the only infrastructure providing that. So that's how we look at, okay, we have to target Web3 builders. But if you look at some of the applications, let's just say GameFi, they want to target more Web2 users, right? Because they do provide an experience that they're already familiar with, and they can add a bit of value to it. So I think the core here is to try to identify yourself as what we're bringing to the table. Different builders would have different perspectives, and I think that's how you try to figure it out.
And I think part of the differentiated value prop is being able to use tokenomics to drive alignment in communities. Maybe you can comment a little bit on how you're doing that.
Yeah, absolutely. I think token itself has been a core of Web3 in general. It started with Bitcoin, right? It has a token, Bitcoin itself, Ethereum as well. So this is one of the very unique ways to make the revolution more possible for Web2 users, right? You actually get a bit of the value you create to the ecosystem, to the network. And for us, all of the contributors to the open information ecosystem would be rewarded by RC3, no matter you're just providing information or you're one of the nodes that are actually gathering the information, interpreting, or disseminating them, right? You're providing a search functionality, you're providing subscription, you're providing AI training stuff. So you're going to be rewarded by our token. But I think this is one of the ways that you can use tokenomics to try to incentivize more builders, contributors to the ecosystem. I think there have been a lot of different approaches, social FIs, GameFis, trainings, DeFis. And I would imagine that this is one of the most important features, or like one of the most important ways for people to drag, as I said before, drag users from Web2 to Web3.
Yeah, so Shua, I wanted to also ask you about that because you're talking about blockchain for industry. You're talking about blockchain for enterprise, which sometimes is a little bit of a different conversation from tokenization. And tokens and digital assets that are root ownable in Web3 is such a big part of the core Web3 value prop. But then there's this other world of updating existing industries and organizations to start using the blockchain without tokenization. How are you approaching that, and how are you counseling the industries that you invest in to start updating to Web3?
Yeah, I think your question is very critical problem here. So actually, this year we talk about a lot of some mass adoption. We talk about how the NFT can just give you value. There's a lot of questions, but we just can sum up to one sentence that for buy side, we just find out which is the willingness, genuine willingness to pay. So for example, if we talk about the company just to build up the B2B network, so we want to find out your customer, whether your customer just want to give the genuine purchase for your product or service, right? So actually, if you want to talk about the directly to C business model, while large of the customers go to your platform, and I think if you give the mass adoption, the platform will be sustainable, not just for a while. So actually, I think this the one thing, just whether the company or staff, they have just to do the right thing, and they can get the genuine purchase for the service or product. So, but I think the last year, how to say that? I think that for single product or just one protocol, you can just not only raise the money easily here. So actually, I think for the buy side, many investors, institutional investors, just find out, they just do their investigation in your business model to see how you can just help your customer to earn money. I think that's the critical problem,
Yeah, so what I'm hearing from you is that all of these different industries and businesses, even if they're established, have this opportunity to explore potential tokenization strategies in order to align incentives with those user bases to build community and to build capital bases faster. Is that about right?
Yeah, I think for the company, for the industry, you need to solve the pain points For example, maybe Apple tax rate, maybe the pain points, maybe just like the guy say that you need to do the payment, the settle down, use the cheap network. Maybe this is the pain point. If you do the right thing, it's okay. Yeah.
Makes sense.
Yeah.
And so that brings us to payments. And Kavi, do you think it's inevitable that the future of payments is coming on chain?
Look, it has to eventually evolve down that way. Let's take it from its very basic concept right now. Today I'm sitting here in Hong Kong. I have someone in London. I want to send them, I want to buy them a coffee. Now, the most economical way to do that is to using the crypto payment method. You could not feasibly do it through the old-fashioned way of, sending money across. The cost of incurring that fee is going to be more than that cup of coffee itself. So we have to eventually get to that point. It's now we have to wait for the adoption of how we get there. And that's the key on how. And as I stated earlier, its key part is the factors are regulation, adoption, and education. Regulation for Hong Kong, if I have to now draw into Hong Kong a little bit more, where we see the regulators are saying and coming out with papers. We see the government promoting Hong Kong, but why has the adoption not come yet? Because of the other factors. Now, regulation has another big component on it. It's the definition of what cryptocurrency is, or what a Bitcoin is, or what a stable coin is. Do we classify it as a security? Do we classify it as a commodity? Is it part of a token that's based on fiat? And who governs this? Now, this is a problem that everyone faces, yet we expect each one of our own jurisdictions to come up with the answer. Now, in my view, and this is a personal view of mine, that if we have to move forward where we are able to all be on the same page, these regulations need to be done not just by Hong Kong, but in conjunction with other jurisdictions. So Hong Kong can't be classifying like cryptocurrency as a security or stablecoin as a security, and you go to a different jurisdiction, it's a commodity, and who's governing it? This needs to be done more on a global scale to bring back the network in, and needs to be done in conjunction with the merchants and people like us in the players. And once they have that feedback is where the regulations can lead to.
Makes sense. So good that we're talking about Hong Kong, because we're obviously here in Hong Kong at FinTech Week. Maybe starting with you, Josh, what do you see in terms of adoption here in Hong Kong, starting a startup based here in Asia? What are the differences that you identify between the markets here versus elsewhere, and how's that shaping your strategy?
I think, honestly speaking, Hong Kong is a very special place. We see a lot of startups trying to come here, and especially here in Asia. It's still, you gotta say, Hong Kong is one of the core financial cities here in Asia, and the government has been a bit more clear on the terms of regulations. You could know, what can be done, what's not, and at the same time, we could see a lot of different agencies getting licenses from the government and try to say, okay, we are now clear of doing something, right? Although the regulation has been proceeding in a more cautious way, it's pretty costly for the companies to do that, but we do see optimistic signs. And if we look at how Hong Kong locally understands Web3, most people still look at it in a more of a financial perspective. If you look at the US, look at Europe, a lot of people are still working on the concept of building Web3 as the next generation of the web, right, of the internet, and try to say, okay, if we can build upon the spirits and the ideologies of Bitcoin and Ethereum and try to have more things open, permissionless, and decentralized for everyone, that's going to bring us a better world. But Hong Kong still focuses a bit more on finance and trading, right? But I don't think it's, it's something that we cannot change. We do see a new generation of young entrepreneurs coming here, startups trying to make difference. We have great educational institutions here. And honestly, I think if we are trying to build another, or like one of the best crypto cities or Web3 cities here in Asia, Hong Kong would definitely be one of the best choices here.
Well, maybe you can comment on that a little more. Like, we had this transition globally from calling it crypto to calling it Web3, because crypto, which stands for cryptocurrency, is a subset, really, of a larger thing that's cultural, that has to do with content, that has to do with value. We started the web with this communications layer and tried to add value on top. And now with Web3, we're starting with an internet native value layer and then adding things like communications and culture on top. What kinds of things do you think need to be built here in Hong Kong in order to really add that cultural layer?
I think we got to start with some of the infrastructures here. So it's unlike for trading like finances, a lot of infrastructure for social, games, information content, whatever you want to do on the internet is still missing here. And I think it actually gives you the opportunity for Hong Kong to build something like this, right? We want to see, okay, the government or like the Hong Kong locals try to attract more builders here. We want to see a more optimistic and more attractive environment, whereas builders can build things, very free way. And at the same time, I think building great infrastructures is about making a statement and try to say, okay, we want to actually be long-term here. We want to try to invest more in the things that will be really crucial in the next 10, 20 years, and try to do more educational PR kind of stuff that's related to the spirits and ideologies of Web3, and try to make sure that people understand what we're building toward, right? I think in the beginning of the internet, there was very interesting video I saw with Bill Gates trying to understand, trying to answer the question saying, no, what is the internet, right? So trying to educate the audience about what internet was, and there was a lot of confusion in the beginning. It's the same for Web3 here. So we want to say, okay, Web3 is not only about finance, right? From crypto to Web3 now. It's not only about speculations. We're building values here, we're building possibilities here, we're building potentials and actual usages here. And I think by letting more people know about this is going to add a huge value, especially in the long term.
Makes sense to me. Shua, I also want to get your perspective on Hong Kong and what's going on here. There's definitely a spirit of excitement about a recovery and a turnaround, especially considering potential capital flows from China, maybe even into Web3 and into Hong Kong. What's the state of that, and how are you thinking about Hong Kong?
Yeah, I'm pretty agree on Joshua's point of view. That I think that first of all, I just want to say that Web3 is not just a financial. So all many industrial, maybe creator economy, and the second, I think want to say that that Hong Kong, we need Hong Kong as if you do a technical platform, you need to bring a chemistry, and the chemistry will be safe and security for the startup, for the company, for the capital, right? So I think that Hong Kong is the global business platform that you can here to connect China, or not just China. I think all over the world you can connect it all over the capital. So actually, we think that these days we talk a lot of deals with different kinds of startup. I think that if you just do your business in Web2 side, it's okay, it's fine. But maybe you nowadays you are just facing some problem. You need to only be solved in Web3 area. So our guys can do the service to help you. Maybe in Hong Kong, I think it's the great, fantastic thing. Yeah.
So when you look at investments, and I know a lot of people here in the audience are building companies, when you look at these investments, what do you like to see, and what demonstrates expertise in Web3 that leads you to want to back a project or a company?
Yeah, we want to find out, just like I mentioned, that genuine willingness to pay, not only the B2B network or something to the customer, but I think not just the mass adoption, maybe the digital asset, more valuable digital asset. Yeah, maybe some platform here. Yeah.
Super interesting.
Yeah.
And in terms of being ready to really unlock payments for Web3 here in Hong Kong, what would that catalyst be for you, Kavi? It's all about regulation for you?
No, regulation is one of the key catalysts. The other catalyst is education. The market needs to learn about it. And then it's adoption, okay? Adopting meaning when we come out with a product, a payment product, and we go down to see how payments evolved. We were first with Visa, MasterCard, Amex, and those are the traditional payment methods. Then we moved on to looking at alternate payment methods, how we have Octopus, how we have PayMe, how we have WeChat Pay, how we have Alipay. And those become another set of payments. And now I see the evolution to now move on to crypto and use that. Now, that is where we are going to evolve to. Now, it's the speed of the uptake. We've seen it happen with these alternate payment methods. Now we'll see that happen, but it'll take some time because we need to get the regulations in there for the protection of not just our merchants or for us ourselves, but also for the various other industries involved.
Makes sense. Well, I, for one, have been really excited to see a faster rate of adoption actually here in Asia and more willingness to try out a new technology. It's been really interesting to see, and I see a lot of projects actually also coming from the West to come and pick up developers and come and pick up user numbers because people almost have a higher metabolism for trying out new things. So that's been really exciting to us as we open our office here in Hong Kong for Serotonin and as we keep on exploring this part of the world. So it's really fascinating to learn from you and hear your perspective about what's going on. Maybe starting with you, Josh, we only have a few moments left. Maybe you can say something about where people can reach you if they're curious to learn more.
Of course, you can always find me at Joshua RCS3 on Twitter, and also you can follow RCS3 for anything.
And how about you, Kavi?
You can always find me on my LinkedIn, or you're welcome to go to our Payment Asia website and send us a comment, which we have an information box there.
Sure.
Yeah, maybe you can find me through Amanda. Okay, thank you. Okay.
How mysterious. Very good. Well, yeah. You can find me on Twitter. My name is Amanda Cassett, also amanda.eth if you look that up on Twitter. It's also Amanda Cassett on LinkedIn. And check out what we do at serotonin.co. Thank you so much for having us.
Thank you. Thank you. Thank you.
All right, we're back in action at Hong Kong FinTech Week. I'm Andrew Work, your host here today, yesterday, today, all the rest of today. And you are serious business people. You live in the business world. You consume business media, and you cannot escape hearing the OECD recommends this. The OECD reports economic growth of that because that is what they do. The Organization for Economic Cooperation and Development is the world's preeminent organization for conducting research and then providing policy advisory to improve living standards and drive economic growth. We have a special message now from the Deputy Secretary of the OECD, Yoshiki Takeuchi. Let her roll.
Excellencies, ladies and gentlemen, progress in AI technology has been impressive. In some cases, its output is very difficult to tell from that of humans. In particular, AI has made the most progress in its ability to perform non-routine cognitive work, such as deductive reasoning, information ordering, and perceptual speed. The rapid development in generative AI have sparked hope of large productivity gains, but they also stir fears of job loss. Recent OECD evidence, based on the use of AI in financing and manufacturing in 8 OECD countries, shows that 3 in 5 workers in the financial sector are worried about losing their jobs entirely to AI in the next decade. Nevertheless, to date, evidence of negative effects of AI on overall employment is scarce. Because AI adoption in the workplace is still relatively limited, employers have mostly adjusted to it by reassigning workers and reducing hiring, rather than laying off workers when adopting AI. We also find that AI has had, so far, positive impact on job safety and performance. Nearly 2/3 of AI users in finance reported that AI had improved their job satisfaction, and 79% reported its improved job performance. At the same time, the use of AI at the workplace raises concern around privacy and work intensity. 3 out of 4 workers surveyed in the financial sector said that AI had increased the pace of work, in particular among workers who reported being subject to algorithmic management. AI technology is evolving rapidly, and its use is still relatively limited. The impact on labor market, both on job quantity and job quality, might intensify going forward. So there is urgent need for policy action by governments to ensure trustworthy development and use of AI. Providing training to workers and engaging social dialogue when adopting AI can result in better outcomes for workers. AI application needs to respect existing regulation on anti-discrimination, occupational safety and health, worker privacy, and freedom of association. But it will be necessary to develop policies to ensure accountability, transparency, and explainability when AI affects workers' rights and opportunities. With such policies in place, we can make sure that we make the most of the opportunities offered by AI while providing and addressing risks. Thank you.
Hey, domo arigato, Takeuchi-san, in his absentia. Ladies and gentlemen, Hong Kong is not only Asia's leading financial center, it is consciously so. The leadership of Hong Kong think very deeply about this. They take the responsibility of maintaining Hong Kong's leadership very, very seriously. You can tell because here at Hong Kong FinTech, we have heard from the chief executive of Hong Kong, the financial secretary, the Commerce for Commerce and Economic Development. And of course, FinTech is about finance, and it is about commerce, but it is also about the tech. And so, FinTech Week would not be complete without hearing from the Secretary for Innovation, Technology, and Industry. And so we are thrilled to welcome today exactly that Secretary. He is Professor Sun Dong, the Secretary for Innovation, Technology, and Industry of the Hong Kong Special Administrative Region. Professor Sun, please come and join us.
distinguished speakers, guests, ladies and gentlemen, good afternoon. Welcome to Hong Kong FinTech Week 2023. It is my great pleasure to join you all today at this very special occasion to explore the role that Hong Kong can play in leading Asia and the world in redefining FinTech into a new era of finance. The world is evolving at a new pace. Disruption and uncertainty are the new norm. New rules and forces are influencing our economies, and the world of finance is entering an era of great challenge, but also opportunities. As Asia's world city, Hong Kong has long been an important gateway between East and West. We have reinforced our position as a world-leading financial center and emerged as one of the major international hubs of innovation and technology in the region, embracing the golden opportunities to reshape and redefine FinTech for the future. As the world continues to grapple with turmoil, Hong Kong offers stable, orderly growth and long-term vision and resolve. These are the ideal conditions for talent, entrepreneurs, investors, and innovators to come and turn their ideas into impactful change and success. Led by the vision of the Hong Kong SAR government and our regulators, we have seen Hong Kong's FinTech potential grow to new heights in recent years. According to the Frontier Technology Index 2023, Hong Kong has risen from 15th to 9th. This leap in ranking elevates us above some traditional powers of innovation in the world. This represents a significant global recognition of our city's readiness to adopt and lead in developing technologies that will increase productivity and improve livelihoods, from AI to robotics to blockchain and, of course, FinTech. It is also a good testimony to the government's commitment to promoting FinTech in order to accelerate the development of digital economy. Hong Kong's FinTech mission will only gather pace being backed by an INT ecosystem that is growing in strength. Currently, over 800 FinTech companies, as well as globally respected research centers and innovation laboratories, are based in Hong Kong. These groundbreaking FinTechs sit within a thriving innovation community of almost 5,000 tech startups, employing more than 15,000 people. With a quarter of the city's startup founders from outside Hong Kong, we take pride in being a hub for global tech talent. Behind the scenes are Cyberport and the Hong Kong Science Park, doing incredible work to pave the way for FinTech innovation and success. Cyberport, our ICT flagship, hosts the biggest FinTech community and ecosystem in Hong Kong, with over 400 FinTech companies covering blockchain, mobile payment, cybersecurity, etc. Out of the 7 Cyberport startups reaching unicorn status, 4 of them are FinTech companies. I'm excited to share with you the good news that, as announced by the Chief Executive in his recent policy address last week, Cyberport will establish an AI supercomputing center in phases starting from 2024 in order to support the local demand for computing power. This is going to greatly enhance Hong Kong's R&D capabilities and promote the development of the AI industry ecosystem. The center would definitely inject new impetus into our fintech industry by empowering our companies to improve their risk management and fraud decision systems. Meanwhile, the Science Park stays at the core of the city's fast-emerging fintech scenes by continuously organizing and supporting multifarious fintech-related activities. In particular, the Science Park's Inno Center has been designated as a new fintech hub, giving different stakeholders a focal point to collaborate with Science Park companies and startups. Another critical foundation fueling the future of fintech for Hong Kong is the creation for a seamless data exchange. Hong Kong MA's launch of its Commercial Data Interchange, CDI in short, in last October is a significant development that helps catalyze fintech-based innovation. The consented data exchange gateway being developed by the government will connect it to the CDI by end of this year to facilitate consented data exchange between government departments and financial institutions. Another indispensable effort by the government in driving the development of the fintech ecosystem in Hong Kong is the launch and continuous enhancement of mSmart. The one-stop personalized mSmart platform provides Hong Kong residents with a single digital identity that enables simple and secure login for 300 online services provided by the government, public and private organizations at present, conduct online transactions, and perform digital signing with legal backing in a simple and secure manner. The number of registered users on the mSmart platform has already reached 2.4 million now. Ladies and gentlemen, the above examples are just part of our efforts in driving fintech development in Hong Kong. The chief executive has also announced a series of forward-looking INT initiatives in the 2023 policy address, which includes the 500 million digital transformation support pilot program to be launched by end of this year to assist SMEs in the retail and food and beverage industries in applying electronic payment and other ready-for-use digital solutions. I'm confident that this initiative will definitely give our fintech cluster a strong impetus and lead Hong Kong to be one of the fintech leaders in the world. Before I close, may I wish you all a most rewarding experience at the Hong Kong FinTech Week 2023. Thank you.
And thank you very much, Professor Sun, an engineer's engineer. Thank you very much for joining us. We appreciate your commitment by coming out today, speaking to us, walking the floor, meeting with the people in the industry. Sustainability is hot, hot, hot. Why? Because so is the planet. And sustainability is coming to every industry, and it is coming to FinTech, and it is coming to your business. And so we're going to bring a couple of people up here who might be able to answer some of the questions you have about how it is going to have an impact on the business that you are doing. We're fortunate today to have with us the Chief Sustainability Officer of Ant Group, Sabrina Peng, and she is going to be in conversation today with Helen Lee. Helen is the co-founder and CEO of Go Impact, which is an ESG education firm, because we all need to get ourselves educated on what we need to be doing and how we can make a difference. And so now we welcome in conversation Helen Lee and Sabrina Peng. Ladies, please join us. There we go.
Well, Sabrina, We are pioneers.
Yeah, I love to be called pioneers because I think pioneers are those who really see the opportunities in the future. Yeah.
Absolutely, and I think we've both been working in the sustainability ESG area long before everybody starts swimming in the alphabet soup. So now we have ESG, we have PRI, we have a lot of acronyms. So I think it's actually both helpful and in some ways a concern because it's very urgent agenda.
Yeah.
The urgency, if you look at it, in September, the month alone, there are 10 countries and territories that have experienced extreme weather disaster, like flash floods or bushfires and all that. So this agenda simply cannot wait. But are we ready?
Yeah, so I totally agree the urgency, and also it's really the high time for the global community to take real actions, not only ambitions. It's really moving from ambitions to real actions. Because according to the Secretary General, the UN Secretary General just shared that only 15% of the 17 SDGs are on the track. So that means we are far behind the schedule and the target. So it's really the urgency. Among all the challenges, really for everybody, from ambitions to actions, I think one of the most challenges are the mindset change.
Definitely.
Yeah.
And we need to move from ambition to action.
Exactly, because the mindset is really a risk-oriented mindset or it's an opportunity-oriented mindset. This makes quite big difference.
Yes, absolutely. And you were mentioning only 15% of the SDGs are on track. I've got another very staggering data point here that we have a funding gap of $3 trillion per year.
Well,
in order to achieve by 2030, which is a target date for achieving the SDGs. So there's a lot of work ahead of us, and the intersection of green, fin, and tech are probably the area where we can really make a difference when it comes to driving action. We had a report on the intersection of green, fin, and tech that we look at 5 APAC economies: Hong Kong, Singapore, Thailand, South Korea, and Indonesia. And the 2 key findings this year actually echoes the point we were making just now very much. The first one, it calls for intersectional or cross-sector collaboration in order for things to happen. And secondly, there's a huge talent gap. So learning in terms of capacity building on sustainability is something that really cannot wait.
The findings are quite enlightening. I would really like to read the articles after this, our talk. Yeah, so I think the collaboration you mentioned is really a must since the problems we are facing are not in silos. So when we are facing the problems not in silos, actually we need a systematic way to think about it. So I would like to see this systematic thinking at least consists of 4 pillars. So the first pillar, I think, is policy making. Policy making is like the foundations of sustainable development. Like in the 20s, we have the Kyoto Protocol, and recently the EU's Circular Economy Action Plan, and also in China, we have the China's 1+N policy framework for carbon peak and carbon neutrality. So we have the foundations, then we have the guidelines. And the second pillar, I think, is the standard setting. Because the global standard is very, very crucial. And the recent newly published ISSB standards, I think, set a very impressive progress here.
I think you mentioned the ISSB standard.
Yeah?
That is so important for 2 reasons. We all know about the risk of greenwashing. You know, greenwashing is a byproduct of not having standardized global standards. So that, you know, it's very difficult to do third-party assurance. So I can't speak to the importance of ISSB harmonization more But yes, please enlighten us.
Yeah, totally agree. So these are the two pillars. And the third pillar, I think, is the academic research. The articles you mentioned, and also a lot of research need to be invested in this area, show everybody the potential of the market and also the trend. And the fourth pillar, I also think is very, very helpful, is corporate actions. Because we know the policy, we know the standard, and we read a lot of articles, but how to take real actions. When we see the companies in the industry, they really win in some areas, and when they take the real actions, they really just go ahead of other companies in the industry. That shows a small win or the demonstration of how we should change. So I think these four pillars are the very fundamental things to really drive the change.
Yes, definitely. But it's actually also pointing way to different approach, right? Different pathways that companies can take. So I wonder, in the companies that you have come in touch with, what are some of the alternative or options for the pathways?
Yeah, that's a very good question. So when we started our journey, actually we visited a lot of companies, and also we learned from a lot of companies. We found there are basically three approaches in the market. So the first approach will be IR or legal department-led approach. So that KPIs is mainly the ESG rating and the reporting. And the second approach will be the PR and the marketing-led approach. So that is really helpful for the corporate responsible branding and build the image under the ESG framework. And the third approach, I think, will be the CEO-led approach. That is the most challenging and the difficult one, and the more deep one. So actually, we choose this approach. It's not easy, but we really believe in that, because we think that will really lead the future for the sustainable growth. Yeah.
Actually, when you mention the three different approach, it brings to mind a recent article I was reading on Harvard Business Review. Mm-hmm. They say that the hidden enemies of sustainability doesn't come from outside. It comes from within the organization. Mm-hmm. We talk about moving from ambition to action. The roadblocks actually come from within. And the three roadblocks, one is the culture, or the sense of value of the company. The second one is the leadership. Okay, whether the leaders do believe in that, or they see it as just a box-ticking exercise. Thirdly, but not the least important, is actually how the people that are coming to senior positions, they are all looking at, they've been trained and educated on a profit-only paradigm. Mm-hmm. If you look at the tools like Michael Porter's 5 Forces, or valuation tools like NPV, net present value. These only look at profits and bottom line as indicators. You need to probably move from a profit-only paradigm to a profit and impact paradigm, because otherwise you cannot really embrace and embed, to move from risk to opportunity. From ambition to action. Mm-hmm. So I thought I'd just share those 4 hidden enemies here.
This is very interesting. I like the way they call it hidden enemies, because that means the enemies you're not easy to notice, right? So it's there and it has huge impact, but you just don't have the awareness of that, right? So this really helped me recall the journey of so we actually upgrade our ESG strategy 2 years ago. It's not an easy journey. So like the 3 parts you mentioned actually all happen. Because when we talk about the strategy, some of the senior management will ask, why will you do this? Will this help the valuation of the company? Will help the margin of the company? And what is the target of this? And some say, we should just promote us more because we don't know how to tell a story. But actually, what really brings us together is the CEO decide. The strategy is not just how you present your company, it's really how you change your company. So in end, we have a term called dual value creation. So the dual value creation, one value is commercial value. That's easy to understand because every company, you need to create commercial value. But the other value is social value. Social value creation is equal important as commercial value creation. It's like the two sides of one coin. So you cannot separate it. Like the company, we have good profit, then we take part of the money to do the philanthropy work, to do some social good. That's good. But that is the past CSR concept. In the future, all the companies, when they are doing commercial value creation, at the same time, if they are really doing the very good social value creation, this will be the key recipe to help the company to go a sustainable way. So this is what we believe and put in the core philosophy of the ESG strategy of END. So for example, maybe help you easily understand this concept, we started our SME lending in year 2010. So at that time, even today, SME lending is not easy. It's a challenge for globally. I think you all agree with that. Why? Because SMEs, their lack of collateral. So in all the lendings, basically, it's just based on the collateral. So how to deal with this? Based on their transaction online, we have some data, but it's not enough. How to build this algorithm and how to build this model really need a lot of technology investing. So after 10 years of investing on this, we are happy to see, we're really proud. Now we are serving 50 million SMEs and micro business in China right now. And the average, the financing is around like a 50,000 RMB. That is pretty small. Compared to the markets, the SMEs lending is like 600,000. Why? It's so small because they are really reaching the root of the society. And also another very important figure is 80%. Why 80%? Every year, the newer borrower of our lending, 80%, they never get any financing support from any financial institutions. So this makes us really happy. It's not how the size, how big the size is. It's really you helping the SMEs. They really need funding to grow their business. After they get this lending, they have the credit report, and they have the data, then they can get more support from other financial institutions. So this is the dual value creation. We really, truly believe in that.
That's so important because it touches on two different points. It's like the yin and yang of the Tai Chi.
Yeah, yes.
Okay.
We call it inside yin and yang.
The yin and yang of the Tai Chi is actually the two sides of the same coin. But if one side do well, the other side would also do better. So it's not like you sacrifice something.
And it will benefit each other.
Correct.
Yeah.
That is so interesting. But, if I may, it's easier said than done, Sabrina. I'm sure there are lots of I shouldn't say resistance, but little bumps along the road when you try to execute and implement that. And in Chinese, we say bring it to the ground, 落地. Bring it to the ground is very difficult, and the most essential is what we need right now with the urgency of the agenda. It's not just the money, it's not just the investment, but how do we string things together and bring it to the ground? Are there any examples you can think of to share?
So when I visit a lot of pioneer companies, I also ask these same questions. Because you have a good strategy, you have the consensus of all the senior management, but how to get it done, to touch the ground. So it's really, all the challenges are here. So I cannot say I have the answer for this. I would like to share some of our practices. Maybe will help. We are still on the journey, and we think this is long-term journey. It's not a quick win. We really need to believe in the future and have the patience on this. So first, we think the governance structure is very important. So if you have the strategy, so if you don't have the governance structure, cannot make this very stable. So we have the ESG committee on the board level. So every quarter, we have meetings to set the target, to review the progress. And also, we have the advisory board from the outside to provide their independent views. So this is on the high levels. And the middle levels, so we have the leadership team. So I co-chair with our CEO as the ESG leadership team. All the business unit presidents, they are in this leadership team. So they are the owners, not the CSO are the owners. If the company, the CSO are the owners, I think that will just the strategy on the wall. Yes. So every business leaders, every presidents, they run the business. They are the leaders of this. So we set the 3 years OKRs for every business. So this is just like they are OKRs for the business results. And this OKRs is different from the business results. It's the social value creation. And we review this quarterly. And the third layers, I think, is also very important. It's like the soil of the ESG strategy implementation. It's a culture. If the company, only the senior management believe in this, not enough. Every employees, every staff, they believe in this, and they are innovate on this. That's the true win. So we have the system and to give a lot of trainings and to create a lot of discussion group, online, offline, to help them share their failures and also wins to how to implement this. So these 3 layers, it's what we are doing right now. And we think if you really want to good execution on this, you need to really touch the ground, not only just the ESG strategy. This is what we are doing now.
Hey, that is so enlightening, and it brings to my mind, because our firm does a lot of learning programs. And one of the learning programs we do was for a major stock exchange in Asia, which is training all the board directors of the listed companies.
Okay.
And you mentioned that there's a committee on the board.
Yeah.
That really looks after sustainability. So for a lot of the listcos of this particular stock exchange that we are doing the training for, they adopt the same thing. And you mentioned OKRs. And that need to bring all the different business functions together. You cannot just have the chief sustainability officer as the only person driving this. Otherwise, as you said, it will be a strategy on the wall.
Yeah.
And that is not going to, 落地. That's not going to bring it to the ground.
I want to jump in a little bit. You know what? When we set the OKRs, actually the CEO spent 5 hours with more than the 14 business leaders, the top leaders, the presidents of our business, and we are locking in a room. We are not going out unless we just get consensus on the OKRs. So take that seriously, really serious.
That's tough, Sabrina.
Really tough.
Very tough. I mean, you're locked into a room and you have to hash it out.
Yeah.
Otherwise, sorry, the door is still closed.
Yeah, but when we set the 3 years OKRs, the following are much, much easier because we share the same goals. Yeah.
Absolutely. So it probably should move from KPIs to OKRs because KPIs probably focus on one side of the paradigm, as we were talking about. Now, in the essence of time, and we do want to be very respectful of the time of the Hong Kong FinTech Week. Now, if we were to leave the audience, both online and offline, with some key words and key thoughts on how to drive to action for this, and how do you benefit from the action of this, what might that be? Maybe I start first.
Yeah.
Thank you. I'd just like to leave everybody with 4 C's, okay? It's collaboration, as the report have said. It's capacity. You need to have the talent and bridge the talent gap. It's convergence. You need to have harmonized standards and metrics like ISSB, what ISSB is working on. And last but not least, you need to have the capital to go about it.
Yeah.
So really, the 4 C's, I think it's very important.
That's great. Yeah. So yeah, I think that the first time I heard this, but it's really good. The 4 C's. Maybe I add one more C. So it's maybe called the change or conversion. Because just started the conversation, I talk about a mindset change.
Yes.
And also the strategy, I think the philosophy behind that is the most critical part. It's really the dual value creation. So it's the conversion of strategy, conversion of mindset, conversion of execution, conversion of the culture. So it's really a change management for the companies to going forward to sustainability. And I strongly believe the green era is coming. So I hope everybody here, or maybe online, or everybody who is interested in sustainability will not miss your iPhone moment of the new era, because it's really coming. Yeah.
Thank you so much, Sabrina. Sustainability is a team sport, and it's a marathon, not a sprint.
Yeah.
So let's go at it together. Thank you, everyone.
Thank you, everyone.
All right, and thank you very much, Helen. Thank you very much, Sabrina. An absolutely marvelous job as we move on with the FinTech Week. Now, there are some people who think that large banks, when they see FinTech upstarts coming up, the question is, do they support those FinTech companies that are up and coming, or do they look to crush them as potential rivals or competitors? Fortunately, I think the group that we have coming up here, they're more the nurturing type. Not only do we have financial institutions, we have FinTech companies, but even another company that was supported by their financial backers as they were coming up. So we're going to get a little bit more of the nurturing side of the picture. This impressive panel is going to be led by Karen Contet. Karen is the co-founder and CEO of W Hub, the producers of Hong Kong FinTech Week. So give her lots of love when she comes up here, as well as Angel Hub and Deal Club. So when she comes up, make sure you show her lots of love, because she's got a big job to do. She is going to be joined up on stage by Tong Chi Bo, who is the managing partner at Gobi Partners GBA, as well as Helen Hui, who is the managing director and head of client coverage, Hong Kong and Taiwan for Standard Chartered. The man who's not a financial company, and you're going to hear a little bit about his story, is Paul Liu, the Chief Operating Officer of Lala Move. I'm a fan, I'm a customer, and I suspect many of you are too. And the panel will be rounded out by Kelvin Lee, who is the head of Global Fund Platform for Ant Group. Ladies and gentlemen, that is your panel. Karen, bring them out here. Let's have it. Yay! For the woman producing FinTech Week and her panel. Hey!
Good afternoon, Hong Kong. I'm very happy about this panel. A really impressive representation of our FinTech ecosystem. But first of all, Chibo, one question for you. You have been deploying over 1.4 billion into investing into tech companies, over 380 plus tech companies. So what investors like you are looking for when investing into FinTech?
1.6 across the region.
Sorry.
FinTech is a sector, obviously, we've invested quite a lot into, here in Hong Kong in particular, but also in Southeast Asia. I think we first started investing here around 2015, 2016, so it's also been about 7 or 8 years now. I mean, the time really flies. I think we were investing a lot in cross-border finance, payment gateways, robo-advisory. So, it runs the whole kind of gamut. More recently, we've actually done some deals in AI on the RegTech side. So obviously, FinTech is a very broad segment. These days, when FinTech entrepreneurs come in and speak with us, it is a little bit more of a challenging environment. And obviously, there are a lot of other kind of investment trends out there that, the capital markets are more hard about. But, we still obviously look. I think it really comes down to the markets in which they're deploying and operating in. Southeast Asia, I think, there's a lot more opportunities for FinTech type businesses. Here in Hong Kong, there's just so many strong financial institutions. It is actually a more difficult market for these startups to compete in. And so it really depends on what kind of business models they're working with.
Thank you. And Helen, what's your view on the FinTech ecosystem and how it has evolved over the years?
Okay, let me start by saying there was an old myth, right, where banks and FinTech are competing in the same space, and there were a lot of worries about FinTech disrupting the entire banking industry, right? So I think over the last few years, that is a wrong myth, right? So let me correct that by saying that if done well, banks and FinTech actually complement each other. Right? If you look at from the bank side, of course, banks can offer banking services to these FinTech companies along the cash management, the funding, and all that services, right? But actually, what the FinTech also can provide for banks are the solutions, right? The technology that they develop and the product that they develop, and where banks actually can employ those product and technology and use it to help banks to have better process, faster services. And banks also offer the client base for these technologies to be tested, because what we have lots of clients, right? And these product needs to have a testing ground and a proving ground for these concepts to work. And banks actually comes in, take the technology, the product, the concept, and then we will then let our clients use it, and then we help the FinTechs to fine-tune it, and then we will scale it. So I see that as evolution, and I see that strong partnership between banks and FinTechs working together in the last few years, and it's proven it's a big success.
No, and Paul, as you know, representing our dear Lalamove, one of our really Hong Kong proud unicorn, you have been scaling massively over the past year, becoming like really international. So first of all, to share with our audience in terms of one of your key enablers that help you to grow so much, and also did bank help?
Well, definitely a lot. Lalamove has been benefit from the FinTech ecosystem in Hong Kong. As a tech-enabled logistic platform coming from Hong Kong, we are the market leader in mainland China. And also we expand internationally, cover all the major cities in Southeast Asia, extending our business to 17 cities in Brazil, and we are also in Mexico cities. So in order to do that, we work very closely with traditional banks as well as FinTech company. All the way from payment system, everywhere we go, e-wallet, those are very important, as well as at the corporate level, we work with traditional banks a lot in managing our currency, in different type of partnerships. So we are definitely benefited by the Hong Kong finance and FinTech ecosystem.
And Kelvin, as our big FinTech, our TechFin and provider of our next-gen payment solution, how do you ensure actually that all these solutions stay available and accessible to the entire community and being inclusive for all the participants that want to come in?
Yeah, I think to answer that question, you probably have to look at the company's overall mission vision. It's down all the way down to the real management practice and their business strategies. Let me give you an example. So for us, I think about 5-6 years ago, we developed a technology in foreign exchange, which enable us with AI technology to allow us to provide a better FX rate to route tourism, starting from the Chinese tourism to go global. So when you have that technology, you have two choices. One is to allow the companies to make more profit. The other one is to allow the consumers to enjoy more benefits. So I think with N's value, so we always talk about customer first. This is actually down to the everyday decision. So we actually allow the customer to enjoy lower cost on foreign exchange when they're doing global travel. And subsequently, so this technology has been expanded to our partners via the Alipay Plus, which we shared the technology with the e-wallets in Southeast Asia and another Asia Pacific mobile payment provider. So through the whole process, internally, those people did this, get recognized and promoted. And then our partners also get this to actually share the value to the public. I think that's probably an example of how you can allow the inclusiveness and the ideologies to be shared and actually spread it by the ecosystem partners.
And talking actually about inclusiveness, you know, and having big players like you here, I mean, Helen, can you share more towards the audience, actually the different type of services and how you can help FinTech to grow? And when I say FinTech, I don't only mean like big unicorn, but you know, from really startups up to unicorns.
Okay, sure. As I mentioned earlier, right? So there are the venture capital department in banks. We have one called SC Venture, right? We also invest into new startups with one objective, right? Besides return, of course, that's important, but I think it's more important for people like Chibo. But for banks, return is one thing, but there's a strategic angle. So what that is, you know, as banks, we have a lot of legacy systems. So what that means is we are a bit inflexible in terms of trying to change our systems to cater to the fast-moving pace of the entire banking industry. So there are some processes that we have that we are hoping to use new technology to improve, whether the speed or the client experience, right? So then when we invest into these startups, we give them a problem statement. Yep. And because of these problem statements, they come up with solutions and concept and technology. And then banks will then have our clients also to try out these technology, these products, the idea. So there are a thing called the market product fit, right? So whether the product itself would fit the market. So what's better than having real clients to test these, right? And then once the concept works, then we will, of course, help the startup by putting a bit more funding, and then they can scale it up. And then as Standard Chartered Bank has markets across the globe in 80 plus markets, right? Across Asia, Middle East, and Africa. These are all emerging up and coming markets where I think they welcome these technology. And immediately these startups, they can scale their solutions and their technology globally. Yep. And then from being a startup, then they now have the scale. And then they can move into the next phase of development, get more funding, get more investors. And I think because of that, I think it benefits a lot for these startups.
And actually, we have co-invested together into one FinTech company as well in Dubai with Angel Hub and SC Ventures, so another example of collaborations, which leads me actually to you, gentlemen. And could you actually tell us about the collaboration you had with banks? And also, please, can you give us some tangible example of how it benefits you? So, Chibo, what about yourself?
Yeah, no, you know, obviously Standard Chartered is an amazing bank. And you know, a lot of our portfolio companies would love to work with you guys even more than they already do. But I did come from a board meeting recently where one of our companies, SleekFlow, in the enterprise SaaS space, has actually gotten some support from your team. I think they're close to signing to get support from your team. And so maybe after this, you guys can go back and actually sign it. But you know, it's great that you guys are actually, you know, banks like you are actually open to even providing these types of loans to startups, right? Where traditionally 5-10 years ago, that may not have been the case. I know that there are a number of financial institutions in Hong Kong, especially after, earlier in the year, there were some also quite famous banks in the US that didn't do that well, went down. There have been some, shifts and some strategic kind of changes, but, I think here in Asia, a lot of that has actually been for the good. And a lot of those banks that are taking on, those floating around parts, they're integrating those strategies as well. And so they're talking to more of those startups. And I think a lot of our portfolio companies are benefiting from that. And on top of just the corporate loans and the venture debt, obviously you guys have SC Ventures. There's also quite a few banks out there with their own CVC arms. Yep. Traditionally, those CVC arms have been more active in the global parts of those banks, which would traditionally just mean the West and US and Europe and these places. But obviously Asia has become a more important region for everyone. And so a lot of those CVCs we notice are also setting up teams here in Hong Kong. They're also being open to look at more deals here. And all of that has become good news for our portfolio companies because not only do they bring capital, they also bring access to resources within the banks and promote those collaborations. So we're very happy with the way things are going.
Kelvin, any concrete examples you can share with us?
Yeah, my experience probably with Standard Chartered on building the relationship is that there are different levels of relationship. The normal banking relationship will be we actually buy a product or use a product of the bank. But I think for the fintech companies, we're more looking for partnerships that we can co-build something, which is probably a Web3 word. So we worked with Standard Chartered in a few occasions that we actually get together to face a real-world problem, real-world issue, and we co-build solutions to address it. I think the one that actually escalated our relationship most was in 2017 and 2018. We started to build a blockchain-based remittance solution between two e-wallets from Hong Kong to Philippines. I think that's a start that we actually accelerated the relationship. I think during that process, there are few times that we fly like 10 people to your office to build up a team, which like one team, to think about solutions, to join all the flow chart, technology stacks, and you did the same to us. Through the process, we not only create the product, but also build a spirit of working together. Of course, at the end of the day, so the technology and experience we accumulate in that project has made us now one of the leading players in the market as well. So I think that kind of spirit project can take us only from the normal buying and selling relationship to a more strategic partnership. Yeah.
Paul?
Well, I can talk about a partnership that we are with Standard Chartered that we're going to announce early next week. In our core business, we match driver partners with users, all right? And majority of our users are small and medium enterprise, and logistics is a major part of their cost and very important to their business. So that we help to resolve one of their biggest problems. And the partnership we're going to have with Standard Chartered is to do it through a federated learning tool and make use of encrypted behavior data of our SME users. We'll match financial product and services of Standard Chartered with them so that will help to resolve their financial need as well. So it is opening up the door for Standard Chartered selling into a big part of SME in Hong Kong, help the SME to resolve their financial need, and in our case, put together win-win partnerships. That's very much along the same goal that we have to help SME growing and help them to resolve their problems.
And Helen, from your side, anything that the bank had learned, by working actually with all this fintech?
Yes, I mean, firstly, let me thank Paul, Kelvin, and Chibo for all the kind words that they have said about Standard Chartered. We very much enjoy the relationship and the partnership working with them. We've learned a lot, actually, right? So as a big bank, like I said, we have a lot of legacies. And banks usually are more conservative and we move things a bit slower than some of these technology companies. So what we've learned is how to be more nimble, right? Even if we cannot be as nimble, but I think because of the partnership with our clients, they sort of take us along in that process to become a lot more efficient, a lot more nimble, and the co-creation also help us to learn new technology on the way, whereby we can apply those to our own day-to-day process to improve the effectiveness and the efficiency and also the client experience. So again, you know, like I said earlier, it's a partnership rather than we are competing. There's no competition. If we do it well, this is the best partnerships that we can have with startup, with clients like all of them here. And again, the banks also learn a lot and benefit tremendously from the learning.
And as you're here, you know, and we have the audience in front of you, so actually it's your chance to ask Helen, you know, what banks can do more for you. So guys, if you have a little bit of a wish list and improvements that we can wish for future collaboration. So Chibo, you started to share a little bit in terms of wish lists. Do you have anything else that you can ask Helen?
Well, obviously, you know, we invest in many interesting companies out of our funds that we manage. It would be great to be able to partner with you on more of these funds. You know, there's a LPGP type thing that we would love to explore.
Definitely, I'm on this too, by the way. Kelvin.
Yeah. So for me, probably is around AI. So I think large language model present opportunities for us to use AI to escalate our service. I think the bank and fintechs has a lot of in complementary. For example, the data set for a whole value chain, we may have part of it, bank may have part of it. So you will find a lot of opportunities that we're working together on data, on license, to be able to actually incubate new services based on the new technology development.
Paul?
Well, to us, it's definitely expansion and growth. We'll continue to scale up and go to a lot more markets. And working with an international bank like Standard Chartered, it's good to opening up new market together with familiar partners.
Great. We heard you. And now we want to talk a little bit about the future as well. So Kelvin, what's in it for you for this coming year?
Well, for us, probably a few themes, if I come from technology perspective. One is the impact of tokenization. Okay, so we recently partnered with banks, actually started to run tokenized deposit, and then see how we can use this actually to enable cross-border payment to be 7/24, always on, and on demand. Whenever you need it, you have the liquidity to pay and collect based on different use cases. And the second area is the AI. So I think the AI has been evolving a lot to allow us to not only actually to solve problems, but drive us from originally manual process to automation, to intelligent service, and then to interaction with end users. So now we're actually in the third and the fourth stage. I hope that we can actually incubate some new product and technology with our partners over there. Yeah.
And Chibu, what are you focusing on right now, and what is your main theme of investments?
Yeah, well, you know, these days we've been really trying to build our presence in the rest of the GBA. I mean, obviously we've been here in Hong Kong for many years, but you know, we've opened up our Shenzhen and Guangzhou offices, building teams there, doing a lot more deals on the mainland. And you know, we actually see a lot of those companies you know, that have set up in the mainland also wanting to look overseas at overseas markets. And so we're really trying to see what we can do to help them, especially, you know, set up a base here in Hong Kong to help them go regional and go global eventually. So, you know, not only are we integrating more across our own regional platform, we're looking for ways in building new partnerships across the region to help them actually set up.
And Paul, you've been scaling so fast, but
we want to go faster, go to more places, enhance our product and services, improve the customer experience. But also at the same time, we hope to show up-and-coming startup in Hong Kong that we can do it, so can you. This is Hong Kong is a great place. The FinTech ecosystem is very strong. We enjoy free access to information, capital, and talent. So this is a great place to be.
I love it, to end with such a passionate, the energy of our unicorn and our entrepreneur. Thank you so much, everyone, for this amazing talk about collaboration in the FinTech ecosystem. Thank you so much.
Thank you.
All right, ladies and gentlemen, we are moving on to our next panel, and we are looking at the world of the hunters. The unicorn hunters are out there, and they are hunting down the unicorns. I'm talking about the venture capitalists, the investors that are seeking the best companies to put their money in, and they are particularly heading into the fields of artificial intelligence. They are in the deep grass of green tech, looking to find the next unicorns to bring into their stables. And we are fortunate to have with us today an investor who's come all the way from Silicon Valley, who is in conversation with his counterparts based here in Hong Kong. Guiding the conversation today will be Angela Wong, the head of investor relations at Alpha Trio Capital. She will be joined by her colleague, Pullman Lowe, who is the founding managing partner at Alpha Trio Capital. And all the way from San Francisco, Silicon Valley, we welcome Alfred Chuang. Alfred Chuang is the founder and general partner at Race Capital. So ladies and gentlemen, watch out. The hunters are coming. Here they come. Angela, bring them on out. Go get them.
Well, good afternoon, everyone. So thank you, everyone, for joining. I'm Angela Wong, head of IR at Alpha Trio Capital. And, again, thank you all for joining our panel today. Our discussion will be about the next wave of unicorns in green tech and AI. We are super fortunate to have with us today two distinguished guests, Alfred Chuang, founder and general partner of Race Capital, and Pullman Lowe, who is the founding managing partner of Alpha Trio Capital. Honestly, with the hefty list of accomplishments our panelists bring to the table, I'm sure you will all agree that they hardly need an introduction. So, without further ado, let's delve right into our discussion. Alfred, would you mind to kickstart our discussion by explaining the concept of generative AI, I know everyone is interested, and share how Race Capital is identifying and capitalizing on investment opportunities emerging from the rise of this technology?
Thanks, Angela. Good afternoon, Hong Kong. It's great to see you all. I've been doing Gen AI before it was Gen AI, so a little quick brief on what Gen AI generally is. So if you don't already have used ChatGPT, you can see actually live of actually what it does. So it's the first time that we actually have a thinking machine. So Gen AI is using computer software to replicate the neuroscience, basically to think like a human. And if you think of it like a human, what it does that computer software generally couldn't do is a technology that we call inference, which is you have multiple events that happen. Let's say we're on stage. You can almost think of the next thing we're going to do is talk about AI and green, and we probably are people that are involved in the industry itself. So it can think like a human being and actually can infer what are the things that we can do next. So if you have tried ChatGPT, if you keep asking questions, it doesn't know where to stop. It keeps throwing you answers to try to narrow it down. So think like a human. So Gen AI is a very unique thing because for the first time we will have technology that ultimately can write code on its own, can do our homework sometimes, can do our speeches, can create our answers, it's amazing. Raise Capital, we are a venture fund based in the Silicon Valley, and all we focus on is super early stage infrastructure tech. So prior to what is now called AI, we've been heavily investing for the whole past decade, mostly in data. So we only do the early stage tech. So you look at the kind of company that we have done, invested in the past would be, now become big like Databricks for big data, which is all the data that come from the train the AI models, Opaque Systems, which is one of his first technology to actually do data clean room. So how do you actually have training without exposing all the customers' data? Zeet, which is a technology how you actually be able to find GPUs when it's scarcely available. And Semantic, which is a technology to help you to do toolings for Gen AI. So it's what we do. I'm going to talk a little bit more about this AI in a second, but I recently did a map, a very interesting map. This is something that we have to focus on. A map of all the notable AI companies in the world. I found out that 81% of those companies are within 60 kilometers of San Francisco. So very few are in Hong Kong. That's something that we really have to catch up on.
Wow, really interesting insights, Alfred. So, Pullman, could you share the driving force behind your decision to establish Alpha Trio, a VC fund focused on green tech? And on top of that, could you also share with us why you believe now is the prime time for investors to steer their resources towards the green tech sector?
Good afternoon, ladies and gentlemen. I think that's a very important question, and something that I would like all of you to ask yourself. What drives you? So what drove me is, well, I'm a dog lover, and I'm also a nature lover. So my sustainability journey started when I launched the first carbon neutral hotel in Hong Kong back in 2013. So that's back when the words ESG and sustainability simply were not the buzzwords that we see today. And since then, we have been investing in green tech ventures. And what is most encouraging is that we find that these ventures that deliver impact actually outperform the rest of the portfolio. So this shows that these companies are actually successful because of the impact they deliver, not in spite of. So this is completely contrary to the belief that we think there must be some sort of trade-off between impact and return. And because of that, I decided maybe it's time to actually build a platform so that we can bring together like-minded partners to build an ecosystem to empower those innovative, disruptive solutions for our world's most pressing environmental challenges. And that's why I founded Alpha Trio. The name Alpha is because we believe that ESG should not be just risk mitigating, it should be alpha generating. Alpha is also the brainwave associated with innovation and mindfulness. Trio stands for our belief that each and every investment can, in fact, return profitably on people, planet, and profit. And why do we need to do it now? It's because, honestly, we're running out of time. So if we have roughly about 800 gigatons of budget to meet the Paris Agreement of 2 degrees, we only have about 16 years left. So the clock is ticking. And here in Asia, I'm afraid to say that we are seriously lagging behind. Asia is obviously the fastest growing economy in the world. We account for 2/3 of the world's population and also 2/3 of the world's carbon emissions. And yet, in terms of impact investing globally, there's roughly about over $1 trillion committed. Asia accounts for only 17%. So sadly, we are really behind. But I believe that it always takes someone to kickstart this revolution. Trust me, it's not been easy. I used to be using our own balance sheet. I didn't have to fundraise. But I believe that it's actually worthwhile because ultimately we need to empower those technologies because that's the only way we can reduce emissions at scale and at speed across even the toughest sectors. And our investment thesis, I do firmly believe, will stand true. And is that the next wave of unicorns will probably be green tech solutions and AI companies powered by AI that can actually help us overcome these existential challenges.
Well,
so all the stars are aligned.
Yes, exactly. I agree. I cannot agree more. So thank you, Pullman. And Alfred, back to you. Given that AI can make companies more eco-friendly, but also arguably consume significant energy, would you say AI is beneficial or detrimental to the green tech sector?
It's a great question. So actually, I will first throw out statistics that I have recently received. So, you know, Gen AI is quite new. So it's only been around for the last less than a year. But it has already consumed 2% of the total energy use in the United States and rapidly rising. That's a very, very scary number. So by and large, we know AI has to be hurting the environment because all the people that are doing big model training using these very large GPUs, I don't know how many of you have seen these NVIDIA A100 GPUs, they're about this size. They use a huge amount of energy and needs a lot of cooling. So from that perspective, you almost have to think that AI in the beginning is hurting the environment. But the use of AI can be very magical because historically you look at how do we save the world? How do we make the world greener? Without a doubt, to use data. We first have to collect a huge amount of data, analyze them, and then act on it, which is done serially up to this point. But once we injected a neural network into the system, now not only we can act immediately, it can act on our behalf, it can even think ahead. So now we can optimize things like traffic, optimization for transportation, you know, and know how to throttle between use of energy and then use it to save energy at the same time. So I think the opportunity is abound, but you know, as a firm, I would never invest in an AI company if it hurts the environment. I would just never do it. Yeah.
Wow, that's really, really, I think it's a great answer and very interesting insights. And thank you, Alfred. Another question for you, Pullman. With the growing interest in the green tech sector and investments, could you share with us some opportunities that you find are the most interesting?
That's a tough question because we are actually very excited about quite a number of opportunities. But if you ask me, I'm most excited about three main verticals. And the first is prop tech, the second would be clean tech, and the third agriculture and food tech. So why prop tech? Some of you might say, hey, I really haven't seen any unicorns in this space. And that's precisely why this is the time to invest. Because honestly, 10 years ago, there could have been very cutting edge solutions as well to decarbonize our cities or buildings. But back then, no one would be paying for them. Because we only want to invest in companies with not just the technology that solves the problems, but actually do have very robust business, sustainable business models. So now, all the real estate developers, they are under pressure to decarbonize in order to obtain green loans. I am actually of the belief that in a few years' time, there will be no more green loans because very simply, all loans will be green. So in order to decarbonize your operations, technology is the only way. So I believe that especially in Asia, where it's very hot and humid, we spend tons on electricity. So there are a lot of AI-powered energy-saving solutions, a lot of building management systems that can really help with energy efficiency, and also new materials, emission-free transportation, supply chain management solutions. And in terms of clean tech, there are some really exciting game changers out there in the renewable clean energy space, battery storage solutions, as well as water treatment solutions and carbon capture sequestration solutions. And for agriculture and food tech, with climate change, actually our food supply chain is seriously affected. And today, even, there are still 9 million people dying of hunger on a yearly basis. And as our world population surges to 10 billion, we will need to grow more food. We will need to grow 68% more food. And again, technology is the only way that we can actually enhance our crop yield while reducing the use of natural resources. And also alternative protein to feed us, to nourish us without the emission. And precision farming to grow more food for the world.
Wow, very interesting technologies. On that note, I do have a question for both of you. Can you suggest ways or strategies through which green tech and AI can better support and leverage each other more effectively?
I think the opportunity is almost guaranteed. There will be no software deployed in 5 to 10 years without this neural network be the center of it. So we should take advantage of this now to have these type of neural network software well implanted in every type of devices, in every channel we have, in every probe, that we'll be able to know in advance and be able to shut things off, conserve energy, re-optimize and recycle energies, and optimize every movement in terms of every type of prop tech, ag tech. Ag tech are doing remarkable things, that they are probed inside the soil, they're drone, they're monitoring the crops, they don't put water in if they don't need it, they recycle the water, and they know exactly what to recycle into and put it back in exactly which plant. So we are seeing AI really already at the work, but we have to all do this together, and this is not going to be easy.
I fully agree. I would say that, in a few years' time, there's not going to be a single company in our portfolio that does not use AI. I just cannot see that. And as Alfred mentioned, AI can be harnessed to create miracles, to really save the world. So in various sectors, I can see it really helping with sustainability in terms of the green buildings. We have been looking at companies that use IoT and big data, machine learning, to really enhance the use of energy efficiency by over 30%. This one company that we are closely monitoring is achieving like 300% revenue growth every year. And in terms of transportation, I believe that in a few years' time with autonomous vehicles, there should be a lot less traffic that we have to endure every day. And because of that, less congestion, less emissions. And also with agriculture, again, we can be growing a lot more crops without the use of as much pesticides, water, energy, again, because of all the IoT, all the data that we can use via the IoT, integrate that with satellite data, with all the historical data, and also with climate modeling. Most of you might have heard of the catastrophic weather events back in September, the worst black rain, typhoon number 10. So we were caught completely off guard this year. But hopefully, I think with more investment catalytic capital poured into AI, I think we can do a much better job predicting these extreme weather events and really enhance the accuracy of our climate modeling.
Yes, less extreme weather events are always good, I think. Thank you both for your insights. Now, let's move on to our rapid fire round. Ideally, each answer should be no more than 30 seconds. So start with Alfred first, perhaps. What's the most exciting development you've seen in AI recently?
Databricks.
Oh, okay. Okay, so Pullman, what's the most significant challenge facing the green tech industry today?
I think it's the wait and see approach. I think everyone is talking about sustainability, but we need to translate words into actions. So let's take that leap of faith.
Okay, back to you, Alfred. If you could change one thing, only one thing, about the current state of AI, what would it be?
Actually, this time I'm going to be a little more greedy. I think there are a few things we have to change.
Okay.
Number one, responsibility. What happened in Hollywood and the protests, we shall never happen again. So responsibility for the things that are owned by individuals is crucial. Number two, hallucination. AI giving random answers, we're doing very dangerous thing, we have to stop. Three, diversity. Almost most of the activities in AI, I was talking about 81% of the AI companies are in Silicon Valley. That has to change, we need diversity. So those are the things I care about a lot.
That's really interesting. And for our final question, Pullman, what's one piece of advice you give to someone looking to invest in green tech right now?
I would say is to invest with purpose. Most of the most important decisions in life are actually made with your heart, not your mind. And also to believe in the power of innovation. We are obviously the root of the problem, with all this mess that we have created, but we can also be the solution if we actually invest with purpose and if we actually can collaborate and drive this transition forward. I believe that together we can actually win the race and create a better, more sustainable future for all, for our children.
Yeah, well said. Well, we still have 2 minutes left. So perhaps some final thoughts from both Alfred and Pullman. Perhaps Pullman, you have any final thoughts?
Actually, I just have one thought. I think most of the people think about, is AI suitable for sustainability, right? I think we should be thinking of the other way around also, which is we need sustainability for AI. If AI continue to consume from 2% to 10% to 20% of the world's energy, this is not sustainable, right? It'll be easy at some point in time, as you can imagine, we'll be able to produce these GPUs. The shortage will be over. You know, like Moore's law will tell us that is a guarantee. But how much damage we're going to do is going to be huge. So if we don't start thinking about this now, in every project that we work on, in every startup that we start, that would be in big trouble.
I want to end by saying that, sustainability is obviously the most pressing, the defining challenge of our century, but it could also be the greatest opportunity. One thing is we really don't know what can be done. We don't know how to navigate through this transition. In the world, close to 100 countries have pledged to net zero. Of all Fortune 500 companies, 80% have made some sort of climate pledge, but none of us knows how to do it. But what's most important is that we set our mission, our vision clear. If there's a will, there's a way. Computers are going to be much smarter than us, but we still can make the right decision if we want to embrace purpose at the key of our investment decisions and also at the heart of your own living.
Indeed. Well, we're nearing the end of our time, so thank you both, Alfred and Pullman, for your insights and time, and thank you everyone for joining us. Many thanks to the organizers and sponsors of Hong Kong FinTech Week. Please don't let our discussion stop here. Let's continue to explore the exciting intersection of green tech and AI, and enjoy the rest of Hong Kong FinTech Week. Thank you, everyone.
All right, and thank you very much to our unicorn hunters. Just to give you a heads up before I introduce the next session, it will be in Putonghua. So once again, if you need to get the simultaneous translation devices, run, don't walk, grab it because you are going to want to catch as much of this next session as you can. Once again, thank you so much. Oh, so lovely. So our next topic is one that I'm very excited about because this is kind of my thing. The e-renminbi I am super interested in. And in particular, we're going to be discussing its introduction into Hong Kong. Hong Kong will almost certainly be the place where they have the first cross-border, cross-boundary applications outside of mainland China. The e-renminbi has gone through extensive testing in different parts of China and even a little bit here in Hong Kong. And we have exactly the right people on stage now to tell you how it is likely to roll out, answer some questions, and see how the development is coming along. So we're going to be fortunate to have today's discussion led by Julian Ip, who is a political assistant to the Secretary for the Financial Services and Treasury here in Hong Kong. The Secretary himself was here on this stage yesterday. The organization that is designing the e-renminbi in China is the Digital Currency Institute of the People's Bank of China. And we have their Deputy Director General, Di Gang, who's going to be joining us today to talk about that. It's a strong signal where it might first be applied by the fact that we have Roy Ying, the CEO of Octopus. If you're from Hong Kong, you know what an Octopus card is, but it is kind of the everything payment card that Hong Kongers use on the MTR, 7-Elevens. It's everywhere. Tiny little stores, great big stores. If you're not from Hong Kong, that's what it is. One bank that has been involved in the testing is the Bank of China, Hong Kong. And we are fortunate today that we have the Deputy Chief Executive, Xing Guiwei, is going to be joining us here on the panel to discuss it. So ladies and gentlemen, get your simultaneous interpretation devices if you need them. If you speak Putonghua, no need. You're ready for actions. Ladies and gentlemen, let's talk to e-renminbi coming to Hong Kong. Julian Ip, bring it. All right.
好，各位来宾，大家好，欢迎大家参与数字人民币的跨境应用与展望论坛。大湾区一体化的加速进行，令两地人员的往来越来越频繁。 随着数字经济的崛起，金融科技的蓬勃发展正在改变大家的生活。众所周知，在主流的经济体里面呢，我们国家央行数字货币的应用研究不仅启动早，而且数字人民币呢也是最大规模的进入了试点的应用。在这种情况下呢，数字人民币的跨境应用研究，特别是便利内地与香港的民众的往来呢，就吸引了最广泛的关注。昨天呢，财富局的局长许正宇局长呢，也在金融科技周的开幕发言里面呢，提到数字人民币跨境支付的测试应用，以及我们特区政府以民生优先、向上互联为重点的政策取态。为了让大家呢更了解数字人民币在香港的应用价值，以及探索未来央行数字货币的发展规划呢，我们今天非常荣幸能够邀请到3位非常重量级的嘉宾。分别是我们监管机构以及行业的专家，他们是中国人民银行数字货币研究所狄刚副所长，八达通有限公司行政总裁殷天琪先生，还有我们中银香港副总裁邢贵伟先生。他们呢会就数字人民币在跨境场景下为香港带来的价值以及未来的发展规划2个单元呢为我们做出分享。那我们事不宜迟了，现在就开始第1个单元，是关于数字人民币的跨境应用。那我们呢可能首先呢就从数研所第1副所长开始。数研所呢对于数字人民币呢已经有很丰富的研究还有实践，您可以为大家分享一下数字人民币在内地的一些重点的应用案例，以及在跨境场景下能够为香港带来什么价值吗？狄所长。
好，谢谢追亮。关于数字人民币在内地的案例，我想从几个方面给大家介绍一下。一是在支持境外人士来华进行支付的便利化。从2022年的北京冬奥会到今年的成都大运会以及杭州的亚运会，数字人民币呢在这些体育盛事里面实现了精彩的亮相，同时也为境外运动员和赛事的相关人员进行了一些便利的数字人民币支付服务。目前，数字人民币的 APP 已经支持100多个国家的地区的手机号进行注册账号。同时呢，也方便大家开通钱包，支持境外 Visa、Mastercard 与钱包关联，并对钱包进行充值或者随运随充。对于香港用户，还支持通过拉起转数快 FPS 使用香港本地的银行账户为钱包充值，而且呢，在充值的过程中也没有充值手续费。此外，还支持境外人士在银行网点使用外币购买多种形态的数字人民币硬钱包，包括卡式、手环和穿戴设备等多种形态。第2个方面是数字人民币跟现有支付系统的融合互通，具体呢包括2个方面，一个呢是条码的互通，用户可以扫电子支付现有的2维码，实现用数字人民币付款，商户呢也不需要更换自己柜台的码牌，用户呢也不需要改变操作习惯。另外一个是数字人民币入驻支付平台，像大家比较熟悉的有微信支付、支付宝、美团、京东等等这些平台，可以关联数字人民币直接进行支付。通过这2个方面的实践，也证明了数字人民币不是要替代谁，而是要促进整个金融支付体系的升级迭代，发挥央行数字货币的作用，提升金融支付体系的安全性、互通性和提高货币流通的效率，降低交易的成本。3是数字人民币在对公领域的应用。数字人民币可以实现资金流和信息流的统一，并且可以加载数字人民币智能合约，实现智能化的支付，从而解决目前对公领域的痛点，支持企业的数字化转型。举个例子，比如在供应链金融的场景，商业银行为中小企业提供融资的时候，可以加载数字人民币的智能合约，使该笔资金在限定的场景或者限定的用途下支付。在该模式下，商业银行精准地追踪贷款的资金去向，可以及时的全面进行风险评估，这样也可以有效地降低企业的融资成本，提高企业的经营效率。针对于朱亮您提的第2个问题，数字人民币的跨境应用能为香港带来什么价值？ 我简单的介绍一下，数字人民币在跨境合作的应用方面，始终是坚持合规、无损、互通的原则，充分尊重各相关货币当局的货币主权和货币政策，充分尊重各司法管辖域的技术和业务主权。基于上述原则，我们也跟香港金管局跨境合作开展了充分的、深入的讨论和研究，相关的产品或者方案也陆续在落地过程中。以内地与香港数字人民币跨境支付项目为例，数字人民币跨境应用可实现香港和内地支付服务的双向互通，提升两地居民跨境支付便利度，助力大湾区一体化发展。自2020年9月启动合作以来，已经先后开展了2个阶段的技术测试，实现了内地和香港居民在线下跨境消费和线上跨境电商场景使用数字人民币。在业务设计方面，为尊重香港居民和商户使用本地货币的习惯，体现无损的原则，我们现在已经通过香港本地银行转接打通了数字人民币与香港转数快的快速支付系统，支持数字人民币与香港账户体系的互通，满足数字人民币兑换和商户结算的需求。在技术设计方面，数字人民币系统将技术标准也进行了优化和升级，进而兼容了 FPS 技术标准。通过使用 FPS 转数快的技术规范，支持数字人民币 APP 拉起香港本地银行手机 APP。这种技术设计既避免了转数快系统和香港本地商业银行的额外改造，也体现了无损和互通的原则。杭州亚运会期间，香港代表团尝鲜了通过转数快为数字人民币钱包充值和实现随运随充。这背后的逻辑就是基于数字人民币和香港转数快系统的后台互联互通，实现了人民币与港币2种货币之间的即时兑换。未来，数研所也将在央行总行的指导以及香港金管局的共同研究推进下，实现数字人民币与转数快在基础设施层面的对接，进一步提升跨境业务直通式的处理效率，同时也降低我们的交易成本。双边跨境项目的推进，一方面可以深化内地与香港居民的交流，吸引内地游客前往香港旅游，促进香港旅游业的发展，同时也促进两地的经济交流与合作。另一方面，利用数字人民币智能合约等金融科技手段，持续完善和提升内地与香港间的跨境基础设施的能力，畅通两地跨境资金流动通道，强化香港作为离岸人民币业务中心的地位，提升香港的国际竞争力。谢谢主任。
好，谢谢所长，给我们开了一个很好的头，也给我们介绍了数字人民币在内地的一些重点应用场景，还有未来为香港带来的价值。那我们现在换个角度，从第三方支付平台机构的角度来看看这个问题。那么来到八达通这边呢，我们了解呢，跟数字人民币已经开始了不少的合作项目，比如说香港居民现在入境深圳呢，也可以在罗湖区使用八达通购买到数字人民币的这个硬钱包。那么我们话题呢转到应总裁，你作为的世英八达通新的掌舵人呢，相信大家都很有兴趣听听你的分享。那么你认为呢，数字人民币对于八达通业务发展的重要性以及产生的价值是什么呢？应总裁。
谢谢主持人。首先的话，我想先从客户的角度出发。香港最近旅游业已经复苏，大家看到每个月大概有300万人次访港，超过80%以上是来自内地。但是其实我们八达通也注意到，这个内地游客访港的消费行为跟喜好也在逐渐转变。从之前的买，对吧，到现在的深度游，其实内地游客从之前以消费为主要目的的访港，到现在以艺术、与文化、与这个深度交流的这个目的为来访港。那我们认为说，八达通其实以数字人民币的结合，是最好能够解决内地游客访港相关的痛点，包括说是换汇就是人民币换港币，包括说是商户网络等等 我们作为不管是我们自己本身作为游客，或者是我们身为朋友作为游客，我们其实都会遇到相关的痛点。那八达通目前在香港居民大概有1/3以上是利用手机八达通作为支付。那数字人民币另外一个优点是可以让内地游客在访港期间不需要再使用实体八达通，可以直接使用手机八达通。以同样香港居民香港居民在地便利的消费方式来访港。谢谢。
好，谢谢殷总裁，很好的从内地旅客消费的趋势，还有解决内地旅客的痛点，给我们分享了八达通在数字人民币方面的合作。那么如果说呢，八达通是参与数字人民币跨境应用的新势力啊，那么中银香港呢，就应该是这些方面的资深的专家了。因为最近几个月呢，我们都关注到中银香港不停的推出很多数字人民币的跨境应用服务，所以我们现在的来到邢副总裁，我们想请教一下您呢，作为最早参与数字人民币跨境试点的商业银行呢，可不可以跟大家分享一下中银香港的实践经验，还有一些后续的计划呢？
好，谢谢朱琳哈。中银香港呢，我们应该说呢，是从2020年开始，我们就参与跨境人民币的试点，应该呢是香港地区啊，应该我们是第一家到目前也是唯一的一家这个跨境人民币试点的这个金融机构。那么到2022年底呢，我们是开始了这个数字人民币的这个沙箱验证的工作。那么到2023年今年的7月和9月份开始，我们是分别针对这个北下和南上的这个客户，然后进行跨境人民币的应用的大规模的一个推广的工作。到目前为止呢，取得了阶段性的一个成果和进展哈，在这里跟大家呢汇报一下。我们主要在2个方面哈，然后这个提升跨境人民币的它的一些能力建设和这个场景的推广。那么第一方面来讲呢，我们是进行这个基础能力的这个建设，因为大家知道呢来讲，我们要想能够使用这个跨境人民币来使用的话，包含着这个我们要申请钱包，要开通钱包，包括我们要充值、要支付，然后包括全流程各个环节。那么来讲，如何把这些各个环节能够通过一种全线上，然后实时的方式，能够全流程打通，然后构建这个全流程的一个跨境人民币的能力，其实对我们来说是非常关键的。那么在这2年多的这个时间当中呢，我们是搭建了一个全流程整体的一个这个跨境人民币的一个支付能力。那么在这个过程当中呢，其实我们呢也是为了方便我们香港这个本地的这个客户啊，那么在开通这个钱包的时候，应该说呢，只要大家有这个香港的本地的这个电话号码，然后就可以开通这个数字人民币，这样的话非常便利，非常方便大家去开通。那么第2个方面，在充值很关键。那么来讲，我们是打通了这个账户资金和这个数字人民币的一个通道。在这过程当中呢，我们同时还要解决跨境资金通道的一个问题，同时呢还要解决及时的这个货币兑换的问题。所以这3个问题呢解决之后呢，这样来讲，我们香港本地的客户就可以很方便的，然后采用中银香港的这个银行卡账户、银行的这个账户来进行这个充值。同时呢，我们还通过 FPS 的这个相互的一个转账的功能，然后呢支持只要我们客户能够在香港地区有银行的资金账户，就可以实现这个数字人民币的充值。那么通过这些能力的建设呢，也是为这个我们香港本地的客户使用这个数字人民币，然后奠定了一个非常好的一个基础。同时呢，我们在商户端也为呢商户提供了这个跨境的资金清算的服务。这个来讲也相对传统的这个服务来讲，其实也是进一步的降低了商户的这个资金清算的成本。第2个方面来讲，我们进行这个场景的这个开拓的工作哈，因为在整个大湾区，然后它的一个发展当中，包括我们香港融入国家发展的这个大局的这个整体的背景之下，那么来讲，如何解决跨境的这个场景推广是非常重要的。那么在场景推广方面，我们是聚焦了2个方面，一个是南下的，一个是北上的这个客户。那么南下的客户来讲呢，我们在这方面也是首先是基于中银香港我们自有的这个商户终端来能够接受数字人民币的这个它的一个支付。目前为止呢，我们有300多家这个商户可以支持数字人民币的它的一个受理。那同时另外一个方面呢，我们也是和这个合作伙伴， 然后来共同来搭建这个受理环境。包括刚才应总裁也提到了，我们和这个八达通然后一起合作，能够用数字人民币对八达通的手机版进行这个充值，进一步的这个扩大数字人民币的这个应用的场景。那么对于北上的客户，因为大家也知道，最近我们香港的居民到这个内地，尤其到深圳，然后罗湖和这个福田，然后呢这个消费非常热哈，所以来讲我们也是和福田政府和这个罗湖政府，然后也是共同然后推出了这个跨境购物节的活动，通过呢我们三方来那个发消费红包，来拉动这个数字人民币的一个消费。那么我们从9月份开始呢，然后启动了这个活动。那么到目前为止，应该说呢，我们有11000名这个香港的这个客户啊，然后开通了这个数字人民币的钱包，这样来讲也大的推动了这个数字人民币的一个跨境消费的一个整体的工作。同时呢，我们还在开展一些特色的一些场景的研究，通过这样的一些特色场景研究来进一步的推广，然后数字人民币的它的一个应用的一个推广的工作。我们呢也是后续呢，我们希望呢也是在数研所哈，我们整体数研所包括香港经管局的大力的这个指导和这个支持之下，进一步呢扩大数字人民币的一个应用的场景，也是为呢香港人民币离岸中心和这个国际金融中心的建设也是贡献力量。好，谢谢。
好，谢谢邢副总裁的分享。那么下一步呢，我们就来进入第2个单元，关于未来央行数字货币的发展的展望。目前呢，数字人民币在香港，刚刚大家提到的很多应用呢，也是在个人零售的层面。但是呢，我想大家也很关注呢，数研所在这方面的计划，在未来呢，如果数字人民币在香港更多的发展，除了个人应用方面呢，还会有哪一些方面的计划呢？我们这方面也请狄所长给我们分享。
谢谢主任。您刚才也提到了个人零售方面，其实大家对零售支付场景呢有一个误解，认为是小金额的才属于零售，大额支付就不属于零售。其实区分这个零售还是批发，是指的批发是指的金融机构之间的，才叫批发，也就是跟交易对手是相关的。如果交易对手不是金融机构之间的，哪怕只要有一方是企业，或者是说个人，或者是说各种单位，它其实都是属于零售的范畴，都是数字人民币的潜在的支付潜在的场景。所以的话，将来的场景还是非常广泛的。随着内地和香港数字人民币的在双边合作的这个项目的推进上，在不断的拓宽个人的这个应用的受理环境，包括用户的体验，提升用户体验和受理的这个范围以外，我们可以尝试推动数字人民币在两地之间的跨境的这个试点应用。前期呢，我们也做了一些企业方面的一些调研，发现很多企业在国际贸易双边之间呢存在通道单一、成本高、效率低，等等各种各样的问题，也充分表达了希望参与内地和香港之间双边的试点的诉求。使用数字人民币来降低企业的跨境成本，提高跨境的效率。因此呢，可以在双边合作的框架下，研究数字人民币在油气啊等等各种大宗商品之间的这个商品贸易和服务贸易向下的跨境支付应用。好，谢谢主任。
好，谢谢所长。我们也期待更多数字人民币的这方面的不同应用，可以跟我们快一点的界面能够用，无论是个人也好，企业也好。刚才您提到的在大众商品方面的那方面，如果能够应用，相信大家也很期待。那么除了数字人民币以外呢，其实我们香港呢也在推进数码港元方面的研究，还有相应的应用场景的各种测试等等的。那么八达通的殷总裁，您觉得现在呢央行的数码货币，我们不停的推进各个项目还有研究，对于香港未来的发展，还有如果往宏观一点的说呢，对香港数字经济的发展呢会有什么样的影响呢？
谢谢 Julian。香港作为一个国际金融中区，当然能够受益于 CBDC 的推出。央行数字人民币的话，其实类似于一个桥梁，是一个可以帮助香港连接世界各地的一个桥梁。在过去几天 FinTech Week 当中，我们听到许多的不管监管机构也好，或者是业界的商业伙伴也好，都在讨论说CBDC 的实际落地应用场景。 但是我们看到，其实大部分的讨论都是有关于像Ethan刚才提到的，说是企业或者是批发层面的应用场景。那么八达通认为真正能够便民便利的应用场景是在于说是跨境零售。那八达通作为香港最大的一个支付商户网络，超过18万个支付点与数字人民币的结合，我们认为是一个最好的例子案例。除了跨境零售之外，我们认为说其他潜在的案例，包括说是如何利用智能合约在这个客户的商场交易之中提供安全与保障，比如说是在美容院购买预付卡，或者说是一些个人商户在网上的一些卖家，那数字人民币都可以智能合约都可以提供相关的保护。那我们八达通希望能够与政府相关机构和业界的商业伙伴持续的推广央行数字货币以及数字经济来香港作为一个发展中心。谢谢Julian。
好，谢谢殷总裁给我们提出了这个智能合约的概念，还有就是桥梁，就让香港整体的经济呢能够受惠的这个概念。那么我们现在提到是数码港元的方面的研究。金管局呢，其实也已经启动了相关的先导计划，也是这一次金融科技周很热门的话题。然后我们也注意到呢，中银香港也参与在了首批的验证计划里面。那么可否请邢总裁呢，也给我们分享一下中银在这方面的整体规划是怎么样呢？
好，谢谢主持人哈。然后因为中银香港呢，我们本身呢也是按照这个金管局然后数码港元3轨道的这个推广计划，然后呢来进行这个数码港元的这个探索和实践。那么今年呢，刚才那个主持人也提到了，应该今年的金管局5月份推出了这个数码港元的先导计划，我们呢也属于第一批，然后呢参加这个先导计划的这个金融机构哈。那么在这个过程当中呢，应该说我们也是充分发挥了，因为大家也知道中银香港我们是这个发招行，同时呢我们又是数字人民币的这个应用推广的这个银行。应该说呢，我们既有这个货币管理的经验，也有这个数字货币的这个产品设计的经验。我们希望呢，把这2个方面的这个优势和经验结合起来，能够呢用到这个数码港元方面。那么在目前来讲呢，我们刚才其实应总裁也提到了，如何呢能够利用这个数码港元它的这个可编程智能合约的这技术，能够真正的能够实现这个业务价值、商业价值，这是最核心的一个点哈。所以呢，确实我们在设计我们自己这个应用案例的时候呢，也是选了这个预缴消费的一个模式。其实和应总裁刚才提到的是一致的，因为大家也知道呢，在内地呢，这种套餐的消费或者预缴消费呢，其实是比较多的。那么在各种那个美容然后这个医疗然后餐饮呢，各个行业其实都有特别广泛的应用。但是呢，对于这种预缴消费的这个商业模式，有一个特别大的一个痛点，就一旦这个商户经营不善，然后一旦关闭的时候，其实会给我们零售的这个客户会带来很大的资金损失。那么如何在这个商户和这个客户之间，忠诚的客户之间建立一个非常强的一个信任度？然后这个呢，实际上是我们设计这个预缴消费模式的一个初衷另外来讲，我们也是希望能够利用这种智能合约，然后这个可编程它的一个技术的一个特点所能带来的一个优势。所以在这过程当中呢，来讲呢，我们设计了一套利用数码港元的一个完整的一个解决方案。这样来讲呢，实际上是在这个商户和这个客户之间建立一个智能的一个合约的一个机制。另外呢，同时这个资金呢，我们本身并没有像传统的这个模式一样把它转到这个商户端，而是呢通过智能合约锁定，同时呢依然还在零售端。这样它的好处来讲呢，使得商户呢，然后来讲它能够因为忠诚客户，它可预期的很多消费带来非常稳定的现金流。那同样对客户呢来讲，因为资金本身还在他的名下，然后但是被智能合约所锁定和约束，那这样的话来讲，对于他来说呢，他没有资金损失的一个担忧所以这样的话来讲，通过这种模式呢，使得商户和这个忠诚的客户之间建立一种非常稳定的、非常相互信任的一种这个相互的关系，来推动预缴消费这种模式呢，在香港的这个扩大和应用吧。 到目前为止呢，我们这个先导计划这个应用以来呢，目前我们已经有10余家商户，有50多个产品，然后来讲采用这种模式来进行这个预缴消费。那同时呢，我们现在也在内部客户进行验证之后，然后现在也正在向外部客户进行大规模的一个推广哈。相信这种模式，另外同时这种模式呢，我们也和传统的我们中银香港呢有面向零售客户的这个支付的解决方案，这个 BOC Pay。那同时我们也有面向商户的支付的解决方案 BOC Bill， 所以我们呢是把数码港元的应用和原有的这个 BOC Pay 和 BOC Bill 这种解决方案是完整的结合起来，并没有给客户和这个商户带来额外的一些负担和这个压力，这样来讲使得它的推广呢更能借用原有的这种技术和方案的优势，然后能够获得更容易的一个推广的一个模式哈。那么在这过程当中呢，我们也同时，因为在先导计划当中也有很多同业一些各家机构推出了也是有非常好的一些应用的一些案例，我们也在进行学习和研究，希望来讲呢，来进一步扩大中银香港在数码港元方面的一些应用案例，也是呢为我们的更多客户来提供更多的一些产品和解决方案。好，谢谢大家。
好，谢谢邢总裁。那么最后呢，允许我做个总结。非常感谢今天3位嘉宾呢，从已经投入应用的经验，还有案例，还有呢为我们展望了未来央行数字货币，包括数字人民币，包括数码港元，未来可以对香港经济带来的价值，还有未来给我们巩固竞争力来给了一个非常好的分享。我们希望呢这些价值呢的应用呢可以尽早投入使用，让社会真正体现到它的便捷高效，还有低成本。我们也非常期待呢，央行的数字货币呢，可以更加巩固我们香港作为国际金融中心，还有离岸人民币中心的地位。那我们很希望呢，大家可以一起努力，更加推广数字货币在各个方面的应用。希望呢今天的论坛呢，能够给大家各位有所收获，也非常感谢3位嘉宾的参与。那么本次的论坛就到这里了，谢谢。
好，那我们拍个照。拍个照。
谢谢你. Thank you very much, ladies and gentlemen. Keep an eye out for the e-renminbi coming soon to an outlet in Hong Kong near you. Julian, great job. Well done, sir. Ping pong is not just a great sport, it is also a great fintech company. But ping pong is also exactly what many of us running businesses have to deal with when we are doing cross-border payments. And I just got an email from somebody who's like, Andrew, we sent the money from Dubai to your Hong Kong bank account 2 weeks ago. Did you get it? I'll ask the accountants. No, we don't know where to find it. Hey, guys in Dubai, can you send us the proof? Okay, we'll go. Ping, pong, back and forth. And that is, in many cases, the current state of cross-border payments. But a better future is coming. In this session, powered by Citi, we are going to be talking about the future, a better future of cross-border payments. We're going to be speaking to Aaron Liu. Aaron Liu is the co-founder of the aforementioned great fintech company called, one word, Ping Pong. He's going to be joined on stage by Ronit Ghosh. Ronit Ghosh is the global head of the future of finance, part of CGI. No, we're not talking about animated special effects. CGI is the Citi Global Insights. So get ready for some Citi-powered insights right here on the main stage. Ronit Ghosh, bring out your man. Go get him.
Great, thank you everyone for staying. It's Friday afternoon. We're going to be talking about payments, money, how money moves, and how money will be moving. But to set a little bit of context before we get some of the insights from the founder or co-founder of Ping Pong, I just want to put this into context of where we are in the evolution of money and technology, and that's the role I play at Citi. As the MC said, I run a unit called Future of Finance, which is all about where is money going to in the next 2, 3, 4, 5 years. And it's really great to be back in Hong Kong. I'm based in Dubai, so it's really good to be back in Hong Kong for the first time since COVID, because we've always believed that the future of money, the future of payments is being built in this region. And it's being built in China, it's being built in India, it's being built in what used to be called emerging markets, but actually now are leading markets rather than emerging markets. And I just want to talk a little bit about putting this into context in terms of how quickly everything is changing. You've probably seen this chart before. This is about the speed of user adoption. About a year ago now, OpenAI rolled out ChatGPT. Within 5 days, it got 1 million users. In less than a month, it got 50 million users. This is the fastest adoption of a new technology that we have seen in the history of technology. We've seen others that have been close. The growth of TikTok in many countries has been super fast, but this is a great example of how quickly technology is changing. And on that page in front of you, we just put into some of the big ones that are going to reshape money and finance in the next 2, 3, 4, 5 years. AI, obviously, is the big one I've talked about. We're also going to see coming in the next couple of years with better consumer devices, XR. We used to call it the metaverse before. Let's call it extended reality. Augmented reality is going to change the nature of commerce and shopping. And we'll talk about e-commerce in our conversation, but so much of shopping is experiential and embedded, and extended reality is going to change the world of shopping, e-commerce, and as well, in some ways, cross-border technology is going to be changed by variations of digital assets and blockchain technology. This is going to have huge boosts to both productivity in particular in our industry, and also the nature of the way money moves. Money is going to be programmable. And zooming in specifically on cross-border payments, and these are some of the topics we're going to be talking about in more detail. Speed. Our MC talked about, I think it's been 2 weeks he's been waiting for his money to arrive. I had a similar experience when I was trying to move money between Dubai, where I'm based, and Cairo 3 years ago. Sent the money. A week went by. I called the founder. It was a small personal investment. And the founder said, "Where's your money?" I said, "I sent it a week ago." Hasn't arrived. And then there was a religious holiday. Eid happened. So 1 week, banks are shut. I don't know why computers have to be shut when there's a religious holiday, but banks were shut. I called the bank again. It took 3 weeks for the money to arrive. Now, maybe the money shouldn't have arrived because that FinTech has now failed, so my investment went to zero, but it took 3 weeks for that money to arrive about 3 years ago. So speed, we're used to very quick everything in our personal lives, right? And transparency. The classic one is pizza delivery or any food delivery, right? When I order pizza sitting at home in Dubai, I can track the food being made. I can track the driver arriving at the pizzeria and picking up the pizza. I can see where he's on the highway on the way to my house. Can't do that with money sometimes. So transparency is also an important point, and obviously costs. And let's dive into some of these topics. Aaron, thanks so much for joining us. Tell us a little bit about, we were talking backstage about the founding of Ping Pong. Right. It was actually set up by your co-founder in New York?
Yes. Thanks for having me. And right, so back to the year of 2015, actually our first office was set up in New York. That's our very first company. So that actually comes up with a very simple idea. We are going to do a cross-border payment things, right? And so we should set up our first entities in the financial center of the world. That must be New York, Manhattan, exactly, right? And so that's just where we get started. But after several months, about 3 months, we realized that to do payment, especially cross-border payments, the most important thing is to find an emerging user scenario, right? You should have customers, and why the customers choose to use you? Because they are going to use it. It could solve their payment or business problems there. And so we started to think who will be our customers, right? We realize that's the point where we realize that most of the successful US-based companies are actually global companies, but they have no problems of cross-border payment because they using US dollars and they can buy things from every country around the world. But if you wanted to, but on the other hand, if you look at Asia, right? Asia actually sitting in the center of the global trade supply chain. And maybe over 50% of the global trade was originated in China, in the East Asian areas. But in this area, the money is not freely flowed, right? And so if all the sellers, all the merchants based in China, they sell something outside of China, they will receive US dollars, but they can only get back with RMB. And so we realized that our initial customers was actually based in Asia, in China. That's why we moved our company from US to China.
And now you're based in Hangzhou. And
yes,
when did you set up the company in Hangzhou? And talk us through the early years of what was it like building this company out of Hangzhou?
Yes, we set up the Hangzhou company in the summer of 2015. And at that time, we only have like 4 people there. That's our 4 co-founders. And so our very first service offering is like a global money receiving service to help all the China-based e-commerce sellers who sells like in Amazon platform, sells to Amazon US consumers. And we help to get their money back in a very efficient, safe, and transparent ways. At that time, there are other players in the market. Most of them are not Chinese companies. They are US companies or Europe companies. Their product offerings is very limited at that time. I tried to use one of our competitors' service before we set up our product. I just found that it took us almost 2 to 3 weeks to get all our money back. And just like you described your experience, you didn't know where the money is during the whole process. And you didn't know that's how many RMB you would receive because you didn't know the FX rates they are using. They didn't tell you about that. And on this kind of service, they will charge like 3%, 2 to 3% of the extra fees for that. So that's not fair, right? And it's not very healthy for the e-commerce industry because the regular e-commerce sellers, their net profit rate will be no higher than like 10 or 15%. So if only payment will take like 3 to 4% out of it, there will be no profitable, right, at all. So we think, we realize that that's some problems we are going to resolve. And if we did that, it could change the industry. It could change the game, and we could succeed based on that.
So the clients you were trying to solve pain points for are these merchants who are on, it's a lot of very e-commerce folks, merchants, trying to get their money, collect money for them, get payments in from all over the world, back to China?
Yeah, that's actually a start point. And we start by serving China-based merchants. Then after 1 year, we realized that that's a very successful business model because we got money from that. And so we also realized that there are, outside of China, there are other countries' merchants also facing the same challenge, like some merchants in Vietnam, in India, right? And they all start to selling online, and but they are facing the same challenge of getting their money back. So we started to expand to other countries outside of China.
And how did you mentioned there were other companies doing similar things to Ping Pong in the early years. How did you differentiate yourself? What was it you did differently? Was it your technology, your client service, your UX, what UI? How do you differentiate yourself?
Yeah, I think the first difference we set up is that we actually build our proprietary payment networks. That's all by ourselves. And we build it based on the banking rails and together with Citi, right? Right, that's the kind of very different.
Could you unpack that a little bit more for the audience? When you say proprietary banking rails,
yes.
Payment rails with
Yes.
Citi, what does that mean, just so the audience understands it better?
Yeah, so in the payment world, right, there if you step into, if you tackle into the cross-border payment, you are facing actually a lot of options here. You can use a bank, right, as the fundamental infrastructures, and you set up everything on top of that, right? And you can also choose to work with like Visa, MasterCard, the card schemes, and so that you can also, set up the similar product based on that. The difference is that if you want to work with bank, that you should prepare to have a very long leading time, because the bank need you to have a license. Prior you're working with a bank like Citibank, and you need to have a payment license. It will take you like 6 to 12 months to apply for it. And after you get a license, you should have your system, should set up the whole of your compliance and regulatory infrastructures to accommodate to Citi's requirement, so that Citi could do together with you. So it will take you like 1 to 2 years before you're working, before you could get access to Citi's service. And so you need to invest before you have your business. But if you didn't, there will be a very low cost based on the banking rails. It's only cost a few bips to handle all the cross-border transactions. But if you choose to work with card schemes, it will help you to set up your service in months, right? Because usually they don't need a license, and usually they will treat you like a technology company rather than a financial institutions. And so that you can set up your first product in a very efficient way. But the problem is the cost is pretty high. The card scheme will charge for like 2 to 3% for every transaction. If you are intent to serve all the business, that's a very high cost that could not last at all. So at the very beginning, we started to, we realized, we know that we are going to serve the business. And our offerings, our charge rate of our service will be no higher than 1%. That's a very fair sustainable, right, business model. But that means that we need to have a very good cost structures. That means that we should set up our bank infrastructures based on bank instead of only on the bank card rails.
Now, the core to your business and this panel is about cross-border payments. And could we talk a little bit about how is the business going? How is the cross-border industry, the payments industry growing? We've done some research recently where we talked about how the classic globalization model, sorry, this is a plug for this report, by the way, we just published. You can download that with search engine of your choice. It's called Future of Cross-Border Payments by Citi. In that report, we talked about how classic kind of B2B payments, the globalization of the 1990s, multinationals setting up plants in first China and then Southeast Asia, the trade flows, those have all begun to, that kind of flow has slowed because as we all know what's happening in geopolitics. What does globalization 2.0 look like? Because that's your bread and butter. There's so many commentators who say globalization is dead, cross-border should all be domestic, and yet that's what you do, cross-border. Where do you see the growth? How much growth is there, and what's driving it?
Right. So actually, I'll give you an example. And about 6 months ago, I have a discussion with one of our potential customers, who is an Indonesia merchant who is doing online sellings in domestic online sellings in Indonesia. But his suppliers, he wanted to purchase his merchandise from the internet from some China suppliers. But he couldn't do that. The reason he couldn't do that is because he has no US dollars. And on the other side, the China seller will not accept the local currency. right? So you can see that there is business opportunities there, but because of the payment, you cannot do it because you don't have a proper payment tools for you to do that. And so my point is that in the region, in the world of cross-border payment, you are not only help to facilitate the payment itself, but you are also opening new business opportunities for all these merchants.
Absolutely, yeah.
Right. So as the time goes, as the globalization, you can see that more and more buyers, I mean the small media business, wanted to find their vendors or suppliers online, right? They wanted to do it online, but without the feasible and very good cross-border payment service, they cannot do it. So that's where the new growth comes. It comes from the people wanted to do business on the internet, and the payment actually you cannot just focus on the existing opportunities because the banks already did it. Like Citibank, I think all the major exporter, importer, they are all customers of banks, but the future of the global trade should be digitalized. There will be more and more thousands, or maybe tens of thousands, new small, medium business enter this industry. That's where the growth comes from.
But that's exactly the thesis we had in our report, which is that when people say globalization is slowing or dying, they're thinking about supply chain globalization a la the 1990s. And what you're seeing now, globalization 2.0, is that small businesses, consumers, us as individuals, we are global in a way that we weren't 30 years ago in terms of our travel, our education, our information consumption, our content consumption. It's much more cross-border. And it's also not just across the Pacific. As you said, it's Indonesia to China, it's India to Korea. There's lots and lots of fragmentation going on, but there's a lot of new corridors. And the B2B classic globalization is where there's not much growth, and people look at that. But if you look at B2C, so businesses selling to consumers, or consumers selling to other consumers, or consumers buying from businesses, those segments are growing, in many cases, double digits right now. And it's ignored because it's small, yet the revenue opportunities there, because the margins are much bigger, are significant. So I thought that was the thesis of our report, that globalization 2.0 is very much alive and kicking, and it's an opportunity for fintechs as well, and banks will accept that. When banks, in our report, we surveyed lots and lots of our bank clients, because we have banks as clients, and they said, actually, we are already losing market share to fintechs in this space, because we know how to deal with the big manufacturing supply chains and B2B. But if you're an internet reseller, or are you doing content online? That's a business that the banks sometimes are not very good at handling, because they don't know the consumer touch points as well as the.
I don't think that we are actually competitors, and we cannot do this without the bank support. You know, Citi is one of our most important global partner. And so you helped us to set up our own infrastructure, but it's still in Citi's account systems.
Win-win.
So it's a win-win collaborations, and every merchant we onboard as our customers actually becomes a Citi's customer as well, but in another way. So from my perspective, I think the fintech company should have such kind of very constructive relationship together with major banks like Citi. And it's very essential because your business actually relies on this.
Now let's look forward. It's coming to the end of 2023. So if you're doing this session again, say in 2025, in 2 years' time, or in 2026, how has it changed your business, the cross-border payments world, the e-commerce world? In the next 2 or 3 years, what are the big changes you see, and what's exciting you the most?
I think there are two things you need to address here. The first thing is that I do believe that the digitalization of global trade will not stop, and it will increase a lot in the next 5 or maybe 3 to 5 years. And so now, just in China, I think there are maybe 10% of the global trade are doing online. But after 5 years, I'm expecting this number could increase to like maybe 30%.
So it's 10%?
10% to 30%.
in the China market. And,
Yeah.
and we have similar numbers for other markets?
I think China is a little bit ahead of this little trend, but in the other markets, I think it's all the same. It's just maybe 5 years behind the trend. So it's a very vast, addressable market here. And so the second thing I wanted to address here is that if you look at all the major technology companies like Alibaba, like Tencent, you will find that maybe only 5 to 6% of their annual revenues comes from customers outside of China. But if you look at their peers in the United States, like Google, like Facebook, almost 50% of their revenues comes from market outside of the United States. So my point is, at the end of the day, all the major technology companies will become international companies, will have international business. But they are, in China, they are just getting started. And start from about 2 years, I think start from 2021. All the major China-based technology companies started to invest into their globalization business. And so that's the start point. But I'm looking forward, so maybe after 2 years, 10% or 15% of their revenue will come from market outside of China. And I also expect at that moment, I will be, together with Citi, we will be the major payment service provider of their new growth.
Right. So you think, just to sort of recap, so the share that's online or digital goes from 10 to 30 in a few years' time.
Yes,
and then the share that's international goes from about 2-3% to 10-15, like a 5-fold increase.
Yes.
So you're talking about a dramatic increase. I can't do that in my head. What's that like? Times 3, times 5, like so a 15 times increase in the market. The addressable market, 15 times. Okay, that's a pretty big opportunity. How does your company, whether it's a business model, does it need to change at all? The people, the way you run your business? Because this market is growing so big. What do you need to do differently? I mean, you started 4 people, 4 friends, I guess, in 2015. How does this need to change?
I think we have already did a lot of preparations, such as together with Citi, we have set up our global payment network that could cover almost over 200 countries in the world. So we have did all the infrastructures, and the most important thing, next step, is about the to hire enough talented people. We could not be a China company anymore. We could not only recognize ourselves as a China company. We are a global company. So the change should be getting started from all the people who do that. So that's why we start to set up our international business team, start from this year. And we have now maybe 15 top talent payment guys in that team. And they are doing something that's might related not only China, but the global business, global trade. And so I think that's the essential part of it.
Aaron, we've run out of time, sadly. Look forward to doing this again in 2 or 3 years' time, and then seeing ping pong times 15.
Yes, thank you.
Thank you very much.
Thank you. Thank you.
Thank you.
Whoa! And we're swinging up here on stage at Hong Kong FinTech Week. The action never stops. Thank you very much to our speakers there, and hopefully they're going to sort out that whole world of cross-border payments, like I said. Well, that's what happens when you lose your mind. You come up here. Ladies and gentlemen, Bitcoin fundamentalists, they have their first love, and they will never be pried away from it, but it is the Ethereum network, where weird and wonderful things can happen, where those with new ideas for business models, programmers, coders, entrepreneurs can make something weird and wonderful happen. Our next speakers have been to see the ecosystem they are building, and they have come back to tell us about it and what they have beheld. We're very excited to have them today. We are going to have a conversation between Jeff Wren. He is a partner with OKX Ventures, and he is going to be in conversation with Elaine Ramirez, who is the head of audience development for CoinDesk. Ladies and gentlemen, let's hear it for them. Here they come, Elaine and Jeff. Come on down. Right this way. Take it away.
All right. Thanks, Andrew. And thanks to all of you for powering through day 2 here at Hong Kong FinTech Week. So I'm Elaine Ramirez. I'm head of audience development at CoinDesk, which is a news and events company for digital asset space. And here I have Jeffrey Wren from OKX. But I used to be a tech reporter here in Asia. I was based in South Korea for 7 years, and that's how I got involved in blockchain. So I've been watching this space for the past, 7 years through all of its highs and lows. And I didn't ever really imagine that we'd have a conversation on the center stage of Hong Kong FinTech Week about such an in-depth topic so soon. So it's really testament, I think, to the level of adoption being so accepted here, especially in Asia, and also just in general with the financial industry. So this is my first time back in Asia since the pandemic. So I've been touring Asia from South Korea to Singapore to Indonesia, now in Hong Kong, just getting in touch with the Web3 circles around here in the digital asset space. And although it is crypto winter, there's not a lot of retail action happening right now. But actually what that really means is that this is the time that the innovators are really coming out, and it's really time to build. So a couple of the major themes that I've been hearing about for the past few months that I think are really the ones that are going to come to fruition in the next several months. One being onboarding traditional finance, which you can already see here at the conference. It's amazing to just go out here and see how digital assets are just so openly adopted. And the other is infrastructure, really investing in the infrastructure. So this was a huge theme that I've been seeing this whole around Asia. So one theme in particular that we wanted to dive into today, we don't have a lot of time, but one thing that I've been hearing over and over and over again is around this thing that is called zero knowledge technology. So obscure that very few people really can understand what it is so far. And we're so early to this technology, but I think once we do figure it out, and once it does come to market, it has huge implications for the products that we can be building, especially in the banking industry. So today, what we're going to do here with Jeff, we are going to dive in to help everybody here understand what are these cutting edge technologies that are being built right now. So what is ZK Tech, and how are we investing in it, and where do we see this technology and other technologies coming to fruition, especially for the banking industry. All right, so thank you, Jeff, for being here for this adventure with me. Can we get started just level setting and tell us a bit about your work at OKX Ventures and how and why you invest in technologies like this?
Sure, thank you, Elaine. So I'm Jeff Wren. I run the OKX Ventures, which is an investment arm of OKX Group. So it's all balance sheet money, we're considered corporate venture. And I led the team in the past few years, and our focus has always been to help formulate the group's strategy and help execute it through investment and other commercial partnership. So one focus is really to foster and contribute to the ecosystems around the major layer ones and layer twos. And in our space, people always distinguish Bitcoin versus crypto versus blockchain. So we are supportive of all the technological innovation on all fronts. Even on Bitcoin, where what we feel already is a very established and very degen, very established, not old-fashioned, but continue to have a lot of innovation. OKX is the firm that supported audios and Bitcoin 2.0. A lot of things happened in this past few months. On the crypto side,
Ethereum especially, we're a big supporter of the largest Ethereum developers community, Gitcoin DAO. I myself proudly serve as a council member. We took them, did the first sharing point in Asia during Token 2049 in Singapore. And as a matter of fact, we're supporting layer 2s, and we're probably going to launch our own. We're interested and exploring the possibility of launching our own exchange chain layer 2, very soon. So now you talk about zero knowledge, and I think probably for some of the audience would have zero knowledge about what really zero knowledge is.
Yes, it is a very
short,
topic.
in short, on a blockchain network, let's say we have one set of users. We call them prover, right? We also have another set of users. We call them verifier. In order to make some transactions take place and completed, you would be able to execute it without necessarily knowing the complete set of data for the transaction itself. So that is what we call the zero knowledge technology broadly. I think it addresses some fundamental challenges or bottlenecks, so to speak, for the Ethereum network and other networks alike, which is scalability and also the cost and risks associated with the transactions on the main chain. So this has become a very hot topic, attracts a lot of talents, a lot of capital, a lot of smart projects on this particular topic, and I think it's very exciting to see and invest and or otherwise contribute to this movement.
So backing up just to level set about what zero knowledge technology is, it's really focused on solving certain aspects for privacy as well as for scalability. And so in a nutshell, it's a way for you to prove that something is true while not really having to reveal so much about how you know that it is true. So
and also you rather keep some of that off chain as we usually kind of package it. Yeah.
Right. Yeah. So you were mentioning a few use cases even with OKX that you're already practicing zero knowledge technology. Could you, for the audience, give a few use cases that they can relate to?
Sure. I think probably audience would be familiar with recent, mishaps in our industry and some bad actors. I think one thing
Which ones?
Yeah, there are enough of them. I think one challenge would be that how you keep the users' assets separate and not to I think since the fallout of FTX, major exchanges have most of them came out with a proof of reserve exercise, which is considered one of the best practice in the industry at the moment. OKX has been consistently doing that for the past 12 months. So while we're doing this, one idea is that how the users can check whether their own assets or liabilities already included in that appeal proof of reserve, right? And without violating the privacy of other users or other user-specific identity or other user-specific information. So I think ZK technology coming to play, and I think OKX as a firm already adopt this in this exercise. The other thing I think is quite common, not necessarily for crypto exchange, but for most other financial players in general, is really the KYC exercise, right? So ZK technology would allow you to keep the KYC database separate from each other. Without, when you want to validating or verify a transaction or a identity, you don't necessarily need to disclose the full, I guess, details. There is a mechanism that where you can mirror, preclude, somewhat whitelist a scope so that you can actually, be able to achieve the goal, but without leaking too much of unnecessary data. This can apply to a bank, can apply to an exchange, or to a certain extent can apply as big as a country, I guess.
Sure.
For that.
So I get a bird's eye view working at CoinDesk of all of the different levels of adoption in the whole digital asset space. And on one side of the spectrum, we have traditional finance, big names like Franklin Templeton, BlackRock, et cetera, coming into the space. And then on the other, we have the cypherpunks, the movement that started in all these super libertarian innovators who were the ones who thought up zero-knowledge technology and had privacy in mind. And I know that especially in TradFi, it comes with a lot of baggage. And there will be adoption, and somehow we need to find some compromises here. So on one hand, we have TradFi, which comes with a lot of compliance issues, especially around KYC. And then on the other hand, we have the cypherpunks with the ZK innovation. Can these two worlds actually coexist? Like, what does it look like in the middle, especially when it comes to this issue of privacy and identity?
Right. There are a lot of stereotypes about the TradFi and the so-called crypto punks, right? And people always say crypto messed up with the TradFi, right? In my view, it's the other way around. The TradFi messed up with the crypto, right? Look at how a great company like a great project like USDC almost got taken down because of the fallout of Silicon Valley Bank, right? So there is a lot of lack of regulation or misregulation that actually affects the technical innovation. So in that, I think whether ZK can be implemented or be utilized, or not just ZK, these other blockchain enabling technologies can be adopted, used in TradFi. It's really, whether they can do things cheaper, better, safer, right? And, for example, can bank also disclose their reserve using zero-knowledge technology, right?
Do they want to?
Or do they want to? Do they want to hide themselves away from this, with the blames that, blockchain being anonymous and privacy? But don't forget, the data on blockchain are immutable, right? We talked to some TradFi folks, and one concern they have is exactly the trading record on chain, right? Do they actually want to disclose it? And so, ironically, on that front, they may want to consider adopting that knowledge.
So, I mean, the mantra, I guess, in the crypto circle is like most things are not a technology problem. Everything can be built, but will it really, hit the main stage or hit the market? So well, I think
we're on a main stage, so I guess.
Yeah, I know. Sorry.
Yeah.
But, so, I mean, as far as zero knowledge technology really like going to market, do you think that it could replace some of the KYC requirements? Or
I think they're probably going to disrupt the current system to the extent that people would see that there are a lot of benefit of adopting this, and I think we've seen the KYC. We've seen, for example, that KYC probably a little bit less common in everyday life. But let's see DocuSign, right? Nowadays people barely, well, I myself in my deals, for more often than not, we're signing DocuSign, right? And for some banks in Hong Kong, I know for some forms they would allow electronic signature and all that. So I think by analogy that would also happen when the stakeholders see the real benefit and the cost associated with it, the risks are containable. I think that would only become natural. I think users and user experience and the market would determine the mass adoption.
So,
rather than we rely on or hope for some miracle happen in the regulator's mind.
You just mentioned something about the costs associated with it, et cetera. Could you maybe illustrate a little bit? We're going off script here, but could you illustrate a little bit about the actual economics of if a banking institution actually did adopt ZK technology? Like, what does that actually mean for their operation?
I'd rather not to say that, but if you think about, if we believe in point-to-point, peer-to-peer payment system and all that, I think this would largely disrupt, what we're doing and how we do things nowadays. So this is not about moving the decimal points, up or down. It's really revolutionize everything. Of course, that it takes time, it takes consensus to build, takes the stakeholders to come up with a business model around that evolution, right? And so this is not a one thing, one protocol, one technology takes all. It really takes the collaboration and I guess the education and for adoption.
So let's talk a little bit about behind the scenes in building this technology, particularly with the investment landscape. So during my time here in Asia, especially here in Hong Kong, I've been talking to as many developers as I can. And last week there was an Ethereum conference, so there was this particular opportunity to talk to a lot of developers. And one question that came up was what is the biggest challenge for Web3 adoption or blockchain adoption, whatever you want to call it. But one developer, their perspective was that one of the biggest challenges was actually a VC problem. So they argue that funding is really hard to attract to something such as infrastructure investment when it's really not that sexy. I mean, it's a hot topic right now, but when you put it next to AI, metaverse, gaming, and all of these retail-focused applications that could have a much faster ROI, it's really hard to argue, that you should play the long game on infrastructure when the ROI is not so clear. So, as a venture capitalist, how do you reconcile with that time horizon, and how do you approach investing in infrastructure?
Yeah, I take it you're asking, infrastructure layer versus applications, right? Applications have its own challenges. It's not as rosy as you would imagine, right?
I don't think anything's rosy.
Yeah. Unfortunately, I think applications then, everything has its own. People start to view even some layer ones when they go out, talk about their token price, talking about valuation, everything. They all talk about cash flows and all that as if they're a traditional company. I think that there is a tendency there to say, oh, our token price is so low because our cash flow is so strong, healthy, and all that. So I guess that becomes a norm. But I would say that I would say this. So if you think about all these layer ones, most of them are foundations. White paper. It's the open source. There are different ways, different approaches for them to attract developers to come. There are grants, there are hackathons, there are public funding. Using Gitcoin DAO as an example. So for developers, I think it's critical to participate, because this is very different from a non-crypto startup mindset, right?
Sure.
You're not sitting here build a business case, build a product on your own. You are since day one part of a wider, bigger global community. You really need to find your clan, your belonging,
Sure, yeah.
and interact with folks. And more often than not, your creative ideas might have been tested. There might be many success and equal amount of failures are around, right? You put yourself in a right context and really talk to the crypto guys, the investors, the OGs, the founders of other projects. They can give you not just financial backings, supports, but also a lot of strategic guidance. I think that is the way to play along and grow with the ecosystem.
Yeah. So just going back to that question that that developer was answering, which was what is the biggest challenge to Web3 adoption or blockchain adoption? Let's just flip it a little bit. And what do you see as the biggest challenge for these developers that you're hearing?
Really find their own sort. Find someone who understands what they're doing, and finding go on the forum, go to the meetups, finding people and go talk to them, right? And a lot of if we go back even to the very Web 1.0 stories, when Steve Jobs, created his first, and Uzi, created their first, Apple computer. There are, the creation was coming out of a lot of discussion groups and meetups, these, chats, dinners, there. I think that's where your sorts are meeting, right? And there is that. I think I strongly encourage young students, entrepreneurs, with the smartest talents and right training, just to start from there.
Yeah.
It's not a corporate setting. If you're doing the VC, the fundraising, you get it all wrong. For example, when we talk to a lot of startups, first thing we talk about is actually what we have at OKX can offer, right? If you are doing a Web 2 gaming thing and you want to try out Web 3, what do you really need? If you need a wallet, don't build it, use ours, right? Or use other, there are open APIs around this, just save that. Your real innovation is not there, right? Is the gaming experience, is the the reward system, the economics you're building within your games, and the guild, how it plays, how you do the public communications, so on and so forth. So there are other challenges. You should pick your fight and really leverage on what the ecosystem already can support.
Yeah, we have so much more that we could be discussing, but I'll give you one closing question, which is I heard the other day a statistic that within 6 or 8 months there would be 100 to 150 of these solutions out there, which seems like a whole lot to me. But what do you think is the end game for what the zero knowledge technology landscape is going to look like? Like, how will we determine the winner?
Yeah, same as all other great things happening in our life. Market would decide it, and whether you can attract enough developers, you can attract enough users and community builders. There will be a winner, and in this game, it's a last man standing game. So good luck.
Okay, and with that, thank you so much, Jeffrey, and thank you all for joining us.
Thank you.
All right, thank you.
Thank you very much, Jeffrey and Elaine Ramirez. I like the way this guy thinks. The market will decide. I'm a free market kind of guy. Love it. Right now we're going to be, the next session, by the way, is going to be in Putonghua. It's time once again to change the channel. If your Putonghua is Fei Chan Hao, no problem. If you need a little help, you want to get one of the simultaneous interpretation devices. But we are going to be hearing from an investor who has really got his head wrapped around the concept of tokenization. And he's in particular looking at how tokenization can work in Hong Kong for people that want to invest in that sector. He is the chairman of Long Lane Capital, Mr. Chai Wen Sheng. And he's going to be joined today in conversation with Miss Cynthia Wu, the Chief Operating Officer of Matrixport. So ladies and gentlemen, big FinTech Week welcome for Cynthia and Mr. Chai Wen Sheng. Please come on down. Yeah.
大家好，今天非常荣幸的能够跟蔡总 share 同一个舞台。那蔡总本身呢，也是无需多介绍了，非常出名的天使投资人，目前也是龙岭资本的董事长，之前也是美图秀秀的创始人。那么蔡总，您作为在 Web2 领域在创业和投资都拥有过非常成功经验的这样一个创业者。在 Web3 领域，您觉得下一个爆点是会在哪里
？OK， 很开心跟大家交流啊。的确我，从创业，从 Web1 到 Web2 到 Web3，应该20几年了，就不断的在尝试新的东西。我觉得我们要去看 Web1 跟 Web2、Web3 的区别是什么？其实 Web1 更多立即的是 PC 互联网时代，那么 Web2 更多的说的是在移动互联网时代，也 Web3 现在当下应该是以数据为驱动的，用区块链技术，包括信息可能会结合 AI 的一个发展。我知道大家一直提到 Web3 就提到区块链，区块链的确是 Web3 的最重要的组成，但它不是全部。应该 Web3 会包含很多方面，这是，所以我们老是在谈 Web3，可能更多人就谈区块链，谈比特币、以太坊，当然，那个比特币、以太坊就是区块链的最重要的应用组成，特别是涉及到跟金融科技有关的，那如果说会不会爆发，什么时候爆发？如果只是它在金融科技这个领域，它是很难让全世界所有人都参与进来的，因为毕竟跟金融有关的不是每个人都要有参与，所以我们去看当时 Web1 的爆发，其实跟一个东西很有关系，就是 gaming 游戏。我记得在1999年，当时PC 互联网时代，当时也大家觉得很多东西都快速起来，2000年就破灭了。后来到了2003年，中国盛大游戏推出了一个传奇，这时候才是让中国人更多的加入到互联网时代。而且我们也知道，盛大游戏在2005年在美国上市，后来 QQ 也是2005年在香港上市，才蓬勃的去发展起来。那现在呢，我们有点像什么呢？也就是我觉得有点像2002年那个时候的互联网，我们需要再隔1-2年，可能是需要一个大众化的游戏，然后来去破圈，让更多人加入到 Web3 里面来。那如果要类比，从比特币的周期4年一个周期来讲，现在又有点类似2019年那个时候的情况。我们知道2020年比特币减半，然后包括当时整个世界经济的好转，然后带来了一波的大的反弹。那我个人认为呢，今年可能也就是像春天要来临的时候，那明年呢有3个条件，如果具备的话，就会迎来一个巨大的发展。那第一，我们知道比特币是在2024年的5月份会减半。那第二，可能是美国的监管 SEC 是不是会批准比特币的现货？第三，很重要的，也就是我们看到美联储的货币政策会不会转向？因为现在我们知道，美元的利息大概达到5.25%，那在这样高利息的情况下面，大家都不愿意做新的投资。因为纯银行都有5.几% 的回报了，对，所以明年如果这3个条件达到的时候，应该会迎来一个巨大的发展。 同时也会带来比如像游戏啦或者电商啦、社交啦这些的破圈。
谢谢蔡总，非常认同，就是说我们的破圈首先是一个用户的体量可能要10倍于现在的一个用户体量，那可能它需要从现在非常精和专的金融的一个应用来讲，去拖到一个更跟大家日常生活相关的，比如说游戏，比如说这个社交，非常认同这个方向。那我再想谈一谈资产，因为现在我们链上的资产还是很多原生的资产，还是相对比较小众，对大部分人来说。那么今年很火的有一个 Real World Asset Tokenization， 就是现实世界的资产上链这么一件事情。那很多人会认为这个可能会为区块链带来一个上万亿的一个规模，可能甚至是几十万亿的规模是来源于 RWA。那您认为 RWA 它的发展路径是怎么样的
？OK， 是的因为以前整个区块链更多是聚集我们所谓的币圈。在这个小范围流动，那么如果只是再这样，它真的很难得到大的突破。那我们知道，在6年前 ICO 那时候，其实就是希望能够发币，然后去募集基金，那么去发展。但 ICO 为什么大部分不成功呢？是因为当时更多只是一个创意、一个故事来包装、来发行，它是没有实际的支撑。那在前面几年，我们的很多人尝试用 SDO 来去发行。但这里面基本上包含的资产都跟现实没有太大的意义。那 RWA 其实就提出一个新的概念，把现实里面的金融资产或者现实里面的资产，通过打包，通过代币的模型，然后重新去发展。这个的确是未来最大的机会，我认为。但当然 ，RWA 也要分先后顺序，并不是说我们现在就能想象。把现实里面的数百万亿美元的资产都通过 RWA 来发，我觉得可能一开始会像国债这种标准化的产品先转化出来，那么第二个阶段可能是跟大宗商品或者房地产信托基金来 RWA 的发行，然后到第3阶段才可能是企业的上市啦，或者有创意的项目都通过这里面来体现。那刚才我也说了，之前的 ICO 跟 STO 不太成功的原因就是顺序搞错了，先把前面的这些虚拟资产跟有创业的资产想要来通过代币化不容易，所以反过来应该是会我刚才说的，先从标准化的、大众化的商品来发行代币化，然后让更多人来接受，才原先虚拟资产。对，
是的，因为我们在去做不同资产的上链，它的上链的价值主要是来自于一个现实的中间环节的一个消除，对吗？降低中间环节的成本，以及提高整个资产发行的效率，或者提高这个资产发行以后它流通的这个流动性。所以可能是这些可能是往往是 RWA 成长过程中必须要去解决的问题。
是的，
对。那么其实我们说到就是现实世界资产的发行，那可能目前我们看到最大的现实世界资产的发行实际上是稳定币，它已经获得了一个比较好的一个成功和基础。
对。
那今年的话，其实也有很多关于这个香港做稳定币立法这方面的讨论。那在7月份的时候，我看到您和一些学界和商界的同仁也发了一个提议，这个提议是说希望香港的政府来主导这个港币稳定币，然后用外汇来做它的backing 的资产来去进行一个发行。那当时您的这个提议背后的一个动机是怎么样的？
其实去年跟汪校长他们那个初衷其实是希望能够推动港府能够更快速的，然后来快速的来出一些政策，快速的来去做这个稳定币。因为我们也知道，在去年美国硅谷银行发生危机的时候，那时候其实是一个好的机会。如果那时候香港已经有了香港的稳定币，那么我们能够快速的去拿下这一块的市场氛围。那我个人是认为不一定由香港政府来发行，因为我们知道，其实稳定币就类同于现在的港币，港币也不是香港政府发行的。我们知道港币是汇丰银行、中国银行、渣打银行发行的。那为什么他们能发行？是因为他们有足够多的 外汇储备，足够多的黄金储备，然后他们来发行相关的这个港币。香港政府跟金管局起到什么作用？监管作用，来监管这3家银行，它有足够多的储备来发行港币，来监管他们不会超发，来监管他们的运行体系。那我觉得，那么香港呢，未来香港政府也一样，应该有批准，包括私人银行、私人的机构或者香港的外汇投资机构都来发行这个稳定币。当然，一个市场是不是会存在几个机构都来发展，市场容貌不一定对。我觉得在市场的发展前期，它是会以一个竞争的体系，就像现在我们的香港发行的交易所，目前只有 OSL 跟 Husky， 未来它可能还会再批准几家这样的交易所。那么经过市场的淘汰，它可能最终就会剩下2到3家，这是一个良好的机制。所以我更多的初衷是因为希望香港政府能更快速的来推行这个政策，然后不管是从它的外汇投资基金主导，还是私人机构来发展，特别是在明年可能是如果是进入一个牛市，如果我们再慢一点，可能它又会错过这个周期了。对。
对，应该香港的这个金融管理局的这个专业小组也是真的是快马加鞭的在希望这个尽快的这个稳定币的立法能够落地。那您觉得如果港币稳定币落地之后，它最好的应用场景是怎么样的？然后在地区内以及在本港，政府应该怎么样去大力的推行它，才能达到最好的效果呢
？OK 我觉得很多人还在讨论稳定币的应用场景这是不应该的。其实稳定币就会类同于我们的港币，那么未来所有的应用场景，港币能用到的，那么稳定币是一样的。我们要知道为什么会有港币，会有几钞，会有美元。最早人作为货币，它就是一个交换物。我们最早用贝壳，后来用铜钱，后来用白银，后来用黄金，它当时就是货币来做交易。但是它都实物的这种货币，就是携带不方便，然后包括保存不方便，所以后来我们才有了纸币。纸币就是来代替实物的。那纸币是有一个银行的机构来发行，但纸币也有它的问题，比如它会损坏、维护不好。那么第二，虽然纸币可以现在你网上交易，可以汇款，但是它还是有受到很多的制约。而稳定币我们就知道，用区块链的技术，它就能更便捷的来实现你交易跟各种交换。那未来我觉得所有的使用场景，并不是说它只用来交换比特币跟以太坊，这个我觉得它只是一个外汇交换。更多的应用场景就是说，你可以去消费，你可以去买各种各样的东西，几乎在现实当中的我们所谓的港币、美元的应用场景，稳定币它照样会实现的。当然，这里面它需要时间跟过程，对。
谢谢蔡总。最后，我们想回到香港的自身因为目前的这个地缘政治环境也是非常的复杂，而香港也是处在一个地缘政治比较交汇的一个地方，各个因素比较交汇的一个地方。同时 ，Web3 区块链又是一个非常颠覆性的一个技术创新、应用的创新。那您觉得在这么多的这个危和机之间，香港最大的机会是什么？在 Web3
？OK。我们知道香港它是国际3大金融中心，但香港之所以能够成为3大金融中心，有一个很重要的因素，就是第一，它背靠中国大陆庞大的市场，那么同时它又链接世界，因为当时不管是在港英当局还是在后面，它其实是中国对外的一个窗口，包括全世界的一些贸易都希望通过香港这个中转进入中国内地，或者中国内地的货物，然后去推广全世界。那以前的贸易组成更多是一个实物的交易，那么未来的贸易可能是基于数据跟基本。那么香港在这方面还是拥有无可比拟的优势。我们就拿跟新加坡来比，那么我们知道，就从基本市场。整个股票交易市场，香港还是远远超过于新加坡的。新加坡很难去发展起来。新加坡的优势更多是它更安全、更稳定，所以作为财务管理，新加坡有优势。那么，特别是当下，就像说的，虽然中美的一些地域战争， 那也许这样，我觉得香港会展示出它更独特的地位。当然，我们的香港政府也要懂得怎么样去利用我们的这个优势。所以，因为前面是因为3年的疫情因素，香港当时有点不 open。但我们知道，从去年香港开始 Web3 的宣言，那么我们可以看到这1年一个非常巨大的变化。那从我的角度，我觉得这个变化虽然很大，但是我们其实还是可以更快速一点。对。
谢谢蔡总，我们展望了未来，然后我们想回到目前看看现在的一个现实情况。那您自己本人也是在中国大陆、在香港、在新加坡都工作和生活过很多年，您可能是对整个亚洲的环境都非常有话语权。那您觉得我们香港目前的科创环境到底怎么样？离我们想要去的 Web3 的一个全球化的中心还有哪些距离？我们应该做些什么
？OK， 我觉得整个香港非常好。就像刚才说的，就像他们港府说要提出 Web3 的中心，它基础真的是非常好。那这1年多我们也看到很多进步，但我觉得还是有不足的。首先我们可以看到那个在人才方面，我们知道香港今年批准了4万多个高才通，然后6万多个的优才。但我们看高才通，它针对的可以看到它是世界100强大学，中国内地只有12个大学可以，但是你要组成一个香港的这种创业氛围，你是需要更多的工程师，更多的技术人员。那么我们知道大陆有几百家大学，应该这些也要让他们有个渠道能引入到香港地方来。第二，我们可以看到香港说要批准，比如说稳定币啦，批准交易所啦，那从最高层我们可以看到政策非常的坚定。但是在执行层、中下层可能对 Web3 的不够了解，这个速度还是慢了。包括我们可以举个例子，比如今年2月份他宣布要投资移民，但是一些细节到现在其实也没有执行。那第三，我们可以看到香港除了金融科技非常发达，但是整个科技的发展，我们未来包括互联网、包括 AI。这些方面也要能够相应的带动起来，它才能撑起未来这个 Web3或者是香港的这种地位。对，我希望也能看到香港，它是包容无数的东西，对，不单单是在金融科技取得成就，甚至是会在其他方面成为一个中西结合的一个非常好的地方。对，
谢谢您。其实我也非常认同这点。我觉得 Web3不是一个凭空创造出来的一个赛道，它是跟很多其他的创新相辅相成的。所以香港可能更缺乏的就是说，在这样一个环境下，如何利用最好的机会，吸引最多的一个人才和资金到来香港。那我想最后问一个 bonus question，因为我知道您其实也是一直在推动这个3000万的这个投资移民的落地，可能在去年你就在大力的推动这件事情。那么现在我们也看到它要逐步落地了。那您觉得这个也是很多人期盼已久的。那您觉得这个随着这个投资移民的落地，这些资金它应该怎么样在香港发挥一个非常适合于香港发展的一个？
我个人的看法，对我们不知道这个细节出来会怎么样，但我是希望。我们知道以前香港的投资移民是允许买金融资产，不允许买房子，这是对的。但我希望这金融资产里面能够包括那个我们所谓的加密货币或者是区块链的这些东西。如果能这样，其实也能展示香港想要往 Web3、往区块链的方向去发展。对。
好，我们希望您说的这个能够成真。谢谢蔡总今天的时间，20分钟时间有限我们尽量的涵盖更多的话题，也希望您继续经常来到香港，然后呢为我们建言。
好，谢谢大家。
谢谢 Mr. Chairman, thank you very much. 谢谢 Cynthia. We have really got a star-studded panel coming up for you right now here on the stage. We saved some of the mega guns of the FinTech space, the Web3 space, and they are going to be coming up in just a moment. But there's something that all these people have in common and that their companies have in common. Right now, there's a little bit of a narrative going around that Web3, blockchain, crypto, metaverse, other technologies that are part of that integrated whole, that right now it is maybe going through a little bit of a downturn, that AI is sucking up all the oxygen. It's gathering up all the venture capital money and the best programmers. But one thing that people on this stage coming up all have in common is that they have seen the highs and the lows and higher highs and lows, and they keep their noses to the grindstone. They are not distracted by fads or trends, and they know how to keep their businesses alive, how to keep their businesses growing, and to become more and more dominant and become bigger companies. So we're very excited to hear from them because there is definitely going to be something to learn. The panel is going to be commanded by Annabelle Drewlers, the Bloomberg luminary and TV personality. I can't think of anybody better for such a high-level group that is going to be coming up here. On the panel, we are going to welcome Lennox Lai, who is the Group Chief Commercial Officer for OKX, returning to this stage. The OG of crypto storage, Pascal Gauthier, the CEO and Chairman of Ledger, again, has been in since the beginning. We are welcoming Evan Ao-Young, who is the Group President of Animoca, another enduring company. He is going to have a related company. His Homer's son is the managing partner at Animoca. Capital is going to be joining him, along with Sandy Peng, who is the co-founder at Scroll. So these are the big guns. Ladies and gentlemen, get ready to hear the way the future is really going to go from the people that are building it. Annabelle Drewlers, you've got your gang. Bring them on down.
All right. Thanks everyone for joining us here this afternoon. And this is wrapping up what's been a great two-day event. But as we just heard there in the intro, I think if you've been in the Web3 verse, you've been through the highs, the lows, and you've also had a vision and you've stuck with it with conviction for quite a while as well. So talking about unpacking Web3's potential, its possibilities, in sort of the short to medium term, I'll start with you, Sandy, and you guys can just go along, but what would you say is the biggest potential that you're excited about?
The biggest potential and the one that we're working towards is being able to truly build an international internet layer of value and to coordinate global transfer and coordinate collaboration in a time when trust is perhaps breaking down, and building trust using zero-knowledge proofs and mathematical setups, and also building a social consensus around it.
We're looking always at protocols and apps that are, all on the road, driving at different speeds, and some slow down, some speed up. Axie Infinity for a while captured attention on Web3 gaming. We're now talking about social media apps like FinTech. But what's happened in the last while that gets us really excited is really just great depth and breadth of global incumbents investing in blockchain. And so even as we're excited about 400,000 users on FinTech today, there's 400 million plus users of PayPal that are going to be able to use digital assets for payments in ways that they've never used before. And that kind of level of broad corporate adoption has us very excited about the prospects for Web3.
Okay, so maybe to answer your question, a few numbers. Because I think Web3 is at a very early stage, like probably earlier than what people realize. For me, Web3 is to interact with the protocol, right? Like when you use the web, you actually interact with the World Wide Web. And to interact with the protocol in Web3 means that you own your private keys. Like, your private keys are the way that you actually sign a transaction and move a token or a coin from sort of A to B. Ethereum right now is the most active blockchain, and Ethereum has more or less 107 million users. Out of the 107 million users, you have 100 million users that have less than $160, and only 7 million users that have more than $160. And so that tells you the story of like how early this still is. There aren't so many people, and on the people that are there's not so much value yet. And so interaction with the protocol is like this ability to have your private keys and use apps, dApps, services, etc. that are built on top of the protocol, but to interact directly. And right now the market, when we say crypto or cryptocurrencies, the market is a speculative market. Most users are actually on exchanges. And from the ledger standpoint, 6.5 million units of our devices that we've sold, 7 million users with more than $160. So we've done the job of convincing those users to use a ledger. But the market needs to grow significantly. And so many more apps, many more experiences need to be built on top of protocols for users to interact directly with them for Web3 to become something. So that's how we think about the world right now.
Yeah, I think I'm more exciting in the. I think you're right. The Web3 is probably still quite early stage at the moment. So what it takes right now, what we can see right now is the exciting part is mostly lies on what we call the Web 2.5. So the next step of, for example, we talk about tokenization of financial contract. I would call it Web 2.5, and also tokenization of, for example, money is actually a stable coin. So these kind of applications is gradually, gradually improving the effectiveness and the cost, and also the use case on whatever that we are building in Web 2 business. FinTech is one of the example. Stablecoin is one of the example. That with Web 3, we're adding Web 3 components within the existing Web 2 business, we're starting to see value. So I think the exciting part is how we evolve in that particular Web 2.5 area.
Yeah, I would agree that obviously the space is new, right? We call it Web 3 because we believe that there's a next iteration in this. But ultimately, right, in business and in even business school, we talk about being market driven, right? But what we're trying to do here, and given the panelists here are all innovators, we're trying to drive the market, which is completely different, right? It's a lot harder to do than say that, oh, let's analyze the market and see what fits the customer. We're literally trying to envision what's the next wave coming in, right? That's why the builders out there, that's how Pascal has built this company in Ledger, right? This is what we need, right? But we can totally see that there will be transformational aspects of blockchain and Web3, right? I mean, some of the high conviction things, obviously we're in gaming. We do believe that in the entertainment industry, that there will be wide adoption of digital property rights and digital assets, from music to gaming. That's one. I do believe, ultimately, we talk right now about our RWAs, right? I do believe that stable coins, CBDCs even, will absolutely transform payments. And you can see that maybe there will be some changes, maybe even to US dollar dominance, right, as a result of that adoption, right? You can totally see that, right? And another application is decentralized ID. And you can totally see that. Why would we still issue tickets based on a QR code? Why wouldn't we base it based on blockchain, right, where data on an anonymous basis is tracked, but you have vendors trying to go after you rather than your data being sold, right? It's talking about self-sovereign data, right? You can totally see how that application will completely transform our lives, right? So, it's about being able to see that a step ahead, and it's hard because you would take that ride up and down, and when you're early, there's not going to be necessarily the product market fit right away, but you gotta be a step ahead if you want to be a pioneer.
Then it comes down to that question of timelines and when you think things will actually be feasibly implemented, because as you said, maybe you don't always get the first mover advantage, but for instance, Homer, when you're making investments and you sort of look at more later stage companies, when do you realistically expect their technologies to be implemented when you're making those choices?
Yeah, I think there's always different speed of traffic on the road, but I think picking up a little bit on what Lennox mentioned about Web 2.5, what Pascal mentioned about this being a very early stage business. In the world of gaming, for instance, we definitely do see some kind of near-term Web 2.5 type situations. In other words, a more permissioned context where both the studio, the AAA game studio, can protect its IP a little bit better, but still offer gamers and users sort of a onboarding experience that's a little bit, it's straightforward like an Apple App Store, but also enjoy many of the benefits of digital asset ownership. That's one of the areas we really like. And as I mentioned earlier as well, in terms of underwriting the near-term opportunity, we really see this, like some of these infrastructure businesses that are levered to the big corporate incumbents coming into this space, like a Bank of New York Mellon taking its decades of institutional history as a custodian, moving into digital asset custody, like having the folks that kind of power that security stack that help them, we're really excited about in the near term as well. We see that has a lot of stability over the long term in terms of the big trucks on the road creating momentum in Web3.
Mm-hmm. So, Lennox, one thing that you've spoken about is real-world asset tokenization, and that's been something that maybe seems a little bit nearer term. What are the sorts of conversations that you're having around that?
Yeah, I think Web3 is technological terms. So real-world assets actually needs to have innovation and developments, not just on technologies, also on financial infrastructure and also regulation. So what I can see right now is a lot of components to develop real-world RWA, in particular asset class, is getting quite ready and getting more ready because a lot more clarity in regulatory in terms of these assets, and a lot more clarity in how you market, sell, minting, the process, and also the custody of such kind of assets. And also people are starting to recognize that if we somehow able to tokenize financial contract, there's actually actual benefits. I mentioned in the panel that we spend a lot of time in terms of trade cycle with different kind of financial contract, trade confirmation, execution, and spend a lot of time to verify the different kind of counterparty. But if we manage to embed smart contract within one single financial transaction, it actually saves a lot of time and also unlocking a lot of collateral and capital required for that particular OTC transactions.
I think one of the things I really noticed at the conference is just the presence of more traditional financial institutions here today, like Citibank or HSBC, Microsoft I saw as well. I'm interested, Sandy, in your business, how do you see that sort of cooperation between your sector and that more traditional one?
Yeah, so essentially what we're building is a fully open source, distributed, and decentralized software. And that doesn't typically jive super well with a Web2 organization or a TradFi organization. But where the two interjoins is when you have very robust and also transparent security setups where this is not the quiet plug is that we've been kind of testing our ZK EVM for about 15 months, and we've had multiple open source contributors contribute to it, and we've had over 100 contributions from various open source communities and multiple auditors auditing it. That kind of trust builds up to traditional institutions being slightly more brave enough to start venture into this on-chain world so that they can avoid the likes of, more centralized exchanges and, being open to human manipulation and being able to kind of participate in this fully on-chain world. And I think that is the beginning. I think we're right at the point where institutions are starting to be aware and educated enough about what is truly happening in the open source software universe, and being kind of steadily tipping its toes and trying out various experimentations. So yeah, I think we're just right at the beginning, and being secure and building that kind of trust is paramount to enabling that.
Pascal, I know you've got a view as well on what could be holding people back from embracing this sort of technology in terms of the user interface.
Yeah, you mean UX, UI, and
yeah,
I think like every early space. I mean, I started my career in the year 2000, and I remember when I started to use the internet, in '95 or something like that. It was very difficult to use the internet at the time. Now we don't remember because some people are too young to remember, or because our smartphones are doing such a great job at connecting to the internet. But at the time, you need to know how to code your computer, enter in the DOS, etc. Things I wouldn't know how to do anymore, actually. And so I think we're still in this phase in crypto. Everything is very difficult. To just connect to an app, you need to have a wallet, etc. And Ledger is part of that story. The products that we have are very good today, but they're still in the early stage. The screens are very small, so if you don't have good eyesight, like you cannot really use our product, etc. And you know, when I hear people in the industry talking about what we do, is still way too technical. We use terminologies that nobody understands. It doesn't relate to the experience and the product. You know, what does Web3 means? You know, or metaverse? Like, you know, most people debate about terminology and definition, etc. And for a larger audience that is not either technical or just doesn't care, it doesn't mean anything. So from a UX UI standpoint, like, we need to do much more and switch this this economy into a product and experience economy. Like, people will use crypto if it's a good product. You know, I can pay faster, and I've got cheaper fees, or like, if it's a product, people will adopt it. People don't use the internet because it's cool. People use the internet because you can actually do stuff that save you time and money. Think about what e-commerce was. E-commerce was saving you money, and that's why people went on the internet. Who would book a flight ticket outside of on an app now? Like, nobody's going to go to an agency, which is a travel agency, which is something I did when I was a younger man, and nobody will do that anymore. And so it's very similar here. If we don't create experiences on top of this protocol, then no one will use them. And so this is the challenge for the industry, to go from an engineer-led industry into a product and experience industry. It's a very difficult challenge. Of course, we will make it, but companies have to start thinking like that. What is the product? What is the experience? And go from there.
Evan, what do you think needs to happen to go from engineering to product-led?
Well, I mean, ultimately, right now, we're talking about user onboarding, right? So part of what we just talked about is about, what's Web 2.5. So, for instance, in gaming for us, it's about, so we do have Gamey, for example, as a portfolio company that actually originally already has millions of users, right? How do you get them slowly onboarded in their experience in a seamless way in terms of that hyper-casual, which is sort of what Web 2 and mobile games has brought us, right? How do you actually get that process to be seamless, right? So it used to be that you connect with your wallet, you deal with MetaMask and all that, but now we're going a little bit back to the customer journey and say that how can we sign up with, again, just email or Google, etc., right? So that journey needs to be very thought through, and ultimately it is about acquiring users. For us, we do envision a project that we're doing called Mochaverse. It's a way of allowing people to have a seamless way to actually create an ID, and then that becomes a self-sovereign ID that activates all our portfolio. So basically 400 portfolio companies and beyond, right? That's how we go from sort of our portfolio reach is about 700 million people to, to billions of people, right? So it's about that journey that we ultimately make it seamless, and that experience that we see, then you get the onboarding.
Sandy, what's your approach to onboarding? Because I think you're taking more of a grassroots-led approach.
Yeah, so the lucky thing about us is that we don't do the really heavy lift of Ledger or Animoca or OKX of onboarding end users. Our game is to onboard developers and onboard industry players such as these guys, so that when they onboard the users, we can provide a robust and hopefully helpful infrastructure for that. So the communication process to developers is a much more long-term and much more kind of like symbiotic onboarding process. It's about whether they can have a better chance of building their product and thriving on this particular infrastructure, and there are different aspects of the ZK EVM layer 2 systems that are required. Sometimes it's pure scalability, sometimes it's about security levels, sometimes it's about decentralization. There are various verticals, and the challenge on us is to kind of gather everybody's requirements and figure out a timeline and a technical roadmap, and trying to engage as many people as possible, building from the ground up.
Mm-hmm. Lennox, OKX is present in quite a few markets. How much do you think that regulators are working with the industry to achieve this sort of vision?
To achieve?
This Web3 vision.
Vision. Or I think multiple regulators take different kind of approaches. But I think most of the regulator right now is, I think, put a lot of focus, attention in relation to whoever have the capability to manage client access. I think they want to regulate the heavy lifting part. So they're trying to replicate, learn from the financial related regulation. That's whoever manage client access, and they focus on this first. I think going forward, we will see more regulation, but I think more regulation as in, because they're starting to understand the industry more, they were starting to expand their regulatory footprint to other business nature or within Web3. But that is good because for all kind of Web3 operator or startup, that you need clarity and regulation in order to put your investment in. And right now, we're becoming product-led innovation, product-led industry. So if you manage to build a product, you need to face customer. If you face customer, you're offering something. That somehow you need regulatory clarity.
Yeah, I just want to make a comment on regulations. I mean, it is really important to have thoughtful regulations, right? So for an industry to thrive, the rules of the game has to be extremely clear, right? So it is really great at FinTech Week to see how the Hong Kong government has committed to actually not only developing the space here, but to really thoughtfully regulate, right? Ultimately, when we first started in the space, people were saying that we actually don't want to be regulated. It's actually not true. We want the space to be very clearly defined and sort of what is a security token, what is a utility token, et cetera, so that we know how to build ultimately, right? And you need credible domiciles, right? So Hong Kong is a very credible domicile, given that it's a common law system, it's international. It is a financial center. So you see Singapore coming in, you see Hong Kong having that rivalry. In a way, it's extremely good for industry development, right? I do believe ultimately that US will figure it out to facilitate the development of industry, because there's still a lot of innovation over there, right? But right now, what you really need is for the rules to be very clear.
Okay, we've got 30 seconds left. Just want to ask one final question from each of you. If we're at Web 2.5 now, the journey to Web 3, if you could put a year on it, when would you say that would be it? That's everyone. If getting from 2.5 to Web 3, how long will it take if you were to put a number of years on it?
Well, I can go. I mean,
Yeah,
it's going to take longer than what people think, Businesses take a long time. Everything takes a long time to be built. You go from 100 million users today. If you want to have 8 billion users, it will take 10 years, 15 years. And also me, I'm biased. Like I look at it from the hardware perspective, and hardware is not software. I think this industry will need like a new set of hardware to actually function properly. Phones, computers, they're not designed to do this. And so hardware, hardware programs take 3, 5, 10 years. If you think about chips that can be secure, et cetera, all these have very long development cycles. So 10 years is the mark.
It's, by the way, it's an exponential curve, right? So if you actually track there's a Morgan Stanley analysis, a chart out there that says that actually the Web 1 adoption curve actually is exactly matching with the Web 3 adoption curve. Right now we're in the hundreds of millions, right? So if that follows, right, by the time it's going to be 5 billion internet users or 5 billion Web 3 users, it'll be probably another 10 years or so.
10 years, okay. Anyone out of consensus on that?
I sort of, Andrew mentioned AI at the beginning before we came on stage. I mean, we all got our attention captured by ChatGPT exactly a year ago. NVIDIA's stock went up. But the reality is AI was working in the background for 10 years plus, making our phones smarter, our cars smarter, our e-commerce shopping carts smarter. The same thing is happening in blockchain today. We think actually we'll be surprised by a Pokemon Go event or what BTC, Bitcoin ETF does to the marketplace. And so I think there'll be different cars on the road at different speeds. So fully Web3 is, it depends on the vertical, I suppose. But one last thing I would say also is that what Hong Kong has done on the regulatory front is going to be really helpful for real-world asset tokenization, because the legal stack is actually quite a bit more difficult than the technical stack. And that's, I think, another area where I think Hong Kong is going to give a real leg up to that particular vertical globally.
All right, Homer, we'll have to leave it there. Thanks everyone for your time. Sandy, Homer, Pascal, Lennox, and Evan. And happy Friday afternoon to everyone.
Thank you, Annabelle.
Sorry.
Get that good-looking group together for a photo. The photographer, I think, really wants to capture this VIP gang. Here we go. And let's put them together. Ladies and gentlemen, stay tuned. We have one more panel coming up that is on a topic that I have not seen discussed anywhere else in this conference, but it is a mind-blowing one that will give you something to talk about over cocktails shortly thereafter. There we go. It's our very VIP panel. Thank you so much. Annabelle, you did a splendid job. Splendid. Very good. Okay, no time for just one more. Off with you. On with the next. Pascal, absolument super. Merci. Sandy, thank you so much. All right, Animoca Capital, Lennox. All right, keep an eye out for McLaren and the OKX logo. I promised you a topic that I have not seen discussed anywhere else all week at Hong Kong FinTech Week to close us out today, and here it comes. Open software has delivered platforms that are stable, effective, and cheap for people to use. And the question now is, can we do the same with open finance? Can we harness the power of inclusion, of competition, and openness to create financial platforms that are cheap, effective for the people? And we are going to find out about that now. We are going to start with a discussion that is going to be led by Hakan Eroglu. He is an advisor specifically on open finance, digital currencies, and payments to the BIS Innovation Hub, who have been doing so much to enrich our conference for the past 2 days. Joining him is Esther Mai. She is the Managing Director and Head of Digital Banking, Consumer Experience and Analytics with Standard Chartered Bank, big supporters of Hong Kong FinTech Week. Our only central banker on the panel comes to us from the Saudi Central Bank. He is Khaled Albiosas, where he is the Director of Financial Sector Development. And rounding out this panel, we have a hometown hero, Chung-Chi Wai. He is a FinTech Director of Commercial Data Interchange, and again from the HKMA. Ladies and gentlemen, this is Hakan's paddle, and I'm going to turn the stage over to him and the rest of the gang. Hakan, let's do this. Yeah. All right. Sure.
So hello everyone, and good to see so many people coming at the last panel today. I'm really glad to have you here on our topic on open finance and the power of open finance frameworks. So open finance is the next evolution after open banking. So what it means actually is to broaden the scope of asset class and products beyond payments and banking. It includes insurance, pensions, mortgages, and lending, and more products. So it's broadening the scopes into data and what you can do with that and building new use cases. So how do we get there? We are talking about frameworks today. So they can be regulated, they can be industry-driven frameworks, there can be hybrid models as well. We are also talking about infrastructure. Is infrastructure centralized or decentralized? So all these questions that are really relevant to form an open finance, an inclusive open finance framework to also increase competition in the market. So very happy to have this esteemed panel here from regulator side, but also from the industry. And let me really start with the first question. I think starting with Your Excellency, Khalid, on the SAMA open banking framework. So the Kingdom of Saudi Arabia decided to implement the open banking framework. So what are your considerations and objectives for such a framework, and how do you achieve those objectives?
Thank you, Hakan, and I would like to thank Hong Kong FinTech Week for their hospitality today and the invitation. We started our journey in Saudi Central Bank in 2019 when we embarked on open banking, who owns the data, and what other activities that fintechs and banks and financial institutions can do with the open banking. So we started in 2019. We came up last year with our open banking framework for account information. And this year we'll come up with the second framework for payment information. So that's where we started. We opened up our sandbox, regulatory sandbox, also last year for fintechs to come and operate. So we have different fintechs doing personal finance management, doing enterprise finance management, infrastructure, alternative credit, really a very progressive and different use cases each and every single fintech is doing, as well as banks. Banks also have leveraged on this framework, and they created their own open banking teams, departments, trying to leverage and monetize and utilize the framework. And the framework is really not just about standards. So we have an API standards where how data is being exchanged between the market participants when it comes to open banking, but also about standardization of a consent management, the privacy, the cybersecurity, the entire controls really end to end. And it's regulatory driven. So all market participants have to comply before the end of this year, where they participate in that, whether it's banks or fintechs or digital banks and payments as well, wallets. So that's really how we see open banking. It's really an opportunity to innovate, create new use cases, leverage on our central bank framework, standardized, regulatory driven, and we've seen really a tremendous amount of market participants, different use cases, and in the payment space, hopefully by the end of this year, we'll have the framework, and we're expecting some use cases when it comes to payment information by early next year, and that also will add to the payment infrastructures we have in place in Saudi Arabia, whether it's a card rail or it's an RTGS payment rails. Thank you.
Yeah, thank you very much. Before I move on to Esther, just quickly, is it a centralized or decentralized approach in Saudi Arabia, and give some background why?
Sure. So I think some countries have adopted a centralized approach where they build the APIs and the interfaces in a single entity, legal entity that exchange data between the market participants. We have decided to make it decentralized, where players exchange data between themselves without a central entity in between. And our thinking was more of innovations. If you standardize it and you introduce another player, it will probably reduce the innovations and the ability to exchange new premium APIs, new type of use cases. So we decided that the market participants will exchange data between each other. At least they can apply for the standard API framework, but they're also open for additional use cases that's really outside of the framework.
Yeah. Thank you. Thank you so much. It was very useful, and to get a perspective of a central bank looking after building such a framework. And now we have Esther from Standard Chartered, a global bank present in multiple countries, also with experience in implementing open banking, be it in regulated markets, but also in markets where you build it voluntarily to build some kind of collaboration. So what is your perspective on open banking in terms of how do you leverage that? What is your perspective on it? Do you think a regulated approach is the right one, or is it a market-driven, or something in between? Really want to hear your opinion on that.
I think for when it comes to open API, actually it means sharing data in some sense, and I think as we can imagine, for the bigger players, they may be more reserved because they host the vast majority of the data, and they see it as like, if I share the data, how much else can I get it from the other players, right? So if you ask, for our experience, it's more like a hybrid model. Especially we have, two representatives, from central banks, with us today. I think the regulator or the central bank, play a role in terms of putting standards, as what we have talked about, and also, to give the industry some positive push, because I think that especially to begin with. To make the idea of open API viable, in the industry, it's important, that the central bank or the regulator takes a leading role, in terms of establishing the standards, giving some positive push to the industry, so that then people can start to participate. Once they participate, then there will be a use case or business case, that come up, and then eventually, I would expect that when it becomes more mature, then the intervention can be less. Right? So then, because the major players, they can think of ways to broaden the scope or the horizon of the entire landscape.
Yeah, but what do you see in terms of, you say, once they participate, what does it take so that they participate?
Okay. That's then we can write on the experience of, in particular for Hong Kong, and then maybe I speak first, and then I'll let you supplement that too. It's like the Hong Kong Monitoring Authority has also issued guidelines in terms of the framework and standards and roadmap to foster open API or open banking, among the banking industry. In that sense, the key players in Hong Kong will then need to participate. There are standards, there are guidelines, and also there is a roadmap. When we need to contribute the data, when we need to share. And I think it's a fair playing ground as well, because you can only be consuming the data when you provide the data. So in that sense, I would see that as a healthy kind of push. If I use my own term, it's a positive push, so that then when the data is here, then the participants, then they can choose which use case they can apply to absorb or to consume those data.
Yeah, thank you very much, Esther. And you talked about the open API framework of the HKMA. I really recall many years back when I was with the private sector in consulting, I was also dealing with the HKMA open API framework. And then it was at the very beginning with defining the phases. Now, after the years, right, that we went through open API, also in Hong Kong with HKMA, which is more like a public-private hybrid model, so to say, right? And maybe for GY, to understand how has Hong Kong embraced this open API framework, and what do you see in terms of what are the right use cases to actually, as a next phase, to make open API, let's say, the adoption higher, let's say?
Yeah, sure. First of all, thanks for having me here. And I just want to echo Esther's question first of all. Don't worry, I'm not from the supervision side. I'm more from the market development or the data development side. So I think we are all fine with the conversation here. So in terms of how Hong Kong MA stands on embracing open data, it's definitely we are more than welcome to encourage banks to open data. And it can be depicted by a major initiative, as you mentioned, Open API, that was launched in 2018 in a phased approach. So right now we are also working on one of the phase on interbank account data sharing as well, which is supposed to have a pilot next year. So another initiative actually I want to draw everyone's attention on is the commercial data interchange that we have launched since last year. In 2022, we finished the pilot a year ago, which is 2021, and we find some solid use cases on commercial data interchange. I understand this is the last session today, but if you give me 1 minute, I can quickly introduce CDI before we go to a happy hour after that. So CDI basically it's to enable banks to have access to multiple data sources to get commercial data for different use cases. So the infrastructure CDI aims to provide some kind of functions for consent management, for data requests. Most importantly is to allow banks to have a single connection to CDI, which will enable them to access to all data providers that are connected to CDI. So we hope to co-create a data ecosystem together with banks by leveraging a role from the central bank to make this infrastructure. So from these two initiatives, I think I hope this has shown clearly about HKMA stance on embracing the use of open data.
Thank you very much for this. Do you see, so what is the incentive model of the CDI? Can you just elaborate a little bit more? And maybe is there also an angle for, let's say, cross-border collaboration as well? Because especially when it comes to trade finance, I think that's an area that we have realized is widely neglected as well in terms of sharing such information to improve that kind of access to financial services, especially for SMEs from the perspective of financial inclusion. Any perspectives on this?
Yes, definitely. I can give you an example how we are trying to drive financial inclusion. So basically, before we have CDI or before we encourage the use of data, we did some survey to understand the landscape of like SME financing for corporate. Should they want to expand their business? They may want to apply a SME loan from a bank. But that particularly could end up in like being asked for some collaterals or use a lot of like paper document to support the loan, which could be number one, time consuming, and number two is basically the business may not really have a collateral like a property. 磚頭 is usually one of the collateral that is commonly used over the 10 or 20 years because of the booming market of Hong Kong property market. So the thing is, we see these issues and we want to really rely on something else to judge the legitimacy or the operation of a business. So we try to ask the industry what can be done to have a better judgment for a business, how well it is running. So we get into an idea to have CDI connecting, for example, some sales data, payment data, and a lot of like other operating data that can prove a business is running well or not in that sense. So traditionally, some business, they may not be able to get a financing using the traditional way. They can be included right now using this new data-based, a new data infrastructure, CDI, to get what they need to expand their business or to do whatever they want to achieve a better business prospect.
All right, thank you very much for this perspective for the corporates or the SME side. Probably just quickly also for you, Your Excellency, on Sama's approach again. So do you see the role of open banking as well to create a level playing field in the industry, let's say in the space of the payments business or the payments industry? So how do you see that all that comes together? Because we see similar developments in other jurisdictions, in Brazil, for example, where you have the open finance or the open finance regulation with the PICs. Then you have UPI in India. You have multiple initiatives where really real-time payments rails are coming together with open banking. What is your perspective on that one?
Yeah, thank you. I think open banking will really create an additional use cases, whether it's in payments or in account information. So just at the same point my colleague here mentioned, when it comes to small and medium business financing, it's very difficult for these segments to tap into the credit market from traditional financial institutions because they typically look at your audited financials and certain data which many of these businesses really do not and cannot produce in their early stage years. So we've seen the tendency where you can look at their open banking data, look at their payment behavior, average balances, create really an additional credit information that will help lender even improve their credit profile when they look at these small and medium players, rather than just looking at the standalone financial statements or some credit bureau scores. So that's really has helped. On the payment, also, Saudi is quite advanced when it comes to payment. We have our own schema, we have our own RTGS, we have our own instant payments. But open banking does play a role where it creates really additional use cases where you can proactively debit an account, you can do this reoccurring payments over open banking platform. You can even create an additional payment types that uses open banking. As you rightly mentioned, if you look at India and UPI, it's based and built on an open banking framework where you can use even QR codes and an additional payment types to enhance the existing payment infrastructure and introduce new payment types. And that also helps when it comes to financial inclusions, whether if you're retail or you're an individual or you're an enterprise, you can tap into this, as I said, innovative new use cases on payment and account information.
Thank you so much for this. Conscious of time, we have 1.5 minutes left. Just a quick round, I think 30 minutes each. So the classic question, where do you see open finance in 3 years? I mean, we don't know what's happening in 3 years, but probably your feeling in terms of, there are multiple trends, be it AI, be it of course in the blockchain space, DeFi. Maybe things are changing in 3, 4 to 5 years. But do you see still open finance being relevant? And do you see what type of key trends you see in this space actually?
I would think that so put aside those new futuristic technology.
Exactly,
I think
about 3 years.
I think overall, open banking will be crucial, for the entire financial industry. I would say as a whole. Our theme is on open finance. As a bank, we talk about open banking. But then what I see in 3 years is like it's not bank, to share information among themselves, but then across, the financial institutions like banks, insurance companies, and even payment companies, even fintechs, will be able to create a more healthy ecosystem to explore, and as a whole, the whole industry can then explore new ways how we underwrite, how we access the customers.
Thank you so much. GY?
Yeah, I agree with Esther. I think data is not lacking in Hong Kong, but it's just about how we can get them together and how we can make use cases based on the data. Some banks may be able to develop its own data analytic, while some may rely on some third-party solution provider to drill down further with the data provided. But I guess the future is on the use of data, and that's why we are creating a data ecosystem.
Excellent.
I notice we run out of time, but
but please, but we can still wrap up.
So I think financial sector has always been in an advanced stage when it comes to technology, and they're first to adopt data probabilities and accessible to data. And I think other sectors will probably follow in healthcare, in insurance, in asset management, and other classes where it really becomes an open data rather than open finance, where you can access your data, whether it's stored anywhere, and allow third party to access that data, create useful information for individuals and corporates.
Perfect, thank you very much. Yeah, so Your Excellency, GY, Esther, thank you very much for your time.
Thank you.
And thank you all to joining this panel, the last one of the Hong Kong FinTech Week. Wish you all the best and see you next time. Thanks.
Hakan, an absolutely marvelous job. Well done. Thank you to Hakan, Esther, Tong, Chi, Y, and Khaled. Well done, you guys. Absolutely marvelous. Thank you very much. Your duty is done. You've earned a drink. Look forward to seeing you in a bar in Wan Chai, which, doesn't need to be as bad as it sounds. Would you like to do a picture while I wrap up? Please do. Ladies and gentlemen, I'd like to thank all of you for coming here for the past 2 days. I know that you are going to take what you have learned. You are going to go forth and continue working to create a financial system that is more inclusive, more robust, more honest and fair, so people around the world can benefit from it. This is what you are going to do. I would like to thank the people at Invest Hong Kong and W Hub for inviting me to come and giving me the opportunity to be your MC for the past 2 days. I'd like to thank all the people who dress in black and who are backstage, Christy and Tim and Shung and Enos and the rest of the team. Thank you very much, everybody who made me look good, whether they're up there or back here. They are working hard to make everything work for you. Ladies and gentlemen, this has been Hong Kong FinTech Week 2023. I'm Andrew Work. See you over a drink. Good night. Thank you.